All right. Good morning. Happy Tuesday, happy afternoon, happy evening. I hope you're doing great wherever in this world you are. My name is Greg Lewis. I'm the marketing manager for Metastock, and I'm going to turn off this mic, this other one, so my coworkers can't hear me. Okay. Hey, thanks for joining us today. Today is day 2 of our mammoth 6-day Traders Conference event. Let's show you a little bit of what's going on today. Let's see, today's Tuesday. So our first speaker is the very renowned Rahul Mohindar. You'll know him from the RMO. Next, we have Wendy Kirkland. And then, let's see, Alice Cole and Tyler Wood. Steve Primo, always a great presenter. Silas Peters. And Anka Metcalf. Sorry, it's kind of hard to control this website in this particular app for some reason, and more. David, okay. So there's a lot of presenters. If you want to see this yourself, not watch me struggle through it, you can go to metastock.com and click on that banner on the top, and you'll go right to today's schedule. Or if you're on an email list, you've already received it this morning, and you can see it there. Anyway, if you haven't yet registered for this event, I highly recommend that you do so, because Jeff told me he has lots of door prizes to give away today, and in order to be eligible for those, you must register. So go to metastock.com, click on the banner at the top. Also, I'll put the link in here in YouTube, so you can register right now. I see that Al Fredriksson is here from Sweden. Hello, sir. I'm sorry if I mispronounced your name. Kelly is here. We got a bunch of people in here, but you're not saying hello. Go ahead and say hello. Let us know how you're doing. Let us know where you're from. Be very chatty. We like it when we have a lot of interaction with our speakers. They do enjoy it. And even if they don't get your comments, your questions right away, they will eventually go to them via Jeff, who is hosting our event today. I'm coming at you from deep South Texas. And Jeff will be coming at you from Salt Lake City. And Rahul probably is going to be coming from India or Saudi Arabia. I never know where Rahul is. He's something of a world traveler. So I'm going to go ahead and let you listen to a little video about Metastock, and so you can find out a little bit more about us. And we'll be back in about 4 minutes.
Hi there. Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. and Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right, thanks for watching that. It appears that our speakers are there and ready to roll, so in about 54 seconds we should get started. One last thing before we get started, please do hit like and subscribe and hit that bell. It helps us a lot, and when you hit the bell, it tells you, it doesn't tell you, it notifies you every week when we have live events. We usually have live events a couple of times a week. So remember, please do be interactive, ask questions, say hello. As you're coming on, let us know who you are, where you're from. Hello to Louise, and hello to you, and hello to Kelly. All right, for the next 15 seconds, let's listen to some jazzy music.
Hey, Greg, I didn't hear you come in. Are we started? Are we ready to go? I can now. Yeah. I heard a jumbled something or other. Smile, wave, drink coffee. Good morning. All right. Thanks, Greg. All right, cool. Jeff Kibbe here. I'm going to go ahead and kick us off. I want to say thank you for coming for day 2 of the conference. It's good to see you. If you're watching us on YouTube, welcome. Make sure to like and subscribe. Helps a great deal. If you have questions, let us know. We've got the chats open. Joseph, you should be able to hear us. Neil, and the other Neil, you should be able to hear us. Ganesh, you should be able to hear us. Good morning, Kelly. Good morning, Lewis. Good morning. Say hi. Say hi on your way in. It's good to see you. Let me go ahead and read our legal disclaimer. I need to get that out of the way, and then we will kick off. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Good morning, Steve. Thanks for saying hi. Good morning, Kelly. John, good morning. All right. Before I drink some more coffee, I want to say thank you to our sponsors today. Stocks and Commodities Magazine, great magazine, partners with the Traders Conferences and the Traders Summit since we've been doing them, which is I think 11 or 12 years now. Great partners. We love them. If CMT Association is a managing money. If you're looking to manage money, if you want three cool digits, three cool initials at the end of your name, CMT, you can reach out to the CMT. They do a really good job of accreditation. You can find out more about them at cmtassociation.org or 646-652-3300 if you want to talk to somebody. And we appreciate their support. And last but not least, AAII. AAII has been a sponsor. This is their second conference that they've sponsored. We've been working with them since May. We developed a really cool system with their head of active investing that we talked a little bit about yesterday, Raymond Merriman. And his product's really, really cool. AAII themselves have been doing a nonprofit work since 1978. They do market analysis, sentiment surveys, portfolio analysis, have a lot of lessons. Membership for them is very, very cheap, and you can find out more about AAII at aai.com. So there you go. Those are the sponsors. We want to thank everybody for participating. We are Metastock, the first people that are hosting the event. This is Metastock. We're going to be kind of talking about Metastock, a lot of the charts. Most of the charts are going to be in Metastock. If you haven't heard about us, I'm not going to go into a lot of detail right now. As we go through the day, I will. But we've been won the Reader's Choice Award by Stocks and Commodities 30 years in a row. You can use it to scan markets, test trading ideas, get real-time commentary, alerts, signal. Great package. Pricing on it starts at just $59 a month. You can find out more about it at metastock.com/conf-promo. You can give us a call anytime you want to today. We've got people that will be happy to talk to you about Metastock or anything that we're talking about today. 800-882-3040. So let's get started. Rahul actually started working with Metastock at about the same time I started working. I think it was probably 27 years now. He's a dealer of Metastock in India, one of our most successful dealers over the years. He trains people how to trade in India. He's been on CNBC, CNN. His system, I talked a little bit about it yesterday, the RMO method, is actually the first method I actually risked my own money with. And the first trade I took was an RMO system. So I love the work of Rahul. It's going to be awesome to have him on here, and we certainly appreciate it. So Rahul, come on in here. Let's go ahead and get you started. Good morning, Richard. Good morning, John. Good morning, Stephen, as we get Rahul started. Oh, let me go ahead and unmute your microphone here, Rahul. How are you doing this morning?
Good morning, Jeff. I'm doing great. Well, it's actually evening for me, but I'm always bright and alive for any Metastock session.
Well, we love having you too. I just changed the presentation over to you, and I can see it already. So you're on top of your game too. So let me go ahead and get out of the way. It's your turn. Thanks for joining us, Rahul. It's your turn. Go.
Thank you, Jeff. Thanks. Well, folks, good morning, good evening. I know you're joining in from various parts of the world. I appreciate your taking out this time. And I think what's very important is that you have taken this first step of trying to educate yourself, trying to get knowledgeable with the program, trying to understand methodologies that can help you trade better. So I think the first pat on the back goes to you for coming forward and trying to get better. And I can tell you, trading and learning is a never ending process. It's a continuous process. You keep learning, you keep trading better. And I think that's the way we've got to have the spirit, with the technology that we have, because the technology keeps upping the game. We have more features, newer versions, a lot of stuff keeps coming out. But I think what remains is, do we have the semblance? Do we have the balance to put all this knowledge into a simple rule-based model that could help us trade better and make money? Does it make our life simple is really the question. Or is this really complicating us? And when I say this, I mean there's a plethora of systems. In fact, I keep joking with Scott, Kelly, and Jeff that the indicator quick list in Metastocks shows you hundreds of indicators. But if I had to open an indicator quick list, I'd probably just have 7 or 8. And yes, you can customize it. It just helps me stay grounded and focused. Now, it's a bit like saying you don't need to eat everything on that menu. You probably have already decided after experiencing what are those 5 to 10 indicators which could work for you, and try and work with those and become a specialist, become highly focused, look at the practicals of trading the system. And I think that's where I come in from. I speak to you today as a trader to a trader, as an investor to an investor. I'm not someone who's into, trying to earn brokerage income or trying to give advisory newsletters. What I do is I trade with my money. And I think I'm sharing with you methods that I like to work with. And, I look at the US markets, I look at the Indian markets, I look at Australian markets, so various markets that I've had experiences in. But, I can tell you, it doesn't really matter which market you trade in. What matters is, do you know the direction, and do you have a plan, a risk plan, that if things go awry, what's your risk? Of course, there's always a plan for the reward. But I think the biggest mistake is when we set foot on a trade, we need to plan the risk. So I'd also like to start by thanking the Metastock team. And I keep, I watched this program grow with me, as he said, almost 3 decades now. And I can vouch for saying that Metastock is not one of those companies or those products which is just there to make a one-time sale. And I think the best part about Metastock is they come to you with the education, whether it's webinars, seminars, master classes, various events. So I think hats off to the fact that they're highly committed to us as traders. And I think that's what counts. There are a lot of people who are just committed to you till they get your sign up. But I think what you see is every month, every few weeks, there's always some education that you can really benefit from. And I think that's something which deserves more than any award. So yes, it's a 30-year stocks and commodities award, but I can vouch for you for practically that where Metastock really takes the show is the commitment to you and me as end users, the commitment to us in our trading. So again, a big thank you to the entire team for being so passionate and so on top of the education surrounding the program. So without further ado, Metastock with the RMO ATM 3.0. I know a lot of you know me as RMO. RMO stands for the Rahul Mohindar oscillator if you're absolutely new to it. But I think I'd like to divide my trading and investing philosophy into 3 cores. The first thing is, whenever I look at technical analysis, I want to look at studies and strategies which help me gauge the trend. In other words, decide, is the trend bullish or bearish? And when I say trend, it's a bit more holistic. It's not just the broad trend or the primary trend. I need to understand the short term, the medium term, and the long term. The 3 types of trends. Because you may be looking at, the next 5 bars going down could be a small minor correction within a very big up move. But there could be a user who says, I'm a really long-term investor and I don't care about the 3 or 5 day drop. So that's where we need to understand, and I'm going to try and talk about it and how my indicators can help you do that detection, short term, medium term, or long term, is what you want to understand in terms of trend. And I think that's what's going to help us take the trade. Detecting the trend correctly will help me take the right trade. And I think when I take the right trade, I need to confirm it with momentum. When I say momentum, I mean, indicators which can help me reconfirm that there is a price momentum that's stepped in, and I should learn how to manage my trade from there. So we talk about stops initially, but then we talk about trailing stops when you make profit. So trade management is all about after taking the trade. So once you've detected the trend, you take that trade, you confirm it with the next stage at momentum. You got to build it up with looking at how you manage that trade well. In other words, how you trail the stop, how you exit that trade. That's very important. And I think the third pillar, which I use at every stage, be it entry, be it exit, be it trade management, is volume. So volume comes in at various stages for me, because volume is one of those key pointers which tell us whether the trend is really confirmed with money. I say volume is equal to money. Many people say volume is the number of shares traded, but I would like to simplify. Volume is equal to evidence of money chasing the stock or symbol that you're trading. So whether you trade stocks, futures, options, I do all of them. One of the very important factors we need to pay attention to is volume. So we've got a lot of indicators which are price driven, but here, when I'm going to show you some indicators, today I'll talk about one specifically, which is the strength weakness indicator, which judges the trend just alone on volume, on how volume moves. So volume is a very important factor because it helps us detect reversals and breakouts, and it also helps us confirm setup. Most people give volume a secondary role where they say, okay, volume confirms a trend. But I try and say, look, volume has its own place, its own vertical. You can actually trade just based off signals and volume. So let's dive in and understand first the trend element, and then we will move further into momentum and volume. So if I look at the trend element, the first thing that comes to mind is, how do I detect the trend? Now, there are a lot of ways people do it. I'm going to use the RMO to simplify. Here, what you see is on top of the RSI, some people look at the relative strength of a stock. In other words, the relative strength index is a very popular tool. Right at the bottom, I've got the MACD here. And what drove me nuts initially when I started doing technicals was often you'd get an MACD sell and very quickly you'd get a buy after that. So you see the two circles, you actually got a sell, then a buy, then a sell again. And that was not really very valid because the market was truly in an uptrend and I was keeping on getting disoriented with signals from the MACD. So I think I needed something which was a smoother. So the RMO was actually designed just for my own trading. And of course, there's a huge story how it came about being in Metastock, but very quickly it was spotted by Scott Brown and he said he's got to give it to the users, and that's how we got it into Metastock. So the RMO is inbuilt inside Metastock, and you can use it at no additional fee. You all have a template called the RMO trade model. So what I'm showing you is part of that. I don't use the RSI because, again, the RSI says negative divergence. For example, price makes a new high. I've drawn the negative divergence. And what tends to happen is you keep having newer highs on the price and you keep saying the RSI is diverging. So I think the big debate is we need to find where this divergence ends. But what everybody's identifying is, oh, there's divergence, and we're getting scared at each stage. So all I did was I took out where there were gray areas and I got to a more rule-based approach. So if my RMO, which is this green histogram, is above the value of 0, we're in a primary bull trend. If it's below a value of 0, the primary trend of that stock is bearish. So what we need to understand is the RMO being above 0 is strength in the primary or long-term trend. And if the RMO is below 0, that is weakness. So we're looking at a bearish market if it's below 0. And here again, we're discussing the long-term trend because above all, that's what matters in the big picture. So we talked about 3 types of trends: short-term, medium-term, and long-term. So to do this job of detecting short-term, medium-term, and long-term, there are 3 elements. There are bar colors that you see on this chart. There are arrows that you see on this chart. And then there's the RMO, which is that histogram, which is represented on the x-axis. So if you look down, there's a ribbon which says RMO bearish or RMO bullish. So what is the arrow? The arrow is a short-term signal. So first comes the arrow usually, then comes the bar color, which is the medium-term signal. So you got the arrow, which is short-term signals which come first. Later on, the blue bar comes saying the medium terms turned positive. And as you move, look down at the ribbon from bearish to bullish. That's a point. This is a point where you say all three are in sync. There's a synchronization of the price having the arrow, the color, and the RMO as bullish, right? So this is what I'd call a first breakout over here. This, my friends, over here is the second breakout, or what we call the add-on breakout. So in other words, this is not really the first one. The first signal is obviously the most potential and obviously the first, as the name suggests. Why is this an add-on? Because within the uptrend, you got another opportunity to buy. Again, stay with those rules. You got the arrow, which is depicting the short term, the blue bar colors, which depicts the medium term, which has already been positive, and the RMO, of course, is already positive. So here you can see that I've got a add-on signal. So keep the rules simple. Similarly, if I'm going to sell short, I would be looking at a red arrow, that's the short-term signal. I'd look at a red colored bar, that's the medium-term signal. And why is my vertical line here? Because that's the point where the RMO went from a positive to a negative, which is also depicted down on that axis over there. So when you look at the x-axis, you can see that shift from a RMO bullish green ribbon into that red. So when you see all three happening, that's a first sell breakout. So that's where the market turned bearish. Subsequently, notice over here, you got an arrow, you got a blue bar, but we couldn't take off. Why did? Because the RMO didn't go above zero. So the idea or the theme of my entire trading is let's trade into the direction of the long-term trend. You know, it's a bit like saying, let's not fight the tide. If the long-term is bearish, let's trade all the sells. Let's not try and find the bottom. So my philosophy is we need to focus on the bigger picture. We need to focus on that long-term trend. And when we have that focus, naturally the odds are going to turn in our favor because you're not fighting the tide. Right. So with every arrow, now these are add-on signals. Now I could put another arrow here that would also be valid. I could put another arrow here. That's another sell, but they all come into the category of what we call secondary or add-on breakouts. The primary or the first breakout is really the first time when the RMO from bullish goes to bearish, and you have that combination of three. So I call that the three-dimensional sell, a 3D buy or a 3D sell, right? Now the beauty is, I always get this question, this looks great, you know, how does it work? We'll open up charts. I mean, if I just showed you even the index, which is a representative of the entire market, really, you'd see it's phenomenal. You'd see that the performance is, you know, absolutely splendid. It keeps you on the right side of the trend, and I think that's what counts. But above all, how do you scan for these opportunities? If you like using the inbuilt Metastock Explorer, that's one way you could scan it. And if you prefer, we also have a separate application called the Power Screener if you use the ATM, which helps you detect these opportunities. So if you're wondering, how will I find these opportunities? For example, I want a signal only where the first breakout is there. Some of you may say, no, I want every single breakout. So, you know, these are further levels of scanning that we'd get to. Now let's look at where it gets a little tricky. Now, if you look over here, there are various red arrows that come, red bars and red arrows which come, but the RMO is bullish. So what I'm trying to suggest is every time you get a red bar, right? Every time you get a red bar and the RMO is bullish, let's actually get ready as to where can this market rotate back up. Your interest should be in the buy side, not on the sell side. Right? Because for the sell side to get validated, you need this RMO to come all the way down to zero. Try and watch where will that RMO curl up again. Where will this market curl up again? So that's what I'm trying to look at. This, of course, my friends, is the first breakout because that from a bearish zone went into a bullish zone. Now, one of the rules I always mention is buy above the high of that bar. For example, if that's the bar, don't just buy market. Say I'm going to buy above the high of the bar. That's very important because if it doesn't clear the high, I'd say the signal is not really confirmed. For example, let's look at this one here. You got a blue bar and a blue arrow. Now, this is where wishful thinking comes in. Some people would say, okay, let's just buy it above the high. The RMO will turn a little later. To their defense, they feel that it might turn later. And you can see what happens. It takes that all out, but just tumbles down. So the RMO, which is the long-term trend, is very, very relevant. We need to pay attention that we trade in the direction of the long-term trend. So friends, if you're looking for a scanner, we've got this scanner in the ATM Power Screener application. So when you have the ATM add-on, which is a separate purchase, we've also added a scanner for the 3D buy and sell. Otherwise, you need to use the Explorer. Now, wherever you see the arrow, right? The arrow signifies the first breakout. Just the 3D buy says this is an add-on breakout. So you have a beautiful system out there. So if you see the word RMO 3D sell with two arrows pointing down, that tells you not only is it a 3D sell, but it's also potentially a first breakout. In other words, it's moving from a bullish RMO to a bearish. So that rotation can be detected. So that's what's lovely. And the regular RMO 3D buy is something like this, which is an add-on, which is still tradable and very valid. So if you see up arrow and you see the background as red color, now when you see the background red means the RMO is negative. The background green is RMO is positive. So up arrow in a red background, let's not get too worked up about it, right? So we're not really too interested in something like that. So let's focus on getting these trades right, because what's really happening is it's a cyclical model. You really have a short-term trade which moves to a medium-term trend, and then when that long-term trend gets confirmed, that's how you turn into a strong uptrend. And that keeps circling. So even when the market gets bearish, you again move first to the short-term signal, then to a medium. So that's exactly what I'm trying to tell you, is that we will trade this movement of every time the stock trades into the direction of the long-term trend, we want to get into that direction and therefore have the odds in our favor. So one of the things which, I've heard a few users like, if I wait for everything to happen, could it be too late? For example, the market's dropped this much and I'm getting a sell over here. But notice over here, the sell comes and the low of that bar doesn't break. Why does the sell come here? Because I got the arrow here, the arrow right on top, the color here, and only much later has the RMO go negative somewhere here. You can look at that at the ribbon. If the low doesn't breach, you really never went short, right? So you're not going short because longer term trend direction is up. So my question is, if you're really too worried about the short term swing, maybe use a lower time frame. But if you really want to stay in sync with the longer term trend of the market, you are much better. Just imagine if you got 30 blue colored arrows on this chart, you would have taken every single one of them because each arrow was in an RMO bullish mode. If you wasted your time on the red arrows and the red bars, okay, there was this one phase you may have made a little bit of money on this, but most of the other times you failed. So the point is, do you want to be with the big picture or get worked up about that one trend? So the RMO has worked fantastically well. And to recap, some simple pointers I'd like to leave you with is, try and work with the concept of first breakouts being the most important. Trigger with a filter. And I say trigger with a filter, I always say buy above a high. So don't just buy, 0.01 above the high. Give it a few ticks. Let it stay above it for 5 minutes. Then do it. Stay disciplined with the rules. That's again, I think that's life now. If you're not disciplined, everything goes wrong. No matter what you're trying to achieve in this world, discipline is the ultimate keyword. And that has to be followed, because you may see the RMO system and look back. If I showed you a chart now of, say, the Dow Jones Industrial Average or the NASDAQ, you'd go back and say, wow, 80% of the times this was in the correct direction. Why didn't I make money? Well, because we didn't do the same trade 10 times in a row. So if you follow the same stock, the same rules 10 times in a row, same quantity, same philosophy, same belief, that's when you'll be experiencing its results. The problem is today we're trading gold, tomorrow we're trading crude, day after we're trading Apple, 7 days later we say, oh, the Chinese market look interesting, let's look at an ETF there. So we're keeping on juggling with our instrument. And another problem is we also juggle our time frame a lot. And I keep sharing this with users because, I live in this same boat as you. Because me as a trader or investor, what happens when a trade goes wrong? You try and console yourself that, oh, the weekly chart looks good, or the higher time frame looks better. So you try and give yourself some solace so that you can keep holding on. And I think that's the worst thing you can ever do, is try and look for mercy or sympathy from another time frame. And yes, I use the word mercy and sympathy and not confirmation, because I believe you should have indicators which can handle the short term, medium term, long term within the interval that you are trading. So if I'm trading a 60-minute chart, my indicators have to be so solid that they should reference the long term and put it to me. I don't need to keep on going and seeing what's the higher time frame, because often too much of confirmation with higher time frame leads to confusion and not confirmation, right? So volume is another element which you can certainly, so if you get breakouts with above average volume, we certainly like those trades. And of course, I'll talk about volume a little more with those ATM studies. So for those of you folks who prefer explorers, you've got these inbuilt explorers included. And if you have the ATM, you also have the integrated explorers. So integrated is where you have all three syncing in. But again, if you're looking for the very first breakout, I would tell you to use the Power Screener application that we give you. So the ATM comes with a Power Screener application, which does the scanning for you. So I highly, highly recommend using that application, because that's very robust. You can set it on a customized stock list of yours. You can set it on intervals of your choice. So let's say you trade the hourly chart and you trade 13 different instruments, it'll automatically keep scanning for you. You don't even have to hit a button that press explore or build a scan. So it does it for you. So I highly recommend moving towards the Power Screener to automate the process. Now let's look at what is the super filter. We built a concept called the RMO super filter, or a template in Metastock called ATM RMO. So when you look at the ATM RMO, it's a more of a optimized template, if I could put it that way. Because what happens is, in real world trading, that's how markets move. In conventional books that you read, that's how you draw a trend line. But when you come to your charts, you say, oh, it's not so symmetrical and rhythmic, right? Sometimes it is, but in reality, it's not always so rhythmic. So when you start looking at real world, you need, each chart has its different flavor. And that's what the super filter does. It adjusts the RMO to speed up or slow down based on the volatility of the equity. So that's called the super filter. Let's give you a first-hand taste of it here. For example, look at the RMO over here, all above zero and bullish. But what have I shaded the bar colors here? Orange. So the super filter uses 4 bar colors: a light blue, a dark blue, an orange, and a red. And red is, of course, very bearish. Orange is still bearish, but not extreme. So you can see it was red over here and then turned to orange, then turned to a dark blue. Dark blue is very strong. A light blue is still bullish, but again, not the extreme strength. It helps you pulsate. It helps you understand or gauge what that market trend is, denoting, what that sentiment is. And why did I say ATM RMO super filter? Why did I use the word super filter? It filters out the existing RMO. It takes it to a customized level. It's a bit like this indicator is now being tweaked and toned to the chart that you are trading, right? It's not really, just working off a static value. So the great part about the super filter is it's customized to work. So it's a bit like a tailor-made suit is always going to be better, because it's going to fit your body structure in a much better fashion. Similarly, it's going to fit the chart in a much better fashion. So here's the NASDAQ 100. I want to give you a quick peek of 2020, 2021, 2022. You got almost, I reckon, about 2.5 to 3 years of data up there. And you can see, if I looked at the super filter, just look at the bar colors. It's been light blue, dark blue most of the time. There's been, solitary 3 or 4 red bars that came. Probably this red bar that came, the low wasn't broken. You never went short. Here too, the red bar came, low came, never got short. 2 instances where you may have gone short. But, in the main, you have just been, rocking on the right side of the trend. Even this dark blue that came, you couldn't buy because it never went above the high of that blue. So keep that rule in mind. So even after that, we had the big rally of 2023 where it was, nice and blue all the way up. Let me try and do a quick pull up of that chart. Yeah, here you are. So if you look over here, we've got a beautiful uptrend which happened And that's all light blue, dark blue. That was fantastic. So if just continuing on that, you can see if I used it even for the last 3 years, it's very easy. 8 out of 10 times you were on the right side of the trend. So finding the direction of the trend is such a simplistic process. So it now comes down to getting practical and trading well. So friends, what I'm trying to get at is we spend a lot of time sometimes detecting the trend, whereas where I'm trying to come from is, look, Metastock does that for you, the ATM does that for you. We need to focus on us as traders. What's our trading strategy? So the super filter tends to speed up and slow down. So you can see in this case, the buy came on the RMO and here it stayed orange. So in other words, the super filter slowed down. It said it continued it into bear trend. So you may say, is the super filter slower? No. Why did I say no? Because sometimes it's faster. For example, here I got red colored bars, but the RMO was still bullish. Here it speed up, right? So it accelerated the pace, maybe based on the market volatility. Maybe the market became faster in terms of price action and volume action. So I think that's where it really takes the cake, that it has this ability to slow down and speed up, and therefore gives you a more tailor-made and a custom fit. So if you are fond of the RMO, you would absolutely love the ATM RMO template or the super filter. That's the one to be using and elevate your entire game plan, whether you're a trader, whether you're an investor. As I said again, the blue can come in even when the RMO is negative, and if it's a dark blue, it's a very solid buy signal giving you an early indication. And when you see light blue over here and the RMO negative, that also tells you that stay long, still things have not turned out. So when it goes red and you see the RMO bearish, that's when you're more solid on that trade. Okay, so let's try and understand that if you are using the ATM RMO template, you are definitely in a more superior space. Now we do have, of course, indications which come in early, where you have the red bar that comes in and you can take a trade right there and then elevate the trade. In other words, increase the trade as the RMO goes negative. That can be done, but there's a substantial difference between here and here. There's a good difference of signal and monies that you could be making if you got that trade a little earlier, right? So staying on the right side of the trend with the super filter, as you can see, I've shown you a plethora of charts. These are more index charts, which I'm trying to show you, daily charts. And we have this power screener. That's how the application looks. You can put in a bunch of your stocks and it would give you these background colors. The light blue indicates the super filters, light blue, dark blue indicates it's dark blue. And if you have a new breakout, it would actually stamp down break or up break. An upshift is when you go from light blue to dark blue, right? So we've got this all very well documented in the manuals. And plus we do offer training for you when you sign up, which will help you. There are a lot of resources to get you going. Quite honestly, if you use it for a week or two, you would absolutely be able to gauge it. As the name suggests, why is it ATM? ATM is automated trend modules. It's basically an automated system which is there, which is doing that analysis for you. Nowhere is the system going to ask you which period of average or which period of the indicator you want or what template to deploy. It's all preset. The templates are preset. The intervals are preset. You don't need to adjust the value of any indicator. You just need to apply a template, right? And that's how easy it could be. Now let's talk about the volume piece, which I was stressing on. The SWI, or the strength weakness indicator, is an indicator within the ATM suite. Again, the ATM suite has a bunch of 8 different strategies, but I'm just trying to share with you 3 of them today so that you can get a pulse of what we're doing. And of course, when you get the program, one can get into each of those strategies, and each strategy is designed very differently for a different goal. For example, if you trade options, we have the ATM RMO 2 system, right? So we'll focus on that. If you want to look at the volume element, the SWI system. If you're trying to gauge the longer term trend and the broad market trend, work with the super filter system or the ATM RMO template. So like that, each system or each template that we provide you has its own design, and they're not trying to do the same thing. Each one has its own goals, its own ingredients, and the SWI's core ingredient is volume. So in other words, the SWI doesn't even know what is happening with price action. All it's seeing is the ticks of price going up with the volume. So there's this expression which I'm sure you'd resonate with. If price goes up with volume, that's a confirmation to an uptrend. I'll repeat, if price goes up with volume, that's a confirmation to an uptrend. Similarly, if price breaks down and volume increases, it's a confirmation to the downtrend. So an increase in volume with a price breakout is a confirmation, right? So I'm trying to marry this matrix into the SWI, where I say, okay, study when it went up, what was the volume versus the volume when it came down? And where is that balance of volume shifting, right? So it's keeping on looking at that. And the SWI is plotted as a very clean line. So this red line that you see, which almost dissects the chart, it tells you that if the price is trading below that red line, the SWI is bearish. In other words, there's weakness. If you have red colored bars, that is also red in color simply because the price has gone below the SWI. Like you have blue colored bars here, that's because the price went above the SWI. And mind you, this is just using volume, nothing else, right? So if you see one solitary red bar over here, that's yes, it's come below the SWI, but does it break the low of that bar? No, right? So it's not really triggered. What you need to understand is the uptrends and the downtrends are capsulated with volume. So, this is, let's try and actually look at something more current. Here's a chart of Tesla. This is a 30-minute chart, and you can see the immediate term. This is just a 30-minute chart from October 25th till today, so just the last week or two. You had this downtrend, and you can see this is just volume. The market shifted over here around 210-ish. That's where you had a signal of a sell. We drifted all the way down from 210 to 195. And then we got the buy over here, which was at the blue bars come in, and the SWI kicks on. And this is just the volume read, nothing else. And this is a 30-minute chart. I mean, it's not perfectly live, it's delayed data, but just helps you get an absolutely current feel and gauge of how the indicator can work so simply and so easily. So rather than you're manually interpreting, okay, how much is the volume when it went up, or how much is the volume when it came down? For example, this fall may not be a fall with very big volumes, which is why the SWI is still protecting it, right? So the minute you have more volumes and you start breaching the SWI level, we would have a sell signal in place. Now, the great thing is all of these studies, you can go into the expert advisor and go through things like the commentary. So you can easily quickly read the SWI has a bullish pulse or a bearish pulse based on the interval that you're looking at. Now, in this case, it suggests a bullish pulse because we are trading above the SWI line. And you can take it back to any point. So if you can just move that and say, okay, what was it telling me? Let's take it all the way back to that first bar. There you are. The SWI is a bullish pulse right there. So if you looked at it maybe 4 days ago, prior to this, it would say bearish. So here the RMO was also bearish. The SWI was also bearish. But as I keep shifting, I think the first thing that you notice is that you move to a bullish pulse. The RMO moved probably later on, right? So that's somewhere where the RMO also went positive. And, that's a lovely gauge. So you have this commentary, you have the expert advisor, which marks these colors out for you. And all you're doing is you right click applying a template. And, that's what I'm applying, ATM SWI. You just hit it and that's how you get it. So it's as easy as that, folks. It's not very difficult. It's all preset. Notice I put in no value, nothing. And that's how I'm going to get the signals out. If you want to scan for it, of course, you can scan for it. But again, bear in mind, you have the power screener tool to do that job, right? So the SWI is again something which I would highly recommend we use because this is one of those indicators which is using volume with great depth. Let's come to the next level, which is momentum, right? Momentum is something which is very important to me. So when we built the trend decider, I'd love to say it's called the ATM trend decider, but it's actually a suite of 4 different studies. There's a trend decider daily level, a weekly level, a monthly level, and we even have a 15-day level. The idea is a lot of times we are day trading. We want to see is the stock bullish for the day or or bearish for the day. So I could say that, let's say I have a level for today. For example, let's actually take, this may not be perfectly real time, but again, I'm going to do my best to make this as interesting as possible. Let's, let me just reload my layout. Okay. I'm going to apply the template on this one, and I'm going to go to the ATM trend decider. And let's stick to what we have here. We have a chart of Meta, which is on a 30-minute chart. And again, I remind you, this is not really real time, but what you can see is this green line is the daily level. If I'm trading above that, it's bullish for the day, right? It's only if I breach that level of 316 that I'm bearish for the day. So if I'm an intraday trader also, I need to continue focusing on the buy side of things. Where this gets really interesting is when you start looking at for the week. So if I look at the trend decider for the week, let me just turn off the commentary so that you get a better chart. The red line is the trend decider weekly. So as the price closed above that level, this is telling you I've broken out for the entire week. So the entire week was positive, right? So this changes every Monday morning, right? Every Monday, you have a new trend decider weekly. So for example, when you break the weekly level, the entire week gets negative. So the beauty is, if you're someone who's, let's say, trading the next 5 days move, the trend decider weekly can be very helpful. If you're just trying to look at an intraday perspective, trend decider daily can be very helpful. So even though I'm using a 30-minute chart, it's still going to the daily and the weekly and getting those numbers and bolstering it on for me on that 30-minute scale. And it doesn't matter if I used a 15-minute or a 10-minute, the level is still going to be the same. It's not going to change. Now notice over here, it's even got something bullish and bearish written. The reason why it's writing that bullish and bearish is, let's see where it turned bullish. Why over here? This is the first point. This closing was above the trend decider daily and above the trend decider weekly. Agreed? If I look at one bar prior to this, the closing was below the green line. In other words, below the trend decider daily, but above the weekly. So it was kind of a sandwich mode, right? But here it's nice and clean. And that's the breakout you're looking for. The first time when it turns into a bullish phase. So even here, if I look at bearish, it came here. We're not going to go short this over here because it didn't break the low, right? But the thing that you see is the closing is below both of them, but the low didn't breach, so don't go short on it right there, right? But go long on it over there. So the idea of looking at this, and if you look at this more completely as a system, let's say the NASDAQ 100 or the QQQs, as many of you like to look at it as, the green line is the daily, the red line is the weekly. Now just observe one thing. Whenever the green line is below the red line, right, we get a major move down. Green slips below the red, what happens? Market topples. Green goes above the red, market rallies. And, mind you, you're not seeing a small piece of data. This is more than, 4 weeks of data in front of you. And you can see how beautifully you made that whole money on that short side. That was a good 5-6% drop that one got from those levels. And now we have a good 5-6% rally from that buy point. So it's interesting how you can just understand. Now, when you blend in all the three rules, green is lower than red. In other words, trend decider daily is lower than the weekly. Price is trading below both. You want to bang it. It's a clean short. So in my opinion, that's how I'm reading the trend from a momentum perspective. And, as you understand the market, think of it as a staircase going down. You need to see where does this staircase turn up. So, you were keeping on traveling down and now you started traveling up, right? So closing is above both the daily and the weekly. The staircase has started trotting up. The green line's higher than the red. Price is above both those levels. You want to go for it, right? So that's a confirmation just on price momentum. So trend decider doesn't use volume. It just uses price momentum. SWI just uses volume momentum. So a beautiful system together. And then you have the long-term story being told to you by that RMO super filter. So the ATM RMO template tells you the whole long-term picture. So the best part is when you look at, do I need to use everything? No, you don't have to. But the point is, even if you did use everything, I don't think they're really going to go against you, right? And if there's a situation you feel they're not in agreement, you always have that choice to say, look, no, I don't want to trade. This, for example, is a chart of the Nifty. This is the Indian markets. And, here again on an interval frame, we had a fairly large drop in the last, mid-October, pretty much like the US market. We had that whole phase of decline, which was beautifully caught by the super filter. And then you had this big rally, which just stepped in over the last 3 or 4 sessions. It's a pretty decent move. And, getting it was not difficult because the blue colored bars, the arrows, the super filter, it's all working, and you can, of course, put in the SWI and the trend decider. If you want to see how did the trend decider help you over there, let's actually apply it on this chart. And let's zoom into so you can see over here, the greens above the red, and you can see this entire interpretation is marked by bullish at the bottom. It's stamping that for you as bullish. This is the first point where you would say that green is above the red, price is trading above both. So that's why you're fully confirmed. And that's, you may say you didn't get the bottom, but I think, again, it's not about finding the bottoms. Let's get over this craze. People want to find the top and the bottom. It's about how much money you made. No one's giving you a medal to catch the bottom and sell it 20 points higher. Right? But look at this. Look at the traction you're gaining by buying at 19,250. And this thing's, already moved to 19,500 and 600. So that's the best part about it is you're able to use a system to understand you pulsing with the market, right? Like this entire fall, we could get that really deep, nice and clean. So you could use this as an exit model on a lower time frame. You could use it as a clean entry model. So these are all different models that I designed around my own trading because I'd like to focus on, the long-term trend direction. I'd like to focus on the volume. I'd like to focus on, price momentum, because the trend decider is, again, a lovely tool to use even for a trailing stop. For example, if I see that, bars have started closing above the red line, for me, that's a very important, like breaching the red line or breaching both. That is a very important thing for me. The price breaks both, greens come below the red, price is trading below the red. They're all red flags. So over here, my first red flag happened here because you got price trading above both. But when the green line went above the red, if you're short or if you're contemplating of going, you need to step in. You're not going to think further on it from that point. So the great part about it is whether you use the RMO system, which was this one, or the super filter, or whether you like using the trend decider, whether you use the SWI, they all have their own roles to play. For example, the SWI is using that volume component excessively. So the whole idea of the trend decider suite is to help you understand the momentum. And again, we have this interpretation done automatically for you on the ribbon. And as an expert advisor, we have scanners which will find out. So suppose you say, no, Rahul, can you find out which is the first time it breaks, both of exactly what I just said, where price trades below both and, the green line slipped below the red, or that all this can be scanned beautifully. So I think I'd like to kind of conclude by saying, let's learn to identify these trades well, which is absolutely effortless. When you use the ATM power screener as a scanner, it is effortless. You don't even have to press a button called scan. All you've done is set up your screen once. And that's where is that one day you take the time, okay, I want to concentrate on these 30 stocks. These are the 3 different indicators or 5 different indicators I want to use. I'm going to do that. Then I'm going to learn how to weight trades. In other words, there are some signals which are more powerful. What if you had an SWI and a dark blue color on the super filter? You want to definitely give it more weight. And trade management comes in when you start looking at the trading elements of a trend decider. What's my stop? How am I trailing this? When will the price momentum break? Managing that trade is very important. So that trading plan is very key. The problem is today we're not trading systematically. We're choosing indicators our way, we're mixing them up, we're moving from one time frame to another, we're twisting lines, we're drawing a line somewhere, then drawing it again, we're trying to find support resistance manually. Remember, we're all emotional beings. We'll all try and do what suits our mindset. If you feel that the market's going to go up, you'll only see support and only see the positive indicators. So this way, when you automate it, when you use templates which are predefined, You can't change the color of that bar. If it's light blue, it is light blue. You can't say, oh no, but I think it should be dark. No, the best part about being systematic is you're driven, right? So the ATM really helps those users interested in a rule-based approach. Don't worry about what asset class you trade. I trade all of them: futures, options, stocks, commodities, indexes, ETFs. I pretty much do all of that. And I can tell you that the whole concept is to be adaptive. In fact, my whole philosophy is on market practicals. I think we really need to do less of technical analysis, because technical analysis is done by the program. You need to analyze yourself. Am I, as the trader, solid enough in my rule-based approach? Do I know what my plan is? Do I know what my money management is? Do I know how I'm going to scan it? I think that's where my focus is. I'm really focused on the practical side. And folks, if you already have the program and this presentation helped you, excellent. If you are sitting on the sideline or the fence and you're trying to think, should I use it, should I not? Let me tell you, if you start using it in 2 or 3 weeks, you will be a turnaround. In my opinion, you would add so much weight and value to your entire analysis approach. Don't worry about education. We've got manuals, videos, and training, and a support team which is based in India. And you have Metastock support in America, literally giving you, 24-hour access to support. So the best part is you have a lot of resources, and above all, it's highly automated. It's there to lighten up. You can see within this last 45-50 minutes, it's been very light. I'm not done too much of drawing. I'm not asked to reference different time frames, draw lines. It's about understanding the system once, and getting cracking on those practicals. So I'm going to sum up by saying you've got scores of indicators available to you. I've got 35 different fields on the power screener that you can scan. So even someone, say I'm looking for a candlestick pattern or a MACD buy or a RSI overbought, these can also be put into the power screener. I didn't spend time on it because what I focus is on my core systems: the SWI, the super filter, the trend decider, counter trend, breakout catcher. So these are the core strategies which I want you to work with. And these are all inbuilt, provided to you: commentary, templates, indicators, power screeners, the education. So folks, don't worry about how you'll get going. It's very light. It's very easy. It's comprehensive, yes, but trust me, you've got to jump into the swimming pool to learn swimming. And I think it won't take you long in this case because you're jumping in with floaters. So I'll hand it over to you, Jeff, and you could wrap this up for me.
Sounds good. Thank you, Rahul. Appreciate that. Good to see you. Hello. All right. Really, really appreciate that. We did have one question, Rahul. Are you still around? Can you answer one question?
Absolutely.
All right. Eric wants to know, I'm a swing trader using options. My target time frame is days to 3 weeks max. Can I use the short and medium indicator trends or trend indicators in ARMA without the long-term trend?
So in your case, I think I'd focus on 2 studies. And the first thing which hits me is you do options. So RMO2 is a template I didn't talk about, but I highly recommend you look at that template. There's the manuals and there are videos to help you understand that. The RMO2 is a template I'd use. And the trend decider, what I did today, look at the daily versus the weekly, right? So what we just did could be very helpful to you because, it gives you the next 5 or 10 days trends. And I think that could be exceptionally helpful to you. And I think what you're trading in terms of an interval is pretty solid because that's really the sweet spot nowadays. So I think you're really in, the right time zones to be doing what you're doing. That kind of a swing trade where you're looking at anything between 3 days to 20 days, that's what's yielding the most returns of late. So you're in the right space.
All right. Thank you very much, Rahul. Let me go ahead and I'm going to take this back. We do have a special offer that we're doing for everybody on the RMO. RMO has been our most successful subscription add-on of all time. And it works really, really well. Thank you again, Rahul. I'm going to kind of talk about the special. I appreciate your coming in and spending an hour with us. Have a good evening.
Thanks again, Jeff. Good luck to everyone here.
All right, very cool. Let me go ahead. So just to kind of recap, you bet, Eric. Thanks for the question. And if you guys do have questions, let me know. RMO ATM 3.0, you can always tell that it's been a very, very successful add-on and well-liked if we're on a 3 version. People have absorbed it, they like it, they're using it, et cetera, et cetera, et cetera. But included with that, you're going to get the Power Screener app. The Power Screener app is going to allow you to keep track of all the indicators, does real-time screening, voice alerts. Rahul has done an extremely good job with it. In addition to that, you get the breakout catcher, the counter trend indicator, the SWI, the trend decider, the super filter. In addition to that, one of the things that Rahul does a really, really good job of is training, how to use things, how to implement them in the market. Not just how to apply charts and stuff like that, because that's relatively easy, but what to look for when you're doing the training, or what to look for when you're actually using the indicators and the studies that he did. So you get instant access to 4 training videos that we did. The normal subscription price for RMO ATM 3.0 is $129 per month. And what we're going to do here is normally it's $129 per month. If you want to do it on a locked-in discount, you'll save $30 every single month. So $99 per month is what you'll pay for it. That's a permanent rate. You'll always get that rate. It's not going to go back up to the $129 after a year or anything like that. A permanent discount of $99. It's also a subscription you can cancel anytime if you feel like it's not helpful. But I believe that the reason it's been so successful and why we're on the 3rd version is it's really good. Like, it has so many really good, interesting systems in there. So you keep that promo rate forever. If you do the annual rate, you'll get 2 one-on-one training sessions with Rahul's Veritech staff at Veritech Software. If you haven't picked this up for Metastock yet, you should at least try it, because you can try it on a monthly basis. You can go through all the training. If you don't like it, you can always cancel and get a refund. Not a refund, just cancel. No commitment to keep it. So 1-800-882-3040, metastock.com/conf promo, and metastock.com/sales chat. WL asks, is there an RMO trial period? No, but we're going to give you the $99 per month price. That's going to be grandfathered in. We're going to give you instant access to that training. And if you decide you don't like it, you can just cancel. There's no commitment to go on. So WL, thank you for that. If you don't have access to Metastock and you want to try out RMO, we'll throw in a free subscription or do an extended trial subscription. Talk more about that in a minute. But definitely try this out, WL. You'll want to do it. Gutham asked a question. I'm an intraday option trader. Can I use this intraday? Gutham, thanks for the question in YouTube. I appreciate it. And absolutely, you can apply this to any actual time frame that you want. Some of the methods are very, very specifically designed for intraday options trading as well. So thank you for that question. All right. Take advantage of that. Give us a call, 800-882-3040, metastock.com/conf promo, or metastock.com/sales chat. So there you go. Do want to say thank you real quick to AAII for the sponsorship of today's event. We do have a couple of sponsors. I mentioned them all, but AAII is a brand new sponsor, the American Association of Individual Investors. You can find out more about them at AAII.com. I'm sure you've heard about the AAII Investor Sentiment Index. That's something that they do. They do a lot of trainings. They're a nonprofit. They've been doing it since 1978, and they've helped millions of traders. If you want to find out more about AAII, go to AAII.com and find out more about them. Of course, we're Metastock. 30 years in a row, it's been rated #1 as the best software in its price category. It allows you to scan the markets. I love scanning. You can test trading ideas. You can do forecasting. You can get real-time commentary, signals, alerts. All of that starts at $59 a month internationally. Here in the US, it starts at $69 a month. What we're doing as a special for that is if you want to do an extended trial, if you do a month, we'll give you a second and third month for free. You can do that, or any of the actual products that we're talking about here at the event at metastock.com/conf promo. You can also give us a call at 800-882-3040. One thing I will say about Metastock is I wouldn't trade without it. I love to run my scans every day. I love to kind of see what my positions are. I love to be able to go through that large list of securities and narrow it down. And I think scanning one of our partners says we do scanning better than any platform out there. And I'd agree with him. I'm a little biased. But the ability to kind of just sift through all the noise that's in the market and find the opportunity and focus on that, something that's super helpful. For me, I use it every day that I'm trading. So metastock.com/conf promo, metastock.com/sales chat, or 800-882-3040. So there you go. Thanks again, Rahul. Let me go ahead and kind of actually put in my headphones. I'm going to need those real quick. When we'll kind of go ahead and talk about our next presenter, which is going to be Wendy Kirkland. So let's go ahead and move here. Okay. All right, Wendy Kirkland. I love Wendy's story. She ran an eclectic bookstore. It got hit by a hurricane or a fire or something. I'll let her tell the story if she wants to. But then she started trading, and she's done very well with it. And we've had her talk a number of times over the years. We've been a partner of Wendy. We've helped her design her systems into Metastock and kind of her unique indicators and her kind of unique approach. They work really well. She's super well respected. We're so happy to have her in here. So Wendy, let's go ahead and bring you on here and get you started. How are you doing today, for one?
I'm doing great. I am excited to be here.
Now, it was a hurricane. Am I remembering that story right?
It was a hurricane. You don't think of hurricanes coming to the mountains, so probably they really would say that it was a tropical storm, but it was a hurricane in Florida that came up and hit and wiped out our business. And that is when I ended up starting to learn to trade options.
So that's that was the question I had. Is that where you started to learn after that happened?
Right. Yes, exactly. I had never even heard of options. And it's kind of a funny story that my dad was an economics professor in college. That's what I was raised. I tease saying that I sat on Wall Street journals that were on our chairs to boost up the young kids, you know. So I was raised with them, but I had no idea about the stock market at all.
You have, after everybody that I introduced, the coolest origin story. So, with that being said, I can see your screen. I can hear you. Everything sounds great. I'll get out of the way.
Awesome. Well, I'm excited to get started and to share. And one of the things with me, I think that is kind of unique and different is that I truly am just an everyday person that was not college trained as far as financials and so on. So we'll go ahead and get started here. So I say, there we go. So I have been trading for about 15 years. I have a number of advisories. I have written a number of books, and the books focus on some patterns that I discovered, and which again is kind of unusual because it is not the type of information that is normally shared by people who are trained to trade the stock market. So what I see is the elements of successful trading, whether it be stocks or options or futures or Forex, is one, to pinpoint the equities with consistent big moves. It doesn't make sense to trade stocks that have a little move up, a little move down, and so on. You want consistent big moves. So I'm going to show you how to do that. Zero in on equities that are either overbought or oversold, because from there they are apt to switch directions. And that's what you want to be trading, is when there's going to be a really strong, solid move. You find equities that have formed a top or a bottom, have reversed, and now started a new trend. And you enter trades that have given a confirmed entry signal. So I'm going to take a little sidestep here for a minute that I hear from traders every single day, get emails in the chat rooms and so on. And this is typical of what I hear is, I don't think that I can trade options. I have no experience. Nothing ever works out for me. It needs to be simple, and trading is complex. If something's going to go wrong, I know it's going to happen to me. I know I'm going to mess this up. And this is what I hear. And people have this mindset, and in a sense, they do themselves in before they really even get started. So for 2 seconds here, I'm going to say that because I know this, I have actually written a little book called Knowing is Seeing that's available on Amazon. And what you know and what you tell yourself is what you are creating. So get over the negativity and know that you can change that, anything that's happened in the past, and going forward, you are going to be successful. You are going to be successful with Metastock and what you are learning. Okay, so enough of that. A lot of folks don't really even know what an option is. And I kind of think of it as being like you are renting stocks for a period of time, that you might rent them for a month, you might rent them for 2 months, and whatever happens during that period of time, then you are going to benefit from it. So there are 2 types of options. There are call options, and that is when you expect price to go up. And this gives you, the buyer, the right to require the grantor to sell the equity to you at the agreed upon price, at the agreed upon time, no matter how high the price is when you decide to sell the option. They must sell it to you at the agreed upon price, and then you in turn sell it for the higher price, and you keep the difference. The buy and sell happens behind the scenes for you when you close the trade. Put options are the opposite. And this is put options. A lot of folks have trouble understanding this because you are entering a put when you think price is going to drop. And so why in the world would you enter something where you think the value is going to go down? So put options give you, the buyer, the right to require the grantor to buy the equity from you at the agreed upon price and at the agreed upon time, no matter how low the price is when you decide to sell the option. They must buy it from you at the agreed upon price, and you in turn buy it at the lower price and keep the difference. The sell and the buy happens behind the scenes for you when you close the trade. So here is an example of option pricing. If you purchase options, say on Bristol Myers, the pharmacy company that we all know, and its stock is priced at $62, you're interested in contracts for the 61 strike put. The put means you think its price is going to drop. You pay $2.10 per share for the 100-share call contract that expires in 2 months for $210 per contract. And let's say you buy 3 contracts, that's $630. The stock price drops to $56.20, and your premium is now $4.50 per share when you decide to sell. The transaction happens behind the scenes at the exchange. You paid $2.10 and you sell for $4.50, and you keep the $2.40 share difference. You had 300 shares and you realized a profit of $720 on your $630 total investment for the 3 contracts. That is 114% gain or profit. that is the awesomeness of option trading, is that it escalates the amount of money that, or the higher percentage of what you made. All right. So the important aspect, this important starting place, is to find equities that have big moves. And so, excuse me, on this chart, I have placed average to range, which is an indicator that tells you what the average is. That what I have here is MasterCard, MA. It tells what its average move is per day. And so we are looking for equities that are going to have a 1.5 to 2% ATR, average true range. And so 2% move on MasterCard would be $7.32, and its ATR is $7.94. So that would qualify. It's above the 1.5% that we're looking for. It's actually above the 2% we're looking for. So it would be a good candidate. And then you start looking for other equities, and you make a list of high percent movers. That's what you want to focus on. This next equity is Snap. Again, it has a higher percent move than 1.5%. So it could be added to your list. And that makes it very easy to focus just on the equities that are going to have big moves. Okay, so now we're going to start moving into indicators. And the first one that we have on here is CCI, Channel Commodity Index. And it is not always applied toward regular equities, but I have found out that it really, really works well. And the way that you read the indicator, and I have added these blue lines, is that when it is above 0, it is bullish. It is moving up above the 0 line, it is bullish. When it moves down below the 0 line, it is bearish. Well, I have added indicators here, these blue lines that at the 100 and the minus 100 mark. And so I pay attention to when it's been oversold. That means there's been lots of selling going on. And then it starts rising and it moves above the minus 100 line. That is a key indicator to me to say, okay, this is changing its direction. It's time for me to pay attention. And again, whether I make a little list or whether I just go to the chart and check out the other indicators, being oversold and rising is a signal that there is a bullish change that is happening. When it drops down below the 100 line, that signals that a change is happening, and maybe it's time to think that things are turning bearish and going to drop. And that is exactly what usually happens. All right, so the next indicator is what we call the Kirkland Percentage Price Oscillator, the PPO. And you can see this is a red line and a blue line. And when it crosses up the red line over the blue, that is a bullish indicator that things are changing. When it crosses down below the blue line, again, things are bearishly changing. So you can look here and see that this cross happened, and it happened before this big move down. This is a little bit earlier indicator that things are starting to change and head down. So we are going to link these different things together, the different indicators together, and have it tell us a story. That, again, this is not super complicated. somebody that is just beginning to learn to trade can certainly follow and understand the indicators here. So the next one that we're adding is called the Kirkland oscillator. And this is the main one that we use to trade from. And this is an example here where it has crossed up over this lower line. And this is an indicator that we could enter a trade here. That it is also very close to the time that the PPO is crossing up and the CCI has started moving up over the -100 line, and it is heading up. And again, this is a confirmation that they are all kind of agreeing. They don't have to happen at the same time. And that is one of the things about the Kirkland oscillator. And I think there's a couple examples of what I'm saying on one or two of the next charts that we're looking at. But sometimes the PPO will cross a few days ahead of the Kirkland oscillator, and then it fails. It crosses back down again. And by relying on the Kirkland oscillator, that keeps you out of the trade, and perhaps considering that you're going to have to close a losing trade, and then a little while later it pops back up again. So that it's all giving you information. The Kirkland oscillator is what is used to actually enter and exit a trade, but the other indicators can either confirm because they're happening at the same time and they are confirming the movement, or they will keep you out of a trade that is perhaps apt to fail. Here again, you can see on this other circle that it has crossed down below the Kirkland oscillator, and that would be a signal that price is going to drop. And here it rose just a little bit and then dropped some more. So it, again, is what we use to enter and exit. All right, so this is kind of putting it all together. That, again, you can see the PPO. Here we had a cross up of the red line over the blue line. And this is one of the trades. This is MasterCard that we're looking at, where the Kirkland oscillator agreed with what was happening on the PPO, that it crossed up over the lower line here, and that suggested that we could enter the trade. So this continued up, crossed up. Here the PPO is crossing down. You can see that the Kirkland oscillator started heading down. This probably would have been the proper area to exit. Then the PPO crossed down again here. So this was a little bullish trend, but this just kind of flattened out right here. And this then, when it crossed back up, could very well have been, you could have considered a re-entry of a bullish trade and riding this back up again. You can see that the CCI indicator is supporting. Here it crossed up over the -100 line and is heading up, heading up, heading up. And this is supporting this entry. Here it is starting to come down, which is actually didn't cross below the 0 line, but a hint that things were starting to get weaker and a little choppier up here. Again, you can see this starting to cross up, and this is where it crossed up over the 100 line, supporting this upward move. Okay, so I guess this one I have put in here to show why the Kirkland oscillator is important and in a sense what you would want to avoid. That here we can see that the CCI is here, it just touched the minus 100 line. Here it finally did cross up, and you would not certainly have known this ahead of time, but when it crossed up, it did not have the energy to keep going and making it up above the 100 line. It is just kind of in between the two here, and this is a couple weeks. Okay, so here the PPO crossed up. That would have been another bullish clue that things were starting, and you can see it rose here, starting to head up. But the Kirkland oscillator did not come up and touch and go beyond that line. It stayed and stayed and stayed down below that line. So there would have been no entry for a trade here. And you would have been very lucky not to have entered. Yes, this rose a little bit, and had you used some other indicator here, you might have had a little tiny move, and if you had held here, it dropped, and then it just flattened out. This was not a solid move that would have been a really great, profitable trade. So here is an example of a trade entry. That you have the CCI it's been like going back and forth between the lines here. We had the PPO cross up, and yet we did not enter the trade because the cross up over with the Kirkland oscillator did not happen for a couple weeks. And here is the area where things really started to get going. Had you entered on this PPO cross and went up a little bit and then started pulling back and then pulled back more, you probably would have closed this trade and thought, this is a couple weeks. This is hadn't worked out the way I thought it was going to. And yet the Kirkland oscillator then is more focused, incorporating all of the information to be able to have really solid trades. So here this trade continued. I made a note that you would have had time decay here, and you really actually would have been able to get in at a lower price than you had over here. The PPO here had just continued heading up. The Kirkland oscillator crossed and started rising, and you would have gotten in here and had a nice solid trade. Here it continued, got up here, you can see kind of to a resistance line, and bumped its head, and that is about where you would have exited. The PPO started heading down, Kirkland oscillator started heading down, and this is where you would have opted out to close the trade. So here, let's look at the results. That again, what we're hoping to focus on is a 2.5 to 4% equity price move, and that often relates to a double in the weekly option premium. That 8 to 10% move often equates to a double in a monthly option premium. And so again, this is a total reason why we are stressing to buy the stocks that have the high ATR, average true range. You want stocks that are going to move on average every single day. Doesn't mean you're just going to stay in for a day, but you want consistent moves. So this is the U.S. Steel. We purchased calls on May 31st when the Kirkland oscillator crossed through the touch zone for $1.36 a share. That's $136 per contract. For the August 17th, and I think this May date, I think that was a typo. So sorry about that. Because I did current charts. So the August 17th, 24 strike call, and let's say we bought 4 contracts for a total of $544. And we sell after open on July 3rd. The call contract was worth $5.45 per share, or $545 total for each contract. That is $2,180, or a gain of $1,636, or 300%. The price when we entered was $20.75. When we sold, it was $25.12. So we gained $4.37. That was the change in price. That's a 21% increase in the stock's price over that trading period, and yet the option increased 300%. So for an investment of $544, you controlled $8,200 worth of stocks, and had you placed the same investment in options, you could have purchased 60 contracts and earned $24,000, $24,540 in profit. Now that would be a crazy huge amount to invest, but it shows you the difference and the escalated profit potential by investing in options. It's just a great example of paying a moderate amount and be able to have big gains. And I apologize for the typo, the funky dates there. Here's another trade example where the oscillator kind of protected from getting into a trade. So here we have the CCI is showing that it has gone from being bearish, crossing up, says it is going to be moving into perhaps bullish territory, finally crosses the 0 line, is kind of right here in the middle of the 2 blue lines, crossed up here for a second, and then right back down again. So the PPO had a cross up. I'm calling it a false PPO signal, crossed up and then crossed down. Yet the Kirkland oscillator kept you out of going into that trade. It did not cross the lines heading up. It just kind of bumped its head on the lower line and then headed back down again. That would have protected you from the trade. And it is a trade where, had you gotten in here somewhere around the, 13th, 14th, this is the end of the month. So that is a couple weeks that it would have kept you out of a trade where you would have been nervous with the back and forth moves every day. And then here finally it headed down and you would have had a pretty significant loss plus the time decay that you would have had. Okay, so here is another trade. This is Bank of America that can see, I made a note here that this is like when the CCI crossed up and over the -100 line. and then it went up, and then it pulled back. It was a little bit higher than this point where it crossed. Here the PPO also crossed up, and then it just kind of was sitting on the line, or was going back and forth, and then finally some white space between the lines. Right here, and this is pretty close to when the CCI crossed up, that it crossed up and over on the Kirkland oscillator, which in the end really was a little bit more confirmation than just this PPO line just laying on top. Couldn't really see any white space here between the lines until it got down here, but this got you in a little earlier. So the earlier charts that we were looking at, the Kirkland oscillator kept us out of a trade that ended up being a losing trade. Here, the Kirkland oscillator got us in a little bit earlier at a lower price, and then it evolved and headed up. So let's see how this all played out. Again, have kind of marked here where the entry would have been. And this again is where the PPO kind of crossed up. So you can look up here and see that was right in this area. And we had entered a little bit before that. And then up it went, kind of flattened out. And this is where we would have exited. You can see the Kirkland oscillator rose, kind of flattened out, started heading down. And this is where we would have gotten out of the trade. And I'm going to stress again, one of the things that is helpful or important with this is the fact that it isn't too complicated. It is consistent. It works. The Kirkland oscillator really points you in the direction of price moves and when things are going to head up for sure. Keeps you out of trades that maybe there is some buying, but there's selling underneath and it's back and forth, and keeps you from getting into a trade. But it is overall rather simple, that it is not too complicated to follow or to use to trade successfully. All right, so this is the Bank of America trade. Purchase calls after they opened on June 28th, when the Kirkland oscillator crossed through the touch zone for $1.89 a share, or $189 per contract for the September 28th strike call. And let's say we bought 3 contracts for a total of $567. We sell at the end of the day on July 25th. The call contracts were worth then $5.20, or $520, or $1,560 for the 3 contracts, for a gain of $993, or 175%. So Bank of America's price when we entered the trade was $28. When we sold, it was $32.50. So that is a $4.50 change in price. That is a 16% increase in the stock's price over that trading period, but we made 175%. That is the benefit, the gift of trading options. So for an investment of $520, we controlled $8,400 worth of Bank of America stock. And had we placed that same stock investment in options, we could have purchased 44 contracts and earned $14,564 in profit. You know, to me, that is a lot of money to invest in options in one particular trade. But it shows you the leverage, that options have a leverage that is above and beyond what you find in the buying stocks outright. Okay, so let's look at a put trade, and we discussed puts earlier, that some folks have trouble wrapping their brains around how you can make money on a put trade because the price of the equity is going down. And it's like, why in the world would you ever buy a stock when price is going down? And so we'll look here at how this works. This is marked here that this was where the entry is on the candlesticks, but we can see that the CCI here, the Channel Commodity Index, that it had been overbought up above the 100 line, rose up here, and now it had dropped down. We can see that the PPO crossed down from having been up. The red line was up, then it crossed down. And look down here at the Kirkland oscillator and can see that it crossed down below the 100 line. And this is where you would enter. And we can see that the Kirkland oscillator has remained down here. And there was a point here on the PPO where it touched or almost crossed up and over. Can see that the CCI crossed up. I don't believe that it actually crossed over the 0 line. It probably just bumped its head on it and then kind of pulled back again. So this particular put example was Goldman Sachs had purchased puts after the open on September 19th, when the Kirkland oscillator crossed through the touch zone for $5.19 per share, or $519 per contract, for the November 325 strike put. And let's say we bought just one contract for a total of $519. You might still be holding that because it has until October 27th, and it hasn't really given a Kirkland oscillator exit yet. The put contract is worth $29.19 now, or $2,919 per contract. What in the world? I'm gonna have to go back and look at that. Oh, okay. So that's $2,400 for the one contract, or 462% gain. I was like taken back. Wow. And it could go to even a higher price if price keeps dropping. So the overall strategy is to find equities that are ready to move. And this is why we zero in on the stocks that have the 1.5% to 2% moves, so that we can just really only focus on stocks that are consistently going to have a large move. It doesn't make sense to get into a trade that moves up a quarter one day and then down 12 cents the next day and back up on maybe another 30 cents and then up and down and up and down, just small moves. You want stocks that are going to have big, consistent moves. And that doesn't mean you have to zero in just on stocks that are pricey, where they're hundreds of dollars per share, that you want stocks that have consistent big moves. And you can have consistent big moves on a stock that is $25 or $50. And if it moves 2% or 3% a day, that is going to work out really well as far as option trading. So you want to start with stocks that are overbought or oversold, meaning that they have a good way to go to recover to the previous levels. They have put in a bottom or a top and are reversing and beginning a new trend. And then they confirm entry signal. And this just cuts out many of the false starts or shakeouts, or where trades kind of hit a stop and then pull back. We looked at several charts within this little series that we've gone through where that happened, where price went up to the indicator, touched it, and then pulled back. It didn't actually cross and move up. All right, so Metastock has kind of simplified the chart and has provided scans. And so this is, we're going to look at a few of these, but this is Nike. And here again, it has the Kirkland oscillator on it. You can see here where it crossed up and over the line that suggested that we could enter a call. And so there is a mark here where we could have bought here. Can see that it pulled back a little bit, and this actually gave us another option to add to our order or our trade if we wanted. And then it popped up and continued rising. So if we look at what Metastock is able to add to the chart, makes it so easy to be able to follow. They have put down here the indicator of it being bearish, bullish, little blip here where it was bearish for just a short time, bullish, bullish, bullish all the way along until it crossed down over here. Things are not much easier or much clearer than being able to have color zones like this that really point out to the trades. So here is a point where it was red, and had you been in a trade, you would have sold there. Here you're buying, could buy some more, rise up, and all of that. Again, information about the company Nike is here. Here is directions about this whole trading process called the automatic swing trader. We have figures that sit and tell you what the CCI is, what the ATR is. The PPO is bullish, but the Kirkland oscillator here now has become bearish. Down, crossed down below the 100 line and the lower line, bearish. Okay, so here is another example. This is United Standard Oil Fund. Again, you can see what the CCI is. You can see the ATR. The PPO is bullish, but the Kirkland oscillator is bearish, down. And see here, down, down, down. Here it crossed up and then back down again. It is bearish. Okay, so there's a variety of versions, and there are some traders that want to see the whole picture. And then there's other traders that say, I just want to know when to get out and when to exit, when to get in, when to get out. And they just will do the Kirkland oscillator. Here in this particular chart, you have the CCI so that you can follow that. You have the PPO and can see the crosses, which can act as a confirmation or an alert. And then you have the Kirkland oscillator. You can see right here where it crossed up, buy signal. And then also the average true range, so that you are focusing on equities that have the high percent moves. Again, it doesn't make any sense to trade equities that have just a few pennies, that are one or, less than 1% is what I'm trying to say. You want it really, really to have a 1.5% to 2% higher every single day, and focus on stocks that are going to have solid moves. It doesn't, again, have to be a pricey stock. Here, we're looking at Starbucks, and it's in the $50 range. But you want it to have that consistent move so that you're in trades that are going to be profitable within the shorter time period of the option that you have selected. All right, so in addition to the charts, and we can see that we have that back here, we actually have scans that can be run to point you in the direction of stocks that are getting ready to move and meet the qualifications. And Jeff, if you're there, maybe you can step in here and.
I am.
There you go.
I'm excited to show how easy it is to scan with Metastock. It's such.
Thank you.
Because it's so easy to do. We did have two questions though, and I wanted to. Number one, this one's from Barb in the GoToWebinar. She wanted to know what sets the Kirkland oscillator apart from a regular oscillator. And we don't. Go ahead.
It has it has special settings. It is not really. It starts off with a PPO, but it is special settings that I have determined help me to eliminate the false moves.
Cool. And then she was also wondering what the settings of your CCI were.
And you might have to look and actually say I couldn't remember if it was 21 or.
It's 14.
14.
So,
okay,
yeah.
Good. I'm glad I didn't say, because I have used them on different, and I couldn't remember, and it didn't say right here.
Cool.
So.
Let me show, Wendy, I want to say thank you for coming in. It's great to have you. I want to show a little bit about how to scan, and I'm going to do that. So thank you, though. It's been really,
You're
really
welcome. I
great.
enjoyed it very much. Thank you.
All right. Yeah, absolutely. Let me go ahead and do this real quick. Let me go ahead and kind of take the screen here. I'm going to make myself the presenter. You should be able to see the automatic swing trader. You can go ahead and do this. We'll go ahead and do this. And then I'm also going to just kind of do this. And what I wanted to do was just show, I've been talking about how easy the scanning is in Metastock, and how much I really, really enjoy it. And so I actually have this ready to go. Let me go ahead and kind of swap in here. You should see a chart. This is a scan I just ran of Allergen. I'll show you exactly how I found it. If I want to run a scan at any time in Metastock, I just come into the Power Console. So I'm going to click on the Power Console right here. Right here, this is the charting tab. Here's the scanning tab. We call it an Explorer. And one of the things I absolutely love is there's hundreds and hundreds of scans that are available. But if I know I'm looking for the Wendy Kirkland scan, I know that it starts with WK, so I can very quickly go ahead and jump to that. And the one that I ran, there's a pre-filter scan, and this is kind of designed if you're doing a huge list of securities. It goes through and it looks for stocks that are greater than 25 bucks and have a volume grade of 950,000. And so if you're doing this, like let's say you wanted to run a scan of all the optionable stocks or all the stocks that meet this criteria, you could run this, you can save the results, you could use that as your watch list every day. And it's very, very easy to do. In fact, we have a little bit of a training guide that shows you exactly how that's set up as soon as you do it. Michael says, thank you, Wendy. Thank you, Michael, for coming. I hope you're enjoying it. So if I just want to find the signals, and just to show you how this works, I'm going to go ahead and click on the Wendy Kirkland Automatic Swing Trader right here. And I'm going to move this a little bit closer so I can see it a little bit better without my glasses. But I can scan just about anything that I want. And this has been very beneficial for us because we have a huge amount of data available. Like if you just look at the number right here, there's 321,122 securities that are available as part of kind of the data that we get through Refinitiv and the London Stock Exchange Group. If you're in Asia, you want to do Hong Kong stocks, Singapore stocks, they're here. If you're in Europe, you want to do, like, there's literally a couple hundred different exchanges. If you're doing, like, you can see kind of just an example. Here's the Irish Stock Exchange, London, Oman. There's hundreds of exchanges that are available in here. If you're here in North America, I like kind of the way this is broken down. You can do just NASDAQ or New York Stock Exchange or Amex or just the optionables. There's a list of all the 5,832 optionable stocks that are out there. There's a list of all the ETFs if you're just looking at ETFs. For the purpose of the scan, though, I've selected the Dow Jones Industrial Average. I wanted to get a little bit of a smaller list. It doesn't take very long to actually run it, but I wanted a smaller list so that we didn't have to wait for it to run. So I've got the Dow Jones Industrials, I've got the NASDAQ 100, and I got the S&P 500. And in total, that's about 532 stocks that I'm going to scan right now, okay? Over here, you can see I'm just running this particular scan, the Wendy Kirkland Automatic Swing Trader. I'm running it on the current day and time, so I'm looking for signals right now. And I'm just going to go ahead and start the scan. So, and again, I love the ability to kind of ignore the noise that's out there. I want to be able to, there's so much noise in the markets. And one of the things that I want to do is I want to ignore all of the noise. I want to be able to focus on stocks that have an opportunity that I can trade right now. And you can see that it's gone through here. It's gone through 526 stocks. It's rejecting right around 95, 96% of them. And what it's going to do is it's going to come back with a stock listed, or a listing of the stocks that I can either long or short based on Wendy's rules. So right here, the other thing that Wendy talks about that I really like is look for good potential moves and use ATR, average true range, to kind of evaluate that. So if I look at this, this is a list of the stock name or the instrument name, since I did stocks at stocks. If I want to find the ones that have a long opportunity, I can go ahead and sort them based on their long opportunity. And we've got just a list of those. There's a few shorts today as well. AirProds and Kinder Morgan, not a recommendation to buy. But here I've got a list of all of these longs that I could actually kind of look at and decide on what I want to trade based on those. Those are all generating a buy signal today, meaning all of the criteria that Wendy just outlined are looking. And if I wanted to get a little bit more serious about average true range as a way to kind of look at if it moves more every day, if it has a bigger average true range, the idea that Wendy has is like, if it moves more, the average true range will be higher and it'll have more opportunities. And there's a lot of sense to that. But the ATR is listed on this column. So if I'm looking at some of these stocks, I can sort them by average true range. Brookings Holding has an average true range of 75, but the close price is about $3,000, which means it's a little bit more, unless I'm doing an option strategy, it's a little bit more expensive than what I'd want to do. But the one that I kind of looked at, I think, was Legion. And right here, you can find it in the list. Is it still on the list? AON, I think, is maybe it. Okay. What was the symbol for this? ALLE. Maybe it didn't come up. Oh, right here. Okay. So ALLE had an average true range of 2.6, a close price of 101. And what I would generally do is actually just kind of take a whole list of these, open them up, take a look at the charts, see what they're doing, et cetera, et cetera, et cetera. And I kind of did that to a point. I got to ALLE right here. And right now you can see that there's a buy signal. And that buy signal exists because we're over the CCI is up here in the oversold territory. Oh, I'm sorry, the overbought territory. We've got the Kirkland PPO oscillator that's just crossed over, is signaling a thing. You've got the Kirkland oscillator that's kind of entering that titch zone and going through it. And then, obviously you've got that average true range as well. And so everything's kind of lining up. Was able to find this by scanning. And of course, I can come in here. If I'm looking at the commentary, I can go in here and actually kind of open up the commentary. We've got the buy signal right here. And Wendy did a good job of showing this. Oops. Oops. It was work. Let me go ahead and undock this. Okay. And let me try that one more time. It was working for a second and then it went away because I did something weird. But here it is. So right now I'm getting a buy signal. It's going to give me that CCI rating. The average true range is 2.6, so about 3 points a day. You've got a bullish PPO and a bullish Kirkland oscillator. Right now we are signaling a long buy opportunity. If you're trading stocks, the closing price or daily volume are lower than recommended for this type of trade. So it's actually saying, well, the volume's a little bit lower than what we would recommend for this trade. So it's giving us a little bit of a warning. But if we're interested in taking advantage of this, and Wendy did a great job of spelling this out, I like it when there's good, clear instructions, and she understood exactly what we're looking at. But if you're interested in taking advantage of this opportunity, you should look at buying the stock. If you're options traders, you could consider intermediate term call options 2 to 3 months out when you're basing on a daily chart. 2 months out, if you're on a 60-minute chart, 2 to 3 weeks on a 30-minute chart, 1 to 2 on a 15 to 10-minute charts, and current week expiration for day trades. We had a question in the chat from Gutham earlier saying, I'm an intraday option trader, how can this help me? And there you go. Like, if you're looking at that kind of that shorter time frame, which you absolutely can scan for, you can get the alerts on, and there you go. You have exactly what you would be looking at if you're looking at this on a 10 to 15-minute chart. And you can apply it to any periodicity that you want. Okay. Once you're long, you should look to place a stop loss order at today's low or yesterday's low, whichever is less important. You want to know where the stop losses are. Once established in a traders should look to exit the position when at least 2 weeks before the options expiration date, unless a position is very deep in the money and time decay is no longer an issue. Once a trade is open, you should place your stop loss here, and you consider a stop loss value of 20 to 25%. And here it gives you 3 different things you can look at. So if you're considering taking extra profit when this happens, or this happens, or this happens. So Wendy, again, she did such a great job. If I'm currently in a trade, like right here, we had a little bit of a sell signal. I'm going to actually go back in time with the expert commentary. Hopefully it doesn't kind of bug out like it did a second ago. But if we're looking at this sell signal here, it's going to give us that stop loss order again, 123. But as we get deeper and deeper into that trade, it's going to kind of update that value as well. So again, I love the ability to actually explore for values, see just be able to focus on what is going on with the market. And again, know where my stop loss is, know what my exit conditions are. One of the biggest things in trading is discipline and being able to trade with a disciplined approach. And so if you're entering a trade and you know, hey, I'm going to go ahead and get in this trade, but I'm going to get out if it goes below yesterday's low or the previous low. I know my stop loss value is going to be 123. Those are things that are going to help you be disciplined in your approach and in what you're doing. And obviously with this one, we have a buy signal here. If we just look at Indecision, we have a buy signal here, and then the price kind of went up really well. Here we had a sell signal and then the price went down really well. Here you had a little bit of a trade that would have lost you money. You probably would have stopped out here at the low right here. But here you're entering another buy. And I just love how well it's put together. Wendy totally understood exactly what we're talking about. And for me, the ability to come in and say, okay, well, there's 6,000 stocks out here. Why don't you show me the ones that are actually available that have an opportunity? And I want to ignore 96% of the stocks. I just want to focus on those that make sense. And to be able to do that and do that quickly and be able to show it in a real-time live room, holy crap. It's one of the handiest features of Metastock. So with automated swing trades, it uses ATR to help you find the highest potential, helps you find what stocks are at a turning point, helps you protect from whipsaws. And that's the other thing I really like about Wendy's kind of strategy and how she uses it. Every indicator she uses is well thought. She's using ATR because it helps you with that potential. She's looking at CCI to help you find a turning point. She's helping you get protected from whipsaws by waiting until it crosses through that touchdown. All of those things that are very, very well thought out, and it's a great little add-on. So it's going to include the Kirkland PPO, the Kirkland oscillator, the experts, the scans, everything that you need to run it. It's normally only $4.99. We do back it with a 30-day money-back guarantee, so I want you to try it out. I want it to work well. $3.99 is almost a no-brainer. If it helps you make money, if it helps you identify trades, how many trades do you really need to find to make it worth $3.99? Not many, right? So with that, if you're new to Metastock, if you haven't tried Metastock before, we are going to give you a free trial to Metastock as part. We'll give you the data region of your choice and all of that. This is obviously needs to be fixed a little bit. There is a training class that's available as part of it. But you can do that at 800-882-3040. You can visit metastock.com/saleschat, or you can go to metastock.com/confpromo. So there you go. Again, we are Metastock, and 30 years in a row it's been rated #1. Here's all of the information here, metastock.com/confpromo, saleschat, 800-882-3040. So before we kick over to the next presenter, I want to say thank you to CMT Association for sponsoring the event. I just got an email from Tyler, who's going to be talking in just a second here. He also does a lot of work for CMT, but he also works with GoNoGo. But he wanted to point out that you can go to content.cmtassociation.org. You can sign up for their daily podcast. You can get a lot of educational. It's totally free. And CMT is a great organization. Tyler's going to come back in a couple days to talk about how having a CMT designation at the end of your name is going to be helpful. But also go to content.cmtassociation.org or give them a call at 646-652-3300. Before we get going on, right now what I'd like you to do is help me pick out a prize winner. So if you don't remember from yesterday, we were kind of giving away prizes towards the end of the day yesterday. What I need to do right now is if you're watching us on YouTube or if you're watching us on GoToWebinar, what I would like you to do is help me pick the number of the winner. I have a list of all the registrations that are here. I need a number between 1 and 9,525. Okay, so type in a number real quick. While you do that, while you do that, I'll tell you what the prize is going to be, because we're going to give away a lot of different prizes today. The first prize that we're going to do, if you remember yesterday, we had Oscar Carboni come in. He does a really good job, but he runs a real-time trading room, and he gives different trading recommendations. And so what we're going to do with his prize is he's going to give away a free month of access to his real-time day trading recommendations. So that's going to be awesome. Getting a lot of numbers. Andrew wants his number picked. Well, Andrew, if you can guess your number, we'll pick it. The first one that came in with a recommendation or as a number that wasn't Metastock actually was Tolu in the YouTube chat. So we're going to go with that number. It's going to be 2250. Okay. And I'm going to go ahead and figure out who that is. We'll announce the winner without doxing them. As best as we can. So let's go ahead and do that. 2250 is a Doug S with a Yahoo address in the USA. So if your name is Doug S and you have a Yahoo address and you registered for the event, congratulations, you just won a month in Oscar Carboni's room. So I'm going to go ahead and kind of make a note of that as soon as we get going. What'll happen is next week Oscar will reach out to you, and his team will, and he'll get you the information on getting that prize. So thank you for everybody for helping me pick a number. Doug S., congratulations for that. Good job. You win. Thanks for registering. Also, if you're watching on YouTube and you haven't registered yet, at the pinned comment of today, it shows you how to register for today's event. Click on that. You can fill out a small registration form, and you'll be registered to win. So there you go. That's how you do it. Our next presenter is actually Tyler Wood and Alex Cole. They've been a partner of Metastock for a number of years now. They actually have a really cool method that they're going to talk about that's already built into Metastock 18. And then they're going to kind of show kind of their premium courses on top of that. But they're actually going to show kind of a filtering system that they've used, that they've provided to you, that you can use in your Metastock if you have it. No charge. It's already there. We'll show you how to get to it. So with that being said, Alex, Cole, Tyler, come on in here. It's good to see you guys.
Hey, Jeff, how you doing? Long time.
Good. Is it Tyler or Alex is running today? I need to know who to share with.
Tyler's always in charge, Jeff.
You'll be doing the charts?
I would gladly share some screens and some charts with everybody.
Okay, Tyler then. Okay. Just want to make sure. All right. And when we have all of us on the screen at the same time, I like to refer to us as the Beard Club. No reason. Although,
nice and clean today.
Dude, wait. Hold on. All right, I'm ready.
We go. Very nice, Jeff.
All right, so Tyler, Alex, I just sent the screen share to you. Let me go ahead and click on yes.
Perfect.
These are.
Thank you so much, sir. How about now? Are those charts coming through?
I can see the PowerPoint. It looks great.
Awesome.
And I'm going to let you guys get to it. It's all yours. I'll be here if you need me. Thanks, guys.
Thanks, so much, Jeff. And thanks everybody for being here on this very fine Tuesday afternoon, 12 o'clock Eastern. But wherever you are in the world, hopefully this next hour will provide some evergreen lessons in technical analysis and about trading discipline. Regardless of whether you use GoNoGo charts or not, these tools and these concepts are really timeless. But Alex and I are glad to be here. It's great to have worked with Jeff and the team on this implementation of GoNoGo charts for Metastock. And what we're talking about today is trend following investing. And what that really means is having a repeatable process. So if you think back to how you were trading in 2020 and 2021, maybe it felt different last year. Maybe it's felt different this year, first half versus second half. And the whole idea around today's presentation is to make sure that even though the trades might look a little different in a bull market versus a bear market, the rules, the method by which you decide to enter and exit a trade have to be consistent. It has to be the same process over and over and over again so that you don't introduce a lot of the emotional bias and the heuristics that we all succumb to as human beings. And to help illustrate this point of safety first, of having a responsible checklist, Alex is going to talk to us a little bit about what's happening in the Cole household with a teenage son.
Yeah, I mean, it's kind of scary, but my son's learning to drive. He's 16. And just like when you're trying to make a decision in the markets, you want to make sure you line everything up so that everything is in your favor. And in terms of learning to drive a car, you want to make sure that safety's right at the forefront. And so you need to establish a set list of rules that every single time he gets in the car, he's going to put his seatbelt on, he's going to check his mirrors, he's going to signal before he pulls off into oncoming traffic, etc. And if you follow that checklist, hopefully, you will become a safer driver. And the same thing is true for investing. You need to have a disciplined process, a checklist of tools that allows you to make an educated decision and hopefully then lead to more reliable results. in trading the markets. And that could be anything. When you use technical analysis to build that checklist or that process, it could be trend lines, it could be moving averages, it could be using pattern analysis, it could be market dynamics of support and resistance. It really could be any number of things, but you want to come up with a checklist that you believe in when you're sort of rationally looking at the markets, not in the middle of a trade. You don't come up with this checklist when you're in the middle of a losing position or in the middle of a profitable position. You want to come up with something that makes sense to you, that you can stick to, that removes that emotional bias, and therefore helps you with your decision making.
Absolutely. So to help illustrate this point, let's just talk through basic technical analysis, the classical elements that, of course, Alex and I learned through the CMT program. And for many of you, this is going to be a really familiar review. But if we were just trying to decide whether or not to own Apple or any security, we might start by eyeballing the chart. So we can see from the lower left to the upper right, there's a trend, a series of higher highs and higher lows. We could draw trend lines and see classical pattern recognition. We can see that in this chart, price broke below that upward sloping trend line. Maybe that's our only rule for getting out of the trade. But the problem with just using classical pattern recognition or just eyeballing a chart is that it works best in arrears. So that trend is very easily identifiable after it's over. But also there's a lot of subjectivity to simply drawing trend lines and where you place lots of anchor points. And so we might want to automate that discovery of higher highs and higher lows, and we could use some indicators to do that. Alex, why don't we talk about the Donchian channels?
Yeah, Donchian channels are a fantastic indicator. If anybody's familiar with the story of the turtle traders, the famous experiment where Richard Dennis tried to grow traders just like he saw those farms around the world on his travels. And Donchian channels was the main entry indicator used by the turtles in that experiment. So what Donchian channels does is it tries to look at a set time period and determine whether or not price is at high for that range. And if it is, then that green line will move up. So if we're setting a new high based on a look back period, which is typically 20 bars, you'll see that line move higher each time price breaks above and sets a new high based on that look back period. And of course, on the bottom, you see the lows rising. Every time we have a new higher low, then that price, that red line is going to rise with the trend. And so what you're doing here is just automating that process of trying to find higher highs and higher lows. So as long as that green line is moving up, we could say that we're in a trend that's moving in the up direction.
Absolutely. How about another rule? Does anybody use moving averages on their chart? Certainly in some circles, a 200 period moving average isn't even considered technical analysis because it's so prevalent. But as I talk to a lot of new entrants to the market and speak at a lot of universities, if one moving average is helpful, then maybe 3 or 4 or 5 would be even better, right? People use multiple moving averages, not only to see price above its historical average, but to see the slope of multiple moving averages, the crossovers where you have a shorter period moving above a longer period that's inherently bullish and helps us identify the beginnings and ends of trends. But of course, we're starting to add a few more lines to our charts, and with moving averages, that's definitely a lagging indicator. We're looking historically at where price has been. Let's keep going, Alex, with yet another tool.
Yeah, I mean, I love Bollinger Bands. John Bollinger has done such fantastic work in our industry, and he's been, we've been lucky enough to listen to him speak and bump into him at so many of the technical analysis industry events put on by the CMT Association. And just a wonderful mind that's created so many great concepts for us as technicians. And Bollinger Bands try to encapsulate the vast majority of the data that you're looking at on a chart. If we think back to our math classes, which seems like a long time ago, but that same son is studying for his SATs. So there's maths flying around the house at the moment as well. We know that 2 standard deviations around a mean should encompass about 95% of the data set. So anytime price is outside of those bands, that's going to be significant. Now, of course, financial data sets are not normally distributed, but it's around that kind of number. The vast majority of data is going to be contained within the bands. So if we see price break outside of the band, that's going to be an indication that there's some real movement there, some real quick, enthusiastic movement in price. And we know from John Bollinger that if we break out of narrow bands, the suggestion is to trade in the direction of the break. So if we just start to look at this chart, we've got new highs in Donchian channels over on the left. We've got price above moving average. A little bit later on, we've got the moving average cross in the bullish direction. And now we're seeing price trade towards the top and even slightly out of Bollinger Bands. We're starting to stack those pieces together to give us an idea that we might be identifying a trend somewhere on the left side of that chart. But we could keep going. There's so many more tools you can add.
You know, as Charles Dow informed us 130 years ago, the first non-price indicator to confirm market moves was to look at volume, to see if the market is participating in ever increasing higher prices, as we're seeing on this chart. And so we could add volume. But again, that's a little bit of a rabbit hole. Are we looking at absolute volume? Are we looking at cap-weighted volume? Are we looking at on-balance volume? So we can start to add multiple layers of volume metrics to our chart as well, just to help us understand sort of that checklist and confirmation of what we're seeing in identifying the trend. But it goes on, right, Alex?
Yeah. Maybe we finish with this one, but you know, below price, we're all going to add indicators in other panels. You know, it's a very, very valuable exercise to bring in some momentum ideas, to bring in some other indicators below the price panel. One of the most common is the MACD indicator, which has obviously been around for a long, long time. And we all know about this indicator. It's the moving average convergence divergence. And what it does is it uses exponential moving averages. And then it looks at the difference between those exponential moving averages, one short, one long. So it kind of combines elements of momentum and trend following by using moving averages, but quickening them up and looking at that spread between them. And you can say that when the MACD crosses above its signal, that's bullish. You could say maybe when the MACD crosses above zero, that's bullish because it means that the prices in the short term have been rising quicker than prices in the longer term. And so we start to now add all of these things to the chart, and they all give us important information. And somewhere in that blue circle, somewhere in there, we feel fairly confident that we've identified a new trend in the upward direction. But as you can see, and don't forget, this is a simple process. This is taking like 5 or 6 things and trying to create a disciplined process. And of course, we know we work with people in the industry. Their process could be 10, 11, 12, 13 different ideas, different concepts. And then you end up slightly complicating your chart.
Absolutely. That's a period of almost 3 months wherein we could look through our checklist and decide at any point over those 3 months that we've identified a new trend. Now, the problem with overcomplicating your chart is that you can reintroduce a lot of that subjectivity that we were trying to get away from, right? We want to use facts like price to understand what's happening in the marketplace, not what we believe will happen, what we anticipate the Fed to do next, what we think the outcome of geopolitical conflicts might look like. All of that conjecture is really the market doesn't care. It certainly doesn't care about my opinion, doesn't care about any of our opinions. And so when we can distill all that is known and unknown about these securities that we're considering investing in, it's distilled down to a very simple factual number here in price. And the problem with reintroducing all of that noise on our charts is that we can become very subjective. I know for me, if there's enough squiggly lines on the chart, I could convince myself to hold a losing trade or to get out early of a trend that is persistent. Now, what we've thought about with GoNoGo charts is that a multi-factor model, a responsible approach, all the valuable information that these incredible indicators are giving us. There are a lot of institutional professionals that put that into an algorithm or a black box, and they run a fund based on the signals that are coming out of their models. Well, the dangerous part about a black box is that you might hear these 2 words, trust me, come out of a fund manager's mouth, and that really scares me. We felt that taking the trend following model and putting it back into a form of data visualization is going to give us real-time access to seeing how the model is working and also the flexibility, right? With a black box, you don't actually get to decide where you take your entry or exit, but to take all of that weight of the evidence, that checklist approach, but to have a very simple chart was critical for us. I mean, the name of the company is GoNoGo, borrowed from NASA in a shuttle launch situation. They want all of the conditions to be optimal before they launch billions of dollars of hardware into space. And I think the same is true for investments. We want to make sure that the weight of the evidence is on our side and that we're trading with the market, not against it. So if you're new to this, that is a GoNoGo chart in front of you. And all we're doing is taking all of that information, those powerful tools, and many more than we just went through in that more simple checklist, and combining them, blending them into a trend model that gives us a color-coded chart. And so blue and aqua are go trend conditions, meaning it's trending in an upward direction. Blue being the strong form, aqua being the weak form, built some sensitivity into the model. And in the downtrends or no-go situations, we have pink, a weak form, and purple, a strong form of downward trends. For those of you who are long short equity managers, you can trade trends in both directions, and GoNoGo charts certainly helps to do that. You'll also notice at turning points, we'll see amber bars. And that's when all that composite blend of information is in its neutral territory. Now the market actually moves in three directions, up, down, or sideways. And when we have that uncertainty in the market, that's a signal in and of itself. Alex and I are both big fans of the life and work of Jesse Livermore, who is famously quoted as saying, in all markets, there is a time to go long, a time to go short, and a time to just go fishing. So when you're reading a GoNoGo chart, blue and aqua are go bars, pink and purple are no-go bars, and those amber bars of uncertainty are go fish conditions. So Alex, to kind of summarize why we think this is important, let's talk about this chart from Mark Abraham.
Yeah, I absolutely love this quote. I think it really sums up to me everything that we're trying to understand about the markets, and that is that ultimately it is the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. And that consensus is revealed by analyzing price. Like for me, that's almost the definition of technical analysis. Like that might be to me what most succinctly what we're trying to do and what we're trying to understand. It is the opinion of market participants that determines whether a stock goes up or down. We know this, right? That's the missing piece between fundamental value and where price actually is. It's how people react and how people trade the markets. But price is what actually reveals that consensus. And so price is of paramount importance, and we want to be able to keep the focus on price as much as possible.
I think for me, going through my MBA program, really trying to understand bottom-up financial statement analysis, really understand intrinsic value and how to calculate that and estimate what a security should be priced at. And when I think about the investing discipline and this wide blue ocean of opportunities, I don't know the first thing about manufacturing semiconductors. And I certainly don't have inside information about how they're doing it in Taiwan. But being invested in Taiwanese semiconductors companies is still an option to me. And I can be an informed investor by simply allowing the market to be my fundamental analyst. And so hopefully that's something that everybody on this line has already come to the realization of, that all of that fundamental information is distilled down to price. And so by removing all those extra indicators, right, when we see a chart like this, we know that we have a clear picture of what that price action behavior, those supply and demand relationships between buyers and sellers, what that looks like. And it's critical that we keep our focus on price. So because Alex and I are so proud of this work, because we launched this company for institutional investors and realized that it had a great impact for individual and self-directed investors as well, we give it away for free. How about that? So if you are a Metastock user, you can apply the template of GoNoGo trend to any of your charts. All that we would ask in return is shoot us an email. Let us know how it's working. What securities are you trading? What's your time frame? How has that helped you make more disciplined decisions for entry and exit? You can send us an email, info@gonogocharts.com. So Alex, we've talked a little bit about this trend model. Let's talk a little bit about the investing discipline. What are we trying to do here?
I think it's important to just to take a step back and actually sort of ask yourself, what are you trying to do? Right? Are you trying to call tops and bottoms? Then that's not what we're here for. Are you trying to predict the market? Then again, somebody tells you they know where the market's going, like you said about people that say, trust me, right? We know what to do in those situations. So what we're really, I think, trying to do, if we are responsible trend followers, is to participate in them when they happen, right? Not predict when they're going to start or predict when they're going to end. We're going to try to participate in trends. If we can do that, we're going to make our money on the majority of the move. And if we can follow a checklist, a disciplined process, we will be able to remove doubt and confusion and uncertainty, right? So we're trying to do that as well. And then by doing that, we are able to remain objective if we stick to our rules. And then that last bullet point on there is like, hopefully that means we're going to act responsibly, as we should in all areas of life, but certainly in our investing as well.
So to help illustrate this point, we're going to lean on some of the research from the behavioral finance community, in particular, Terence Odian, who is a Haas Berkeley School of Business professor. He and his fellow researchers went through 360,000 day trading accounts in aggregate. They looked over a 15-year period, measuring the performance of what is a very statistically significant set of traders. And my question to you in the audience, yes, this is the audience participation portion of today's presentation. Help me answer this question. What percentage of all of these day traders over the long run lost money? 33%, 54%, 68%, 76%, or 87% of the day traders? How hard is this game that we are trying to do? And you can type it in the chat. You can shout it out at home. This is a webinar. We can't see you or hear you. But take a second and think, how successful do you think the average day trader is? And here's the big reveal. 87% of the 360,000 participants in this study lost money over the long run. It's not the most hopeful message, Alex. I shouldn't come here and bum you all out on a Tuesday. But the fact of the matter is that only 1 in 360 made money consistently year after year, which means they not only had an analytical approach, but they also had trading discipline. And I've got a follow-up question that will help illustrate this point. So same research group, Terence Odian and friends, and they went through 43 million currency trades, looking through these 15 crosses, and they searched through 43 million trades. And now my question is, what percentage of those individual trades were profitable? Where did they have the directional bet correct? 13% of the trades, 18% of the trades, 27% of the trades, 39%, or over 50%. Now remember, we just talked about how the average, 87% of the average traders lost money over the long run. And by the way, that study was on day traders. We could talk about professional money managers and how many failed to beat their benchmark year after year. Hopefully we all feel that this is a comfortable, safe space. This is not an easy thing that we're attempting to do, and we're in good company. Failure is going to be a part of what we do. But the answer to this question is that over 50% of those trades were directionally correct. They were profitable trades. So how does that square? How could so many day traders lose money over the 15-year period when they have a win-loss ratio greater than 50%? Well, the answer to that question comes down to position size and their trading discipline, meaning the average loss far outweighed the average gain. And so if we remember the quote from David Ricardo in the 16th century, he said, we have to let our winners run and cut our losers short. Well, that's really simple to say. It's much more difficult to enact in practice. But we can see from this data that it's that human emotion that keeps us from being profitable year after year. So let's get mathematical. Let's dive into this a little bit. With the expectancy formula, we can kind of see how these things play out. Remember, there's only 4 results from any trade that we place. We can have a small gain. We can have a huge gain. We love both of those. We can have a small loss. We should be very comfortable with those. Or we could have a major loss. And it's that fourth event that we really have to protect for. Now, the expectancy formula is showing us that the efficient frontier, the break-even trading systems are right along this line. And it's just the combination between percentage of winning trades and the win-loss ratio. So when we pick on a dot, let's just look at this blue dot right here. It's a 50-50 win-loss ratio, right? Meaning if your only analytical discipline that you could use was to simply flip a coin, heads we buy the stock, tails we leave it out of the portfolio, you could still break even so long as you had a trading discipline that made sure your winners outpaced your losers 2-1. Now, some of the greatest hedge fund managers in history are comfortable living up here, where their win-loss ratio is quite low, but they're looking for those right tail events, right? They're happy to be widely diversified. I'm talking about David Harding at Winton Capital or Jerry Parker at Chesapeake. They are very comfortable casting a wide net, looking for those right tail events, looking for those trending stocks that they can really lean into. And that the way that they cover up all of those small losses, they're comfortable being wrong in the markets frequently. But the way that they eat up those small losses is with those outsized gains. So it's Amos Tversky and Daniel Kahneman in the 1970s that wrote all about prospect theory. Daniel Kahneman won the Nobel Prize in 2002 in economics, even though he's a behavioral psychologist. But the work on what that human psyche does, how we experience so much more pain in a loss than we experience joy in a gain. When we translate that to the investing discipline, we can see that it's in our nature to cut a winning trade short, right? To lock in that gain, recognize our wins after, maybe the first 10% of the move. And with a losing trade, right? Maybe it was in our trading account, but we just have such conviction that it's going to come back in our favor. We cannot recognize the loss. We hold on to it, assuming that it will come back to break even or higher. And that's where the risk of ruin comes along. That's where those big losses, that fourth option that we really have to avoid. So we need to remove our emotions, remove the subjectivity, remove the bias from our process, and we can use tools to do that. So Alex, let's dive through a few GoNoGo charts and just talk about what this looks like in real time.
Yeah, this is the GoNoGo chart of Apple on a weekly basis now. One thing that's so, of course, useful about technical analysis is that it's fractal, so you can use it on different periodicities and, of course, on any kind of asset. This is the weekly chart, and you can see how strong the moves were through 2019, 2020, into 2021. That pandemic drop in Apple was not anywhere near as bad as it might have been elsewhere. You can then see that through the second half of 2022 and into the beginning of 2023, we had a sort of a real corrective period of about a year long before we then moved on into to go trends again. And if we move I think that we can highlight that area and show that basically if we just weren't in Apple during that year-long period, then look how we'd have helped trading results, right? We want to be long the goes, we want to be out the no-goes, or if you're playing on both sides of the trade, you could be shorting in no-go environments. But basically just removing that risk is so powerful. We do a lot of work with institutional investors, and part of it is avoiding risk. If you can simply help somebody have a lower max drawdown throughout their trading life, then you have helped them enormously. So just knowing to stay away, right, when the trends are not working in your favor. That's what we're trying to do. We're trying to be in the trends that are working and not in the trends that are not working.
And maybe you all remember this period in 2022, this relief rally. It was present on the indices. It was present in some of these mega cap names like Apple. How seductive, right? Who wasn't rooting for the market to come back dramatically and in rapid fashion and get back into that bull market enthusiasm that we were seeing in 2020 and 2021? The challenge with trend following is that, or the benefit of trend following is that we can avoid all of these relief rallies. We can wait until the evidence confirms, right? See how this never made a higher high, made a lower high relative to Apple's prior price gains. We can wait until the trend conditions are on our side to begin trading in that direction. But of course, as you mentioned, Alex, maybe not everybody on today's seminar is just a long time frame self-directed investor. I know many of you are swing traders or intraday traders or even scalping. And the beauty of technical analysis, first brought to us by Charles H. Dow here in the West, 130 years ago, this gentleman observed how markets move in multiple time frames. And as an accomplished nautical sportsman, he compared markets to the movements of the ocean. He said the primary trend is like the tides. This is unflappable. This is based on expanding gross domestic product or the underlying fundamentals of the companies that we're investing in. And that's the long-term trend. And from that primary trend, we see prices fluctuate above and below the general slope, the primary trend of the market. He said that's like the waves of the ocean. And the waves are people's reaction. We see a little more human emotion in price moves along that secondary trend. And then he identified the minor period, or that tertiary time frame, and he said that's like the ripples on the surface of the water. It's the day-to-day fluctuations or intraday, very short term, and it's the reactions of market participants to the news of the day or to just general price activity. Now, we can notice as technical analysts that price can be depressed way below the primary trend of the market or move way above, right? Waves coming in and crashing on the shore at high tide tend to bring in a whole lot more than what we see at low tide. And as technical analysts, we've really profited off of the multi-time frame analysis. And what I would say to everybody on this line, regardless of your time frame, right? Maybe you don't trade on a weekly time frame, holding securities for years on end. But taking a look at what that longer time frame can tell us will help you trade in the direction of that move. So let's go down the time frames, Alex. Let's stick with this chart of Apple. We're on a weekly basis, and just let's point out some of the classical elements that we could do on this chart as well.
Yeah, so we saw this chart just recently. We removed that highlighted area, but you can see that if you just focus on price, going back to that slide where we talked about how price is paramount, if you blend all of the tools and foundational concepts of technical analysis into something that color codes price, we can still do traditional technical analysis. We can still look for important levels of supply and demand, support and resistance. We can look for trend lines, right? We can look for prior highs, all of that tells us, like you just mentioned, that relief rally in 2022 never gave us a new higher high. That kind of information is very, very powerful, very, very simple, but very, very hard to do if your chart is full of price panel, full of different panels, full of different indicators, and price becomes very, very hard to see. So this is just telling us, the GoNoGo trend indicator is telling us that we are still in a go trend on the larger time frame. We are in a weak go. We've seen some correction. You see really that consistent string of paler aqua bars coming off that high, but we are still in a go trend. And that's where we are on the weekly. And if we move to down in time frame, we can see that we've returned to a go trend for the first time on the daily chart. This is very exciting. Let's hope it continues, and let's hope we move on to the end of the year.
Kudos to Jeff and Kelly for arranging to this week's summit at a time when the market really showed up to bring some good news to bear.
Yeah, and you can see the difference. Like this is what jumps off the chart to me is you can see how different this time is, right? This time we've had a strong rally off the lows, and it has been enough to paint the first of the go bars. It didn't happen in October. It didn't happen at the end of August. So now we are saying the weight of the evidence behind the scenes is combined to tell us that we have identified a new go trend again for the first time since the early summer. So on the larger time frame, we were in a week go. Daily time frame, we've now moved into a week go as well. And if we step down in time frame, perhaps you're working with a trader, perhaps you're a intraday trader in the retail space, but you're lining up your time frames. We know we're in a go trend on the weekly. We've come back into a go trend on the daily. Maybe we drop down in time frames and look for opportunities now in the same direction as the larger trend. So you can see that on the 60-minute chart, we've got a new go trend that was entered into at the beginning of November. So after that sort of fairly strong no-go that we saw for second half of October, new go on the intraday chart, new goes on the daily, and the weekly staying in a go trend. So if we see continued positive price action on these shorter timeframes, that's really going to help the weekly timeframe stay in a go trend as well.
And for those of you who are shorter period, right? When we were in this downward sloping series of lower highs and lower lows on the daily chart, maybe we were looking for opportunities to fade these relief rallies, right? If this daily period is your primary trend, then you're jumping down in time frame to an intraday chart to take your entries. And obviously on an hourly chart, that high in August or that high in October, that's going to be in go trend conditions. But you can look to short intraday, fading those rallies in what a primary trend is telling us was in a downtrend. Now we're seeing alignment across all three time frames for a go trend condition on the intraday, the daily, and the weekly. But Alex, we've just been using equity examples, which of course is not the entirety of the investable universe. In the CMT program and obviously getting to know John Murphy, the legend, John Murphy, CMT, in his work on intermarket analysis or cross-asset work, discovering what those correlations are between the asset classes. There is so much information. Even if you only trade cash equities, please do yourself a favor and in your analytics every weekend, take a look at what's happening across the asset classes, look at other markets and see what kind of influence they are going to have on the sectors and the types of companies that are performing. In the CMT program, obviously, we go much deeper, works by Marcos Katsanos and others that help to quantify those correlations between the asset classes. But just as a general analytical exercise, if you can take the time to do a little top-down review of what the market is telling us across those asset classes, you're going to get a sense of the context within which we're investing, right? Multiple timeframes, but also looking at multiple asset classes. So, Alex, just let's do a quick round robin of the asset classes.
Yeah, absolutely. And so you can see on the top left here, we've got the S&P. These were taken pre-market today, so I think there's another go bar there that would be popping up. But we've entered that weak go trend on the S&P. Treasury bond prices still painting weak no-go bars. Of course, now those will be moving inversely to rates. So still painting weak no-go, but rallying off the lows. Crude oil, the chart on the right there, is been very choppy. We've been watching crude oil on the daily chart, noting the chop, but now seemingly settled into a no-go trend, painting a string of strong no-go bars for the last 5 or 6 days. You move to the bottom left, we throw in a chart of Bitcoin, the largest cryptocurrency, and you can see how that go move was picked out just a month ago, and then it really gapped higher, and now we're still painting strong go bars for Bitcoin. Gold there in the middle on the bottom, perhaps acting as that flight to safety, right? As the equity markets continue to fall, we'll see what happens now going forward with equities showing some strength, but gold still painting strong go bars as well. And the dollar on the bottom right in a weak go, having fallen away from its most recent highs, but still in a go trend. So the dollar's been very strong for several months. That'll be also interesting to see how the dollar holds up with the equity strength that we're seeing. So we always like to get a sense of where the trends are, right? That's a very, especially now, Tyler, with the growth of ETF vehicles, right? You can get that exposure, you can get that diversification across asset classes by using some of these investment vehicles. So it's very, very important to understand where the trends are and how might these trends in things like treasury rates and the dollar and gold, how might that impact the equity markets?
Absolutely. And just understanding the trend on a longer time period can be really helpful to understand the context. Now, we're firm believers in data visualization. We take it a step further in our institutional product and in our research to use that multi-chart layout, but in a heat map form, right? The human brain can comprehend tremendous amounts of data very, very quickly when we use data visualization to our advantage. So this is the same 6 charts, just laid out in a heat map where we can see equities, treasury bond prices, we can see crude oil, gold, and Bitcoin and the US dollar. Now, I mentioned research. For those of you that don't have the time to do a broad top-down analysis of those trends across asset classes or the interest in understanding what all of those correlations might tell us about the styles and sectors of the equity markets that are most likely to perform in that context, feel free to check out GoNoGo Research. Alex and I started this business just for institutional managers, and this was really the first piece. We've kept that going both with weekly research, so every Monday morning, a long-form top-down approach through the asset classes into the sectors and into individual securities. And then we like to practice what we preach every Saturday, going through a chart pack review to really step away from the markets, have an analytical discipline, and make a trading plan for the week. So some longer term and broad charts to take you through that. We also, in Premium Research, have daily notes about trade setups within GoNoGo Charts. And you can check out a lot more of that on our website, gonogocharts.com. But Alex and everybody, congratulations. You've made it through the first half of today's presentation. What we're going to talk about next is the complete set of tools from GoNoGo Charts that we've implemented on Metastock. We've gone through conceptually how we would think about a rules-based approach, a weight of the evidence checklist as it relates to trend. Now, for many money managers and for every technical analyst, it doesn't end with just understanding the trend. We also want to understand momentum, volume, and volatility. And so we're going to spend the second half of today's presentation just focused on this bottom section of the chart, a single panel that's going to combine multiple indicators in the same fashion to give us a sense of all of that confirmatory leading indicator information and how we can relate that to trend. So Alex, why don't we start with this concept of momentum?
Yeah, we're going to roll through this because the idea is the same. Basically, we want the information, right? We are data gatherers. That's what we really do. And we gather the data, we want to look at it. That's how I've always worked best. But if we start to put all of this information on the chart, you combine this with what we already had on the chart when we were looking for trend identification, you can see how now we really have a chart that's overwhelming. But it all is valuable information, so we want to keep as much of it as we can. We want to use the momentum to give us a sense of market enthusiasm, to get a sense of how we can use these oscillators in trend, how we can look for extreme price swings. We want all of this, but we're going to complicate the chart if we include them all. So what we did was take the same approach, the same concept, which was to blend in the background all of the momentum ideas that I'd found useful working with clients over the years into one oscillator that still gave me the information I needed. So for example, you can still look at areas of extreme overbought and oversold. You'll see on the chart, when we hit a high or a low of the oscillator, it'll line up with peaks and troughs in price. We can also look for divergence, right? We're getting that high in price right there in July, and we're getting a lower high in the oscillator. So momentum divergence, also easy to identify. And that's so powerful. Divergence is everywhere in technical analysis. So that kind of information, of course we want it, but we want it in one easy to read panel that doesn't crowd our chart. And then the last thing is volume. We wanted to incorporate volume into this as well, because we use volume to identify strength or market participation, right? How strong is the move in price? Who's participating? Is it a large population of the market, or is it just a thin move, right? We need to know that information. So in this Metastock implementation, whenever volume is heavier than its average, you see that blue ribbon appear on the very, very bottom of that lower panel. So if you're in a nice, healthy trend and you're seeing a new price high accompanied by those stronger blue bar along the bottom, then you're sort of seeing confirmation, right? That's what you were talking about with Charles Dow and how volume was used as a confirmatory indicator. When Apple fell out of that go trend and started to fall quickly, we saw volume pick up there, really sort of the market agreeing with what price was doing and showing that participation in the no-go move as well.
So we don't have time today to go through all of our favorite momentum oscillators, but just a quick description of the GoNoGo oscillator. It is a range-bound tool from -6 to +6. As Alex said, you can use that in the traditional sense of finding areas of overbought and oversold or areas of divergence from price trend. And then, of course, incorporating volume as well in that ribbon at the bottom. What's really important for us is understanding that when Wells Wilder and others introduced momentum oscillators to the market, just think about the U.S. stock market in the 1970s. It was range bound. It was a terrible bear market, and every time price rallied, we saw a reversion to the mean in that downward trend. Now, using oscillators in that traditional sense of overbought and oversold. First things first, George Lane with stochastics or Wells Wilder with the RSI, their intention was not to sell every overbought or buy every oversold reading. That's a misuse. But we can see that might point out areas of trend exhaustion. Now, works of Connie Brown, Andrew Cardwell, and others taking the work of the great masters, George Lane, Wells Wilder, and others, and thinking about how we would use momentum oscillators, not in a range-bound market, but with trending securities, revealed that we're going to see momentum surge and then come back to neutral. And that within an upward trending security, as we're seeing on this chart right now, we're seeing momentum stay positive, stay above the zero line of the GoNoGo oscillator, and it moves to extremes and then cools off to neutral. The way Ralph Akampura first described momentum to me, he said, Tyler, picture a baseball in your glove. And when you throw it up in the air, the fastest it's going to move is right when it leaves your hand. And as it travels up to the apex, the highest point you've thrown it, it's still moving higher, but it's decelerating. And what is it going to do? It's going to come back down to your glove. Hopefully, if you're not butterfingers like me, you're going to catch it, and the game of catch can continue. So what we did with the GoNoGo oscillator was build this objective neutral level, this zero line. And that is the most important thing. If there's anything I want you to take away from today's presentation, it is the idea of trend following, getting those outsized returns, sticking with a security that is trending is some of the hardest tactics for any of us to do, right? Our behavior wants us to close that winning position and take the win, take the credit. Well, what about opportunities where we do want to responsibly buy dips? We want to stick with a security that's trending, or maybe even pyramid into our position, adding outsized gains as the trend continues. Well, we can use that interplay between trend and momentum to do exactly that. So in a trending security, momentum stays positive. It comes back to test this zero line. Let me zoom in for everybody. It comes back to test this zero line, and where it finds support, we see momentum resurge in the direction of the underlying trend. Price continues to climb higher, stair-stepping its way up, and momentum continues to find support at the zero line. Well, what happens over here on the right side of the chart, right? We failed to find support. Butterfingers McGee over here dropped the ball. The game of catch is over, and price trends down. We're seeing this major divergence as momentum breaks through the zero line ahead of the change in the trend conditions. So momentum's interplay with trend. And remember, all of the information that we're compiling in the back end, it's different for the trend versus the momentum oscillator. But that interplay is very critical. And Alex, why don't we talk for a second about calling out these opportunities on the chart?
Yeah, so as we said earlier, the power of data visualization in the stock markets is so impressive. But sometimes we sort of stop at just looking at the chart. Well, we wanted to take the concepts we just explained and then draw your eye to the chart, highlighting some of those situations and to sort of highlight their importance. So we put icons on the chart to do just that. If you look here, there are two different kinds of icons that we have on this chart. And the first icon that we're going to talk about quickly is the Go Trend Continuation icon. That's that green circle. So what we're going to be able to say here is that we've got trend continuation because the oscillator found support at the zero line. So for every time that the oscillator found support, we know how important that is. Tyler just talked about it. So every time Tyler catches the ball, we've found support at the zero line and the trend can continue. And so that's those green circles there on the chart. Those are continuation icons. And in a downtrend, those would be red circles showing continuation of the no-go trend. And then the other kind of icon we've got on here are these arrows, and those are counter trend correction arrows. And those are from using the oscillator in its more traditional sense. When the oscillator has gone into overbought territory and then come back, we're coming out of overbought conditions. So that's telling us that in the short term, we may see some pullback. We may see price struggle to go higher in the short term. Now, that doesn't mean trend reversal. Remember, we would then look to the 0 line to see if that holds the support. But in the short term, it may be an opportunity to perhaps reduce position sizes, etc. So those are the way we use the icons, just to draw your attention to the price chart based on the interaction between the oscillator and the trend.
And then here's the last piece, right? We've talked about trend, talked about momentum, we've talked about volume, and now volatility. If you're familiar with Bollinger Bands or Keltner channels, you're familiar with this concept that from compressed volatility comes expanding volatility. Alex, as you were being taught about volatility squeezes, you talked about the tube of toothpaste, that with enough pressure, eventually the cap pops off, and what happens? All the toothpaste spills out. Well, with all technical analysis, what we're doing is visualizing the activity of market participants. And so when we have that tug of war between buyers and sellers, just walk through this chart with me from left to right. We see prices in a go trend, and it's moving, maybe stair climbing on its way up. And then what happens to the range of price action? Begins to narrow and becomes incredibly narrow. And from that narrowing range of price action, we're also seeing the momentum oscillator come to this 0 line and really get stuck. We have that tug of war between buyers and sellers. There's no directional momentum. We don't know if buyers or sellers are in control. But once the volatility squeeze is broken decisively in one direction or the other, it's in the direction of that break that we see all of the traders pile on, right? So imagine that tug of war, and then decisively buyers are in control. What happens? The shorts, the bears cover their shorts or get squeezed out. Everybody piles to the other side of the trade, and away we run. Typically higher velocity price moves out of the break of a squeeze. And that's really what we're trying to do, is visualize the behavior of market participants. That's what Monohisa Homa was doing hundreds of years ago in the rice pits of Osaka, Japan. The original candlestick charts were a way to visualize what was happening with trader behavior. And so we can use all of this to our advantage. Volatility squeezes can happen in the trend continuation direction, right? We can come up to an area of resistance, find a lot of concentration, a lot of tug of war between buyers and sellers, or we can see this at turning points, right? This could have been a no-go trend and a bottoming process before we take off, or a topping process before we take down. It's the direction of the break that gives us all of the most useful information. And the longer that volatility squeeze takes place, the higher impact the break of that squeeze is going to be. So here we are coming to the end of the presentation. Alex, let's just walk through, you and I are simple people. We try to keep things very, very simple to really only answer 3 questions when we look at any chart. What's happening with the trend? What's happening? Where's the oscillator at? Momentum, positive or negative? And then is there anything important happening at the 0 line? So lead us through these next few charts.
Yeah, we'll just show a couple of examples, talk about some of the implementation on Metastock as well and how it can help. But let's go back now. Let's bring it all back to that Apple chart. This is the full suite of tools applied to Apple on a daily chart. And so, again, Tyler, you mentioned nobody can see anybody else here except everybody can see us. So we have to be careful. But if you're at home following along, answer those 3 questions. What's the trend? On Apple, on the daily chart, the trend is a go. We're seeing weaker aqua bars. So the trend has turned to a go. Where's the oscillator? The oscillator is in positive territory at a value of 1. It has moved above the 0 line. 3rd question, is there anything interesting happening around the 0 line? Yes, we have just been able to break back into positive territory after being negative. So we now have momentum on the side of this new go trend. So we have a go trend in place. We have momentum surging in the direction of the go trend. So we will now look to see if that price can climb and set a higher high. And so very sort of good sign on Apple on the daily chart. If we move on from this one, I think what we wanted to do here is just talk quickly about the implementation we have on Metastock. And if we have time, there's a couple more examples after this. But on Metastock, we have the ability to be there with you almost in a sense. We have the expert commentary. It's a fantastic feature of Metastock. You can highlight any bar and you can sort of see exactly what we would say about the GoNoGo suite of tools. Trend is a strong go, oscillator's in positive territory, no icons on the current bar, done with this chart, move on to the next to find things that are interesting. And then, of course, the other thing we have on here is the explorations, being able to find all of the securities that are in a trend or that have icons or that are in a squeeze. Super powerful and so time saving.
Absolutely. When we talk about investing, right, it's not everybody's full-time job. It's something that maybe you only can do periodically, but certainly being able to scan and screen for these conditions is really going to present those opportunities in a very efficient way. So Alex, we were talking about Apple. How about the S&P 500? Very similar conditions.
Very similar because, of course, we know that the mega cap stocks drive so much of the domestic market. But again, a positive chart. This is pre-market, of course, today. So there's another bar there that gives us a second go bar, I believe, unless things have changed over the course of the last hour.
Still a go.
But we're in a new go trend, and momentum has crossed above zero, and we are seeing that momentum is lining up with this new change in trend. So positive signs. A little bit closer to the prior high. If you look at this chart, we're right there, seeing if we could perhaps set a new high right above the last one. When we move to the next chart, I wanted to put in an example of something different, right? This is a security, not something different, but a different use of the zero line, right? We are now looking at something that's coming out of a no-go trend in the similar sort of fashion, has entered a go trend, but you could see a big pullback on yesterday's bar. So what would we do here, Tyler? We would look at what happens next at the zero line, right? If this price falls, we will watch to see if the oscillator finds support at the zero line. You can see how it was really struggling to get away from the zero line throughout the last sort of patch of that no-go trend as it formed a base. So we're seeing sort of a basing situation. We see the oscillator riding that zero line primarily for an extended period of time. And then it does get into positive territory. So now we'll look to see if we can find support. We broke higher, we'll pull back, and let's see if we find support. Now, I think I cheated a little bit. I think I know that we went higher today. So kind of did what we would have hoped it to do. But, an interesting use there of seeing how clearly the zero line can be used to identify areas of support.
Let's just talk about shorting AI, right? If that's your discipline, once the oscillator was below zero, now we have a no-go trend and negative momentum. So the same idea exists in reverse. That concept of polarity is all through technical analysis. And so when we're in negative momentum territory, we come up to test the zero line, right? A little relief rally. Well, we get rejected out of a small squeeze. Trend continuation icon, that red circle, Alex mentioned it's the same tool in reverse. So we can lean into our short positions as this trades lower. We get to an oversold extreme. We have a counter trend correction arrow, meaning that price may struggle to go lower in the short term. Come back up to test the zero line, and here now we're building a squeeze. Price range is narrow, and it's the direction of the break that's so critically important. So this is that trend reversal implementation of a volatility compression. So, ladies and gentlemen, there's so much more that we would love to share with you, and perhaps on a future Metastock session, we'll talk a lot more about relative strength work. If you're a registered investment advisor or an institutional portfolio manager, some of this might be super relevant to you in terms of looking at relative strength, the sectors relative to the S&P 500, where we're seeing leadership. From a trading perspective, what we're identifying here is information technology, consumer discretionary, communications, and indeed even energy, are outperforming the S&P 500 on this weekly relative strength heat map. And that's sort of where we look for opportunities to get long, those higher momentum rankings and the relative outperformance of those sectors. But we'll leave you with that as food for thought for a future presentation. Jeff, Kelly, the entire Metastock team can't thank you enough for having us here with you today. Happy to answer any questions if there are any.
Yeah. We only have a second or two, but let's do it anyway.
Yeah.
Let's see, Jeffrey, nice name. Jeffrey wants to know, if you missed the original go, is it okay to get in again?
I love that question.
I love the name.
the idea of the trend and momentum interplay is critical. So you might pull up a chart and realize that it's been in a go trend for many periods, right? Could be in a trend for weeks. The idea would be to then look for momentum resurging in the direction of the trend as a logical place to enter that trend to the upside. So for Alex and I are thinking about a trading discipline, maybe we wouldn't jump in right at an extreme overbought signal, where we're seeing those counter trend correction arrows up here. Maybe we wait for a retest of the zero line to get into this trend. So if you woke up at the end of 2021, in the summer of 2023 and thought about getting involved in US equities, that probably wasn't the time period. But right here, we're seeing the new trend shape up and momentum coming in the direction of.
And just to add to that point, that's what those icons are, Jeffrey, in the chat. That's what those trend continuation icons will help you with. If you've missed that initial go, but the oscillator finds support at zero, you'll see that trend continuation icon telling you that the trend remains in place and momentum is resurging in that direction. So all of those green circles are relatively safe entry points through a trend. So if you missed the initial, you can still say, yes, well, if I'm being sensible and logical, those are okay points to enter. When you got to the end of that trend in Apple and you looked for that retest of the zero line, it didn't happen. So we didn't get trend continuation there. So that wouldn't have been the place to enter. But hopefully that answers the question.
I think it's good. Robert wanted to know earlier, is a no-go a short signal?
So depends on your objectives. If you are a long-only investor, then you don't trade to the short side. But for those who do, you can absolutely use trend in both directions. So if we're just looking at the S&P 500, if you're just trading index futures, here we could get short in a no-go. A break above the zero line in the oscillator might be a chance to cover those shorts, maybe trim down that position. And then a trend reentry where we break back below zero. We have that red circle icon. That'd be a chance to lean into the short trade again. And again, the time period, these charts work the exact same way on any time period. So you might be looking to do that on a much shorter time frame. But you can trade to the short side using GoNoGo charts.
Cool. Yeah. And then participation of the day, when you're talking earlier about money management and how most traders lose money, but are right more than 50% of the time. I thought that was really cool. But Jim had the comment of the day, so far anyway. He said it's easy to love your losers. And in addition to that, he also said, I'm right is the bane of every day trader. So,
so true, Jim. Yeah. No, I think embracing the fact that we're not always going to be right is important to long-term success, right? Major League Baseball players who bat a 300 get into the Hall of Fame, but a 300 batting average means you strike out 70% of the time. So, keep that as food for thought, that we don't always have to be right to do this well.
All right, cool. I want to talk a little bit about the pricing. I want to say thank you guys. It's good to have you here. Thanks for spending an hour with us. And thanks also for creating GoNoGo and making part of it, such a good part of it, for free to all the Metastock users. So let me go ahead and kind of turn the screen over to me. Thank you
so much, Jeff.
Again, Tyler and Alex.
We'll see you all soon. Take care.
All right, very cool. Let me go ahead and do this. And we will do this too. All right, cool. And let's see, it does look like I'm sharing my screen. All right, very cool. Jim, I'm not kidding. You won a prize. So let's go ahead and stay tuned for a minute. I'll tell you what it is. The GoNoGo trend is available now, and it's been available for a number of years, but it's available now as a one-time cost. So you get the trend identification, which is the part that you get in Metastock for free. If you just have Metastock and want to play with that, it's called GoNoGo Charts. Apply it as a template. It looks great. But if you do the full add-on, you get the oscillator, the icons, the squeeze studies, all of that kind of stuff. And one of the things that we've actually done with them, they want to move it over to a recurring cost. So something that you pay for it every month. And we haven't done that yet. What I wanted to do is make it available at the conference as a one-time cost or something you could buy and own forever. So for probably the last time ever, if you want to buy it as a one-time cost, you can. Of course, we're going to back it with our 30-day money-back guarantee. Normally it's $14.95 here at the conference. It's going to be $9.97. We did sit down and we did a boot camp training for this. So we show you how to run the scans, the explorations, get everything started. If you're new to Metastock and want to find out, why it's been rated the best software in its price category, we'll give you a free trial with that as well. So we really do make that a very low risk, high reward scenario. You can try it if it's helpful for you. If it helps you find better trades, it's great. If it doesn't, then there's no commitment to it. You can basically get your money back. So you need to do that. You need to do it right away because it is going to a monthly subscription. So 1-800-882-3040, metastock.com/saleschat or metastock.com/conf-promo. So very quickly, we're going to say thank you to Stocks and Commodities magazine for sponsoring today's event. They do a great job. We really appreciate kind of all the work that they've done over the years with us. And Jim, you won a prize. Now, Jim, I did check and I don't have you registered, so I'm going to need you to email me. But I did like that comment so much that I'm going to give you an audience participation prize. So Jim, here we go. The prize that we're going to give you right now is actually Wendy Kirkland's newsletter. So Wendy Kirkland talked, she was just talked to the speaker before this one. She did a really good job. One of the products that she offers is a subscription to her newsletter, where in that, basically, it features a list of every stock flagged by Wendy Kirkland's weekly system as being on the verge of an explosive rally, and specific trade analysis and ways that you could kind of implement that trade. So that's normally a premium subscription you can do with Wendy. It's available as a newsletter. We're going to give you 1 year of that, Jim. And so we're only giving away 2 of those total. But in order for me to give it to you, you're going to need to email me, which is, you can email me at jeffrey.gibby@metastock.com. So there you go. Lori asked a good question. How do you enter for prizes? Lori, because you're in GoToWebinar, you're already registered to win. So when we do the drawings, when we pick a number, all that kind of stuff, since you're in GoToWebinar, we've already got you registered. If you're watching us on YouTube and you still need to register, there's a pinned comment to register for today's event. But Laura, you are registered and you can win. So Jim, or Metastock, thank you for putting my email address in there. Jim, send me an email and I'll make sure that you get that prize. So Damon says the technology that they have created is very useful for day trading. From what I can see, it is as to how they designed it. How much does it cost to purchase it? It's $9.97. So, and we do give you a money back guarantee. It is available as part of Metastock, and we will give you a free trial to that. So thank you for that question, Damon. Okay, perfect. Our next presenter today is Stephen Primo. Stephen does a really good job. We love having Steve on here. He's going to talk a little bit about his strategy number 4 and how it works and kind of the way that he uses. He's been in the trading. He's been trading for decades now. I think it's 40 or 50 years. From what I remember, he started trading on the Pacific Trading Academy, his Pacific Stock Exchange, and he's going to do a really, really good job. So, Steve, without further ado, let's go ahead and get you started. Steve.
Hi, Jeff. Can you hear me?
Okay, yes.
There we go. Okay.
Yeah. There you are. Thank you. Right. I'm glad to hear you. I was wondering if we needed to play the video for a second. But yeah, now we can hear you. And we can see your screen.
Okay, thank you everyone for joining us today. And thanks to Jeff and everyone at Metastock. I have a great presentation for you today because I'm going to be talking about edges that will truly change the way you trade. These are edges that I myself learned over 4 decades ago, and I continue to use in my own personal trading. And they make up about I'd say about 80% of all of the methods that we teach at our company, Specialist Trading. But they'll really help you, and you can apply them to any market, any time frame, and any strategy that you're currently trading. Now, let me show you how much they could really help you and how simple they are, but powerful at the same time. Let's take a look at this chart in Costco, okay? Now, most traders looking at this would say, all right, we're in some type of uptrend, meets all the classic requirements, higher highs, higher lows. But let's say you're listening to someone in a chat room or a trading room and they say, hey, this is tremendously overbought. We have a doji right here, signs of a reversal happening. So maybe you should sell this if you're long, or more importantly, you should probably go short, maybe buy some puts or short the stock because it looks like it's topping out. And for the next 2 days, it looks like they're actually right. It does go down. So you don't want to miss the big move. You think it's going to come down to all these lower levels, or that's what they're telling you what it's going to do, predicting. So you decide to go short. Say you buy the puts or have some type of spread strategy with a downside bias, or even short the stock, okay? You're all excited to make a ton of money. And then for the next 2 days, nothing really happens. And actually you've got a loss. And it seems like the momentum has dried up to the downside, and you're starting to wonder if you did the right thing, okay? Well, this is the way most traders trade, myself included when I first started trading. And this is why most traders fail, because you're taking your cue from an outside source when you should be listening only to the main thing, and that's the market in front of you. Now, these edges are based off of market behavior, and this edge would have told you right off the bat that you should not be a seller at all. In fact, if you were going to be doing anything, you should be a buyer, or look at this from a buyer's perspective, because this was a buying opportunity. So let's say you had a strategy that actually generated a buy signal right here, okay? Well, these edges would tell you where to enter. It would actually tell you where to place your stop, and most importantly, give you an exit target right here. Now, if we applied these all to Costco, we would have seen that in just a matter of days, we had a 31-point gain, and the market seemed to stall, right? Just after we got out. So this is the value of these simple but powerful edges I'm going to be sharing and revealing with you today. And you can start applying them as early as today or tomorrow if you'd like. So we're going to be discussing these edges that will change the way you trade today. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 46 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. So that's where we get the name Specialist Trading. If you're not familiar with what a specialist is or does, there aren't a lot of them around anymore with the advent of electronic trading. But if you ever Google those old pictures of the trading floors with those guys behind the large wooden podiums making these weird hand signals and paper all over the floor, that's what a specialist was, okay? Used to make markets in roughly about 50 or 60 stocks. So I made markets in stocks like IBM, US Air, Waste Management. I traded through the crash of 1987 and the bull market that followed. So I've seen and traded just about every market environment you can think of. Straight up markets, straight down markets, sideways markets. And also on top of that, I've traded just about every system, every new method, new strategy, every technique you can think of. Most likely, if there's something brand new that you've never heard of before, it's mostly been around, it's just been rebranded. So in my 46 years, I know what works in terms of consistency, and I know what doesn't work. So about 15 years ago, I teamed up with Proprietary Strategies, and we formulated Specialist Trading, where all I do is teach and mentor students around the world all of the things that I've accumulated that have high levels of consistency, hopefully to help make them a consistent trader. And you'll see that attention to educating in today's educational presentation. Now, before we begin, as always, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these edges, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get more education on a daily basis from us, feel free to follow us on Twitter or X, pick whatever title you like. There's our handle right there, abbreviation for Specialist Trading. Every day I post around 5 or 6 different snapshots of signals that our techniques or methods have generated. And I also post little bits of financial wisdom I've accumulated along the way. So there's great ways to get daily education as I said, on a daily basis. Just follow us on Twitter and you can see it for yourself, okay? Now remember, as I stated in the opening statements, we're a little bit different from other presenters you may have seen or You may be seeing they're all good educators, but we differ in the fact that we're really trying to educate you and teach you. We're not in any way trying to force feed you signals. We're not in any way trying to tell you what the best market is to trade or the best stock to buy or sell or what the best time frame is. You see, we feel as educators, those are things you have to learn on your own. I've been trading for 46 years now. When I first started trading on the floor, I was in a room with hundreds of other traders that made relatively large amounts of money in a short time, anywhere from hundreds of thousands to millions. And guess what? Not one of them is still trading anymore. Most of them have given it all back. So the secret I have found out is really having a plan in place and then listening to no one else but your plan, just sticking with that and making your own decisions. See, most of us have been trained to get a mentor, which is great. And you're going to hear some great mentors later on in this entire week. But you should take what you learn from them and then make your own trading decision. This is our concept and our philosophy of education of specialist trading. This is what we call the specialist edge. So my goal is not to force feed you signals or tell you how to trade. It's simply to teach you how to trade with the specialist edge. This is what has sustained me now for 46 years, and hopefully it will be able to sustain you as well. Okay, so with that out of the way, let's begin today's educational presentation. And I'd like to start off by sharing with you what my mentors taught me or said to me when I was first struggling, because I've made no secret about it. My first year or so, even as a specialist on the floor, I struggled tremendously. I was doing all the things I had been taught, probably the same things you've been taught. Listen to a lot of different gurus and mirror and mimic whatever they're doing. Make sure I know what all the earnings estimates are, and so I can plan ahead of that. Have tons of indicators. If you've seen my trading screens, I had about 4 different screens. I had about 50 different indicators I was monitoring. And we didn't have the internet then, and we didn't have chat rooms, but we had newsletters. So I subscribed to all the newsletters, and guess what? None of that worked. All right, this was 46 years ago, and none of it was helping me. Even though I was looking at interest rates and jobless claims, it just couldn't help. There was no sustainability or no consistency. Now, my mentors, who were specialists themselves, saw how much I was struggling. And this is one of the first things they told me when they were watching me trade. They said, Steve, trading, believe it or not, is really simple. It's the trader who makes it more difficult than it has to be. Now, think of it. Are you making your trading just too overcomplicated? Do you have tons of screens in front of you? Do you have tons of indicators you're watching? Are you waiting with bated breath for all the news events to come out before you can make a decision? That's what I did 46 years ago, and it didn't help me then. So I don't know if it's miraculously going to help a lot of people now. In fact, it's been estimated that 85% of all traders fail. So we've all been taught the same thing. So most likely, it's obvious that that doesn't work. What I have found out is the simpler things are the things that actually have consistency. Now, it was really difficult for me to simplify my trading because I wanted to cling on to all the things I had learned. But once I finally did start to let go of what my mentors called noise, that's when my trading started to become consistent. And that's what it's all about. It's not about hitting home runs or retiring in 6 months. It's about being a consistent trader so that you can have not just a couple of good months, but a couple of good decades, so that you can be trading well into 30 or 40 years from now. So what I found out is that in order to be consistent, you must always ask yourself these 4 questions. Doesn't matter what market you trade, doesn't matter what time frame, doesn't matter what direction you're going in, but you should ask yourself these questions. This is prior to getting into the trade. Now you'll see, you can start asking yourself these questions once you learn them today, and you'll see how simple they are, but how powerful they are as well once you go back and look at your own results. Okay, so let's get into it. What's the first question? Question number 1, am I on the right side of the market? I know that seems overly simple, but think of it. Most traders think they're on the right side of the market, but every time you lose, you're actually out of sync with the market you're trading. What time, regardless of what time frame, what market, it makes no difference. Because if you want to buy and the market wants to go lower, you're out of sync. You're not on the right side of the market. Conversely, if you want to sell and the market goes higher, you're out of sync. You're not on the right side of the market. So the first question is the most important. Ask yourself, am I on the right side of the market? For example, let's go back to that snapshot in Costco. Remember, we first viewed this as a classic uptrend, higher highs, higher lows, but then we listened to someone, maybe in a chat room or our brother-in-law down the street, and said, this is overbought. That oscillator that they paid $10,000 for is telling you that it's tremendously overbought. It's not going to go any higher, and you have to exit if you're long. And more importantly, you should probably go short. So you listen to them because after a couple of days, it does go down. So you decide to sell, okay? But is that really the right thing to do? Because after a couple of days, it didn't go down anymore. Well, here's the easiest way and the most powerful way I know to find out if you're on the right side of the market. You should always apply. I don't care what time frame, I don't care what market you're trading. You should have on your screen and plot a 50-period moving average, okay? And then before you even make the trade, ask yourself, where is price in relation to the 50-period simple moving average, okay? In fact, that is so important. I would recommend writing that down on a Post-it and pasting it on your screen there, your computer screen, because you should ask yourself that before you even pull the trigger. Where is price in relation to the 50-period simple moving average? And you'll only come up with two possible scenarios, because if price is below, that means the overall trend is down. And we never tell our students to buy if price is below the 50-period moving average, because you're out of sync. You're not in sync with the market. You're not on the right side of the market. Conversely, if price is above the way it is right here, the overall trend is up. That means you should only have a buyer's perspective. You should only be looking at the market you're trading from a buyer's point of view, and you should never be selling. The reason is because the odds will be in your favor, that it will continue in that direction. You see, trading is a numbers game. It doesn't mean that this works 100% of the time. Nothing does. But it's a numbers game. You want to put the odds in your favor. That's how you become consistent. In fact, go back and look at your last 10 or 20 trades. I can almost recommend and tell you that the reason why you lost is because you were out of sync with the 50-period moving average. So now we know, looking at this chart, that there's no reason we should have ever listened to anyone and sold, okay? Now, let's say you are looking at this and you say, you know what, there's one of the strategies to go long that I trade. It's a pullback strategy. Actually, it's very similar to this right here. You had a doji that goes down, so you track this and you enter above each preceding bar until you finally enter the trade. Now look what we have here. We have a doji and it's going lower. So you want to enter if it trades above this bar. This would be your entry point to buy, okay? So you decide that you're going to be a buyer, you're going to try this, and you'll enter right there if it trades one tick above that bar. That's 532, okay? This leads us to question number 2. Where do I place my initial stop? Now, most beginning traders who we teach this in our courses say, well, wait a minute. I thought we should find out where I'm going to get out because I'm most likely going to make money, right? So I want to know where to get out. This, once again, is the wrong way to look at the market. You should always think in terms of self-preservation. You know, every trader I know, regardless of how good they are or how long they've been trading, always knows where their stop is, where they're going to be getting out if the trade is wrong, even before they enter. So therefore, we don't want to think about where we're going to get out with a profit. That's great. We want to think about defense. Where are we going to get out if we're wrong? Because we could be wrong. So let's just use one of our many stop placements. In our courses, we teach upwards of 6 or 7 different stop placements. Some traders like a lot of risk. Some traders like minimal risk. So we provide you with all these different stop placements. Let's just use a very basic and generic one, and that is a short-term low or a pivot low. So what this is you go back in time and find a low where you have a low established and you have maybe 2 higher lows to the left and 2 higher lows to the right. And this is a very generic place and standard place to place your stop. It just basically is saying that if price comes down and goes below there, well, then all bets are off. Most likely we're going to be going lower, okay? So now we have a stop placement. Remember, you can always use whatever you'd like. It could be one of your stop placements or someone else's, but you should always, secondly, ask yourself, where do I place my initial stop? Next, we go on to question number 3. Now we can ask, what is my profit target? All right? This is what most traders like to ask right off the bat, but we save this for the 3rd question. And the reason why we're concerned about a stop placement, that's going to help us find out where our target level is. So if we're going to be buying right here, and let's say the trade doesn't work out and it comes down to these levels and we're stopped out, how many points, not how many dollars, how many points will we be losing, will be risking? And that comes out to 15.5, okay? So we know prior to entry, well, I'm risking 15.5 points. And you can tell yourself, that's too much risk for me. Or you can say, that's fine. But see how you're in charge. You know what's going on before you even enter into the trade. Now, if this is admissible, you want to buy maybe 100 shares, maybe you want to buy 10 shares. It's up to you. What you want to do then is double that amount. So 15.5 times 2 comes out to 31. And we add that from where we would be entering. And this is our exit. So we're going to be basically making twice what we risk. This is called risk-reward ratio. Very simple, very basic, I know. I'm sure many of you have heard this. But I'd venture to say that probably only 10% of you even apply it to your trading, okay? Remember, we're trying to make you consistent traders. So we want you to make at least twice double of what you're risking. And that determines where your exit level is. In this case, it would be 563. Okay, question 4, the fourth and final question is, how do I protect my profits? In other words, once I'm in the trade, how do I protect my profit? Because how many of you, I'm sure most of you, we've all gone through this, you're in a trade and you're doing very well, you're making money, and then some news comes out or some event around the world and it goes entirely against you, causes the market to shift, and then what you thought was a nice profitable trade has just turned into a loser, right? And then you turn into a long-term investor. Now you're holding it on, hoping and praying for it to turn around. So you have to have a way to protect your profit. Most traders don't know how to do this, though. It's very subjective. So here's a plan that we teach our students. It's called the 50% rule. So what you want to do is say, if I'm going to be entering here and I'm going to be exiting here, what I want to do is once I get to the half point, 50% level, if price reaches anywhere around there, it doesn't have to touch there. It can be right before there or even after there. But once it gets around these levels, I want to move my stop, which is right here, to unchanged. That way, if something happens, some news comes out or something happens in the world and it goes straight down, I don't lose any money. Remember, the worst feeling in the world is to have a trade, be in a trade where you have a profit, and then all of a sudden it goes against you and now that profit turns into a loss. So let's see this unfold, okay? One day it goes higher, okay, we're feeling good about ourselves. 2 days, we're kind of just hovering around the same price, but on the third day, guess what? We're at the 50% level. So we are going to cancel this stop, excuse me, and move it up to here. So we'll move stop to the entry price. Now we are playing with the house's money. We have no risk at all for all intents and purposes, and we can basically say this is a free trade, okay? Now, this is the way trading should be. You see how I noticed these 4 questions I told you? See, there was no mention to find out what the earnings were or what support and resistance was or what about overbought, oversold. Remember, it's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify it. Remember, trading is really simple. It's the trader themselves, it's us who make it more difficult than it has to be. But if you follow these 4 simple things, now the only thing left to do is simply watch the trade unfold. You see, trading, if you're doing it correctly, you should be basically fishing. It's like fishing. You're simply there out on the boat, you cast your line, and you just wait. Same thing with trading. If you're yelling and screaming and you have 20 screens in front of you, 100 indicators, the way I was some 46 years ago, and you just have so much going on, it's hard to keep track, that's not really trading. That's more of gambling. Okay, but if most professional traders just sit back and watch. They're just waiting. That's the way professional traders trade. Okay, so let's watch this trade unfold now. We're trading with the house money. We don't have any risk at all. And in 1, 2, 3, 4 days, guess what? We got right up to 563, so we exit with a 31-point gain. So in a matter of a couple of weeks at most, we made 31 points with very little effort, with little risk once we got to the 50% level, and very anxiety, existent. It's very, very simple and very easy to do. And we see in the next 3 days, price went a little higher, but guess what after that? So that was a nice exit, okay? Trading is really simple. Just get out of your own way. Let's look at another example, okay? This time we're going to be looking at EL, Estee Lauder. All right, this was just coming into mid-September, October. We see the market is going lower. All right, so we're in a downtrend. Lower lows, lower highs. But what do we have here? All right, you took that $10,000 course on candlesticks, right? This is a morning star pattern. This is a very common and very prominent reversal pattern where it's very bullish. So you say to yourself, wow, okay, we most likely hit some type of a bottom. Steve says to be in sync with the market. This is telling me that the market wants to go higher, so I'll be on the right side if I buy. And you wait a day and you say, wow, so that was a good signal. So I'm going to buy here because I want to be in sync with the market and I want to be on the right side. And obviously this is a very bullish candle pattern. And so I'm going to take that trade. I'm going to go long and buy the stock, okay? Well, we didn't ask the 4 questions. First question, am I on the right side of the market? Now, I know you think you are. Most traders do think they are. But most traders who fail thought they were on the right side of the market. Most traders that have a loss think they're on the right side of the market. Remember, the first thing you must do, regardless of what market or what time frame, is to apply a 50-period moving average. And then you ask yourself, where is price in relation to that 50-period simple moving average? If price is above the way it was in the previous example, then you only have a buyer's bias. You look for buying opportunities. But if price is below the way it is here, the odds are against you that any buy setups are going to work. They're against you. And remember, trading is about putting the odds in your favor. It's not about being right every time, but it's a numbers game. It's about trying to put the odds in your favor so you have an edge. So we know now that price is below. So there's no reason we should ever consider buying this. The odds are against us, okay? Now, once again, let's say you're a pullback trader. You saw that there was a little 2 or 3 day bounce here, and then look what happened. It went much lower. And so we're basically doing the same thing here. So you tell yourself, okay, I'll follow this. I'm not going to buy. It's below the 50-period moving average. I'll sell, but I'm not going to just sell at the market. I'll wait for it to trade 1 tick below here before I go short. And that's 143.70, okay? So we know where we're going to be getting in at an entry level, which leads us to question number 2. Where do I place my initial stop? And we're going to use the same generic place. We're going to use, in this case, a pivot high. If we go back in time, we see where a high was made, the last high, and that's right here. And in this case, it kind of creates this little arrow head. We have a high made with 2 lower highs on each side of it. So that's our pivot. So this means if we're wrong, if we trade there and get triggered, but then we go straight up, this is where we'll get out right here. Okay, that's how much we'll lose. Which brings us to question number 3. Now we ask, what is my profit target? Well, that's why we initialize the stop placement first, because that's going to help us figure out what our profit target is. Because remember, if we enter to go short here at 143.70 and it goes straight up after we get in and we get stopped out, we ask ourselves, how many points would we lose? Not how much money would we lose, because it's going to be different for every trader. Somebody may short 100 shares, somebody may short 500 shares. So we ask ourselves, how many points? Because that's what everyone has in common. And in this case, it'll be 15.25 points. So you can tell yourself, hey, that's way too much. I can't risk 15.25 points. Or you can say, yeah, that's fine. I don't mind risking 15.25 points. So you're in charge. Remember, we do not have the type of company where we say, you must take this. This is a system, and everyone has to enter at the same place. Everyone has to exit at the same place. Everyone has to place their stop at the same place. No, we don't believe in systematic trading. We're more of a strategic trading where we're still about rule-based, but about 70% rule-based. And then we leave the 30% for you to decide how you want to enter, how you want to place your stop, how you want to exit. I'm just giving you some basic ground rules for these 4 basic edges. Now, if you decide to take this and say, okay, I can risk 15.25 points, what you want to do is double that amount. And double 15.25 comes out to 30.5. So you subtract 30.5 from your entry, and this is your exit target, 113.25. So if the trade works in your favor, you'll be risking 15.25 points, but you'll be making, if it works in your favor, 30.5. That's 2-to-1 risk-reward ratio. You are making double what you're risking. And remember, over time, you'll be a consistent trader if you apply that to any method you're trading. This leads us to the 4th and final question. How do I protect my profits? Well, we're going to do the same thing. Even though we're going short this time, we're going to apply the same 50% rule. So if we got short here, and if this was our target right here for profit, well then, if we get anywhere halfway or close to halfway, 50% level, I'm going to move this stop down to unchanged where I entered. So let's watch the trade unfold, okay? We got short on the next bar, and it's starting to go in our direction, but not really doing a lot. kind of bounces a little, but we're just basically breaking even to making a little bit. Now it's starting to slowly go a little bit lower. We're still in the trade. Remember, we're not stopped out, so there's no reason to worry. You know, a lot of traders at this point, they start saying to themselves, wow, nothing's happening. I'm getting kind of worried. I've been in this trade too long. I'm going to get out, or I'm going to look for something else. Well, sure, you're always free to do that. But remember, trading is like fishing. You have your plan in place and you just wait if you're just following a professional's point of view. So we're just basically waiting here. We're either going to get stopped out with a loss, which is okay, or we're going to get to the 50% level, which we ultimately did right here. So at that point, even though it took us the better part of 3 weeks or so, we will move this stop down to unchanged, okay? We'll move our stop to entry price. Now, once again, we're playing with the house money. We can't lose, because basically if it turns around and all of a sudden it firms up and price starts to go up, we'll basically just break even. Remember, the only thing left to do is just to watch the trade unfold. Trading is simple, just get out of the way. So now that we're at the 50% level, our stop is unchanged and we have our target price, we have a limit in here, we just sit and wait like fishing. And in 1, 2, 3 days, we've got a 30.5 point profit. Extremely simple, but a very powerful way to trade. You can apply one or any or all of these edges to your current trading method, or you can make a method. You can, if you're the type of trader who likes to devise their own method, you can devise your own trading strategy based on these edges. But trust me, I've been using them for 46 years, and these are what are going to make you a consistent trader. So let's review what we taught you today. These are edges that will change the way you trade, in my opinion. I strongly believe that. So you ask yourself these 4 questions before you even enter into the trade. The first one is, am I on the right side of the market? And the easiest and most powerful way to determine that is by applying the 50-period moving average. If you trade 5-minute bars of the E-mini or weekly bars of crypto, it makes no difference. Have a 50-period moving average on your screen at all times. If price is below, then you should have a seller's bias and only look for sell signals. Regardless of what strategy you want to take, it doesn't matter. Whatever strategy or technique you want to trade, it doesn't matter, but it should have a negative or seller's bias. But if price is above, you should have a buyer's bias and apply any strategy or technique to go long. If you apply that simple rule, that first rule, I really think it'll increase your odds for consistency tremendously. Secondly, where do I place my initial stop? And once again, in our courses, we offer upwards of 6 or 7 different stop placements. But we share with you just the most common one, which is the most recent pivot low or the most recent pivot high. You can use one of your stop placements. It makes no difference, but you have to have a stop placement in place at all times. Thirdly, what is my profit target? Well, the easiest way to determine that is to measure where your entry is and then your initial stop and how many points, not how much dollars, but how many points would you lose if the trade went against you? And then simply double that and add it to your entry point. That will generate your profit target. And then lastly, how do I protect my profits? Well, you have your profit target and you know your entry point. So when you get half the distance to your profit target or anywhere around there, simply move your stop to unchanged. Now, this isn't going to happen every time, but when it does, you're protecting your profit because you have a nice profit. And that way, if it turns against you, the worst that can happen is you'll break even, okay? Remember, as my mentors taught me, what has sustained me now for 46 years, trading is really simple. It's the trader who makes it more difficult than it has to be. But once you simplify your trading and let go of all this, what my mentors said was useless noise, that's when you'll start to become a consistent trader, okay? Now, I want to give you some homework. Go back and use any or all of these edges I just shared with you. Go back and look at your last 10 or 20 trades and see if they could have helped or increased your odds for consistency. I strongly feel that they would, even if you just use the very first one, which is the 50-period moving average. Remember, that's designed to get you on the right side. Most likely, if you've had a series of losses, it's because you're out of sync with the market and on the wrong side of the market. Trading is a numbers game. We just want you to be consistent, okay? Now, we have a great offer for all of you today for attending. We really appreciate it. We hope you learned something. But how would you like to learn some more edges? How would you like to learn a little bit more about trading as well? Well, we're going to offer you our insights, wisdom, and trading strategies from the floor offer. This is the book I wrote regarding what I went through on my days on the floor. In fact, it's a firsthand experience of trading on the stock exchange floor. As I said, I was on the trading floor of the Pacific Stock Exchange for 16 years, and 9 of those years, I was a specialist. I'm going to teach you what I learned from a top floor trader. These were specialists themselves, and show how it turned my trading around. Also, this is the best part about the book. I'll give you a trade-by-trade account of the crash of '87 on the exchange floor. This was just a phenomenal experience I had, because being a young trader, I'd never experienced a crash like that. And I know compared to today, it doesn't seem like it's a lot, but at that time, it would have been comparable to roughly between a day being down anywhere from 3,000 to 5,000 points in just one day. And it was really an amazing experience, and show you exactly how it was to trade in those days. Remember, we didn't have internet. We didn't have the high-speed electronic trading we had then. Everything was done by hand signals, and just trading by inter-exchange. It's a really great trade-by-trade account of what happened on the crash of '87. And then detailed explanation of what it takes to become a consistent trader, along with some trading techniques and methods that I'll share with you in the course, or in the actual book. Now, this ebook is normally priced at $38, okay? What we're going to do is discount that tremendously. That in and of itself is tremendously inexpensive, but we're going to discount it for all the attendees today to only $9. $9, okay? You can't even, some places go out and get a cup of coffee for less than that. But for $9, you'll get that great ebook that's yours to keep. That's a 75% discount, but that's for today only. After that, it goes back to the original price of $38, okay? It's jam-packed with so much information, things I've learned and accumulated, and I think it'll really be an enjoyable ebook read. But we're not going to stop there. We have an extra bonus, okay? Now, after reading the book, or after hearing what you've learned today, along with your purchase of My Secrets ebook, we will include a 50% discount on any other product we sell or teach at Specialist Trading and Pro Trader Strategies, my sister site. Okay, we have dozens of courses for trading. What I taught you today were just edges and just a groundwork, a benchmark for our strategy. We actually have upwards of 10 different strategies and techniques and indicators that you won't find anywhere else. These are things that I've taken from my days on the trading floor, and you'll only find them on our platform as well as on our company. So you can research them, and you can contact Pro Trader Strategies or Specialist Trading, and they will give you hints. I know most traders promise themselves at the beginning of every year how their trading is going to be that year, right? You make all these goals, and you have all these dreams of what you're going to be making. Maybe you want to take that dream trip you've always thought of before. Maybe you want just extra income on a monthly basis. And most likely, I would say the majority of traders never reach those goals, okay? Now is the time to turn your trading around. You owe it to yourself. Take it to the next level. Come on board. Take advantage of this extremely low price, and we think you'll be really satisfied with taking advantage of that bonus as well, okay? Here's how to take advantage of it. Contact my sister site, which is Pro Trader Strategies. They're in charge of all of the courses and all of the discounting. I would give them a call at 310-598-6677, and you can also see, here is the email, I should say the link that will take you to that as well, okay? Now, I'm going to leave this information up here for anyone. If we have any questions, I know we have a little bit of time left. I don't want to take all of the next presenter's time. But if we have some questions, I don't know, Jeff, if you'd like me to take them, or I can read them, or you want to read them, it's up to you. Let me see.
I don't have a lot of questions coming in yet. Tavonda says hi.
Okay, hi, hello.
Let's see. I was actually just trying to type in the URL that you have.
Well, you know, let me bring up something that is commonly asked, and maybe a lot of people are thinking the same thing. The first question I get usually is, does it have to be a 50-period typical moving average? Can it be something else, exponential? Can it be smaller? And you know what? Yeah, this is not written in stone. It's not systematic where we've gone back 50 years and back tested it. This is mainly just a way to tell you what side of the fence to be on. So if you feel, in fact, we encourage our students, if you feel that a 34 exponential moving average works much better for you, then by all means use it. It's not so much the actual length of the moving average, it's the concept that is the most important. In other words, we want you to be in sync with the overall trend. So that's what's most important. If you find that for your style of trading or for what market or time frame you trade, another moving average works better, that's fine, just as long as you use the same concept of if price is above, you'll only have a buyer's perspective. If price is below, you'll have a seller's perspective, okay? I hope that makes sense.
Yeah, it does. Charles Gradley says, great information.
Oh, good. Yeah, I'm glad. I mean, remember, we're an educational company, and we always want, we don't just want to give a sales webinar. We always try to teach in any webinar we do so that someone can go away with something. And hopefully, you'll be able to use this information right away, where you can start looking at it right now in the markets. But I would say just practice with it for a while so you fully understand it.
All right. And then let's see. And then in addition to that, I don't see a lot of questions, but you had talked a little bit about range of the bars and needing it to be within the top 1/4 of the bar.
Yeah, well, that is a particular entry method. But what we've talked about before, this is another thing we teach. We call this our top bottom 25% rule. And what this states is that whatever bars you're looking at, if you are above the 50-period moving average, and if you close in the top 25%, well, now you've not only got the overall trend in favor, but you've got the short-term trend. Because when you have bars that close in the top 25%, that's the short-term trend telling you it's going to go in that direction. So what we try to do is keep things simple. Once again, not look at two different time frames and different monitors, different screens. Basically, if you want to know the overall and the short-term trend, if they're in sync with each other, you just see if price is above the 50. And then if you see that there's a number of bars closing in the top 25%, that's a really good sign. It's just as simple as that, and it's really cut and dry.
Right. Very cool. I don't have any other questions for you.
No, that's fine. I guess I just, we have everyone so amazed. They're probably testing everything on their computers.
You do a really, really good job. I'd like to talk a little bit about the add-on for strategy number 4.
Sure.
How it fits into Metastock. Because again, it does make it very, very easy to find these things and kind of pull them together. So thank you very much, Steve. Appreciate you coming in. Let me go ahead and kind of show it. Oh, Barb does have a question. What time frame for swing trading? What time frame do you use for entry?
Okay, well, Barb, I'm not trying to be condescending or arrogant, but remember, as we stated, that's for you to decide, because we have students that say, Steve, this is great. The best time from this is the 10-minute chart, and someone else will say, no, this works tremendously for weekly time frame. See, everyone comes in with different baggage and different risk parameters and different ways to trade. So it's something that we always tell our students, listen, paper trade to find out what works best for you, because there's no one thing that's written in stone that is the best time frame or the best stock. These are things you all have to find out on your own. And like I said, I'm not trying to be condescending, but it really is the truth. That's what we teach all of our students.
All right. Do you know of a good way to find entries using strategy number 4?
Well, I know a good way is to actually scan for them. You can do that. I know that's probably the best.
That's a great answer.
Yeah.
Let me show you how to do that. Thanks, Steve. I appreciate you.
It's almost like we reversed that.
All right.
Thank you, Jeff.
Very much appreciated. Thank you, Steve.
Bye-bye.
Let me go ahead and show how to do that. Let me go ahead and make me the presenter here. Let me go ahead and show my screen. And we've got a chart of Costco up. But again, one of the biggest things, one of the nicest things is the ability to actually go in and find these particular patterns and these particular strategies. So if I want to run it, again, what I'm going to do is I'm going to go in and I'm going to open up the Power Console here. And I'm going to run with the exploration. So right here, I've got it ready to go. This is strategy number 4 by Steve Primo. I'm going to run it against the same group of stocks. And very, very quickly, what it's going to do is it's going to go through and identify those stocks that meet those entry requirements for me. Again, it's going to reject about 84% of them and just give me a list. It's like taking out the trash. It's going to take out all the stuff that's of no interest to me and find the stuff that is of an interest for me. So let me go ahead and kind of let this run real quick. We'll take a look at kind of what comes back. But again, this is a really, really nice way to kind of go in and identify those. I love scanning in with the Metastock program. And you can scan anything you want to. Stocks, futures, commodities, indices, you name it. So right here we've got long, prior long, short, prior short, and close. So if I kind of just sort this by longs, right now we have Diamondback Energy and Splunk that have a long opportunity. I'm gonna go ahead and open those. The P long just means it had a long opportunity on the prior day. Okay, that's what that means. So if I wanted to look for something that had a setup yesterday to see if it's triggering in today, I can do that prior long column. I'm gonna go ahead and open up speed log here. We'll go ahead and open up the chart. And right here, you can see it. If I want to attach the expert advisor for Steve Primo's strategy, we can come in here and do that. And what I'm going to do is I'm just going to go down to that specialist traders strategy number 4, which is going to be under S. That's not it. Actually, I think it's Pro Trader. Let me go up to it. Hold on just a second. Pro. There we go. Go ahead and attach that to the chart. It's going to go ahead and attach the expert advisor. Here we can see the buy signal coming in. If I want to get a little bit more information, a little bit more about what's going on with that, we'll go into view, expert commentary. And here we're going to have the strategy number 4 is a method Steve Primo was first introduced. It's going to explain it to us. It's going to give all of those good details for us. Does a really, really good job with that. So with Steve Primo strategy number 4, you do get the ability to scan for those. You get the annotations that exist on the chart, the expert advisor, the layout. One of the things that he includes with that is actually 12 training videos. And those training videos are actually very, very comprehensive. Here's a list of what's included, but he goes through the rules, the buy and the sell line, different techniques you can use for entries and exits, stop placement, position sizing, extending your gains. So as part of the package, you get actually complete access to their learning portal that's going to kind of go through all of the different ways to use this. And it's really, really cool. The price of the Steve Primo strategy number 4 is normally only $5.99. Here at the conference, we're going to do $4.99. We're going to offer that like everything else with a 30-day money-back guarantee. And you can take advantage of that by giving us a call at 800-882-3040. You can visit us online at metastock.com/specialisttradinga, or you can do it at metastock.com/saleschat as well. So give us a call. Let's help you get set up for that. If you like the way that Steve talked, you got 12 video courses that go along with that. You get a 30-day money-back guarantee. And it's a great strategy. It's something that Steve's been using for decades now. One of the very first strategies that he's used, the pullback momentum strategy number 4. So love to see it. All right. Real quickly, want to say thank you to cmtassociation.org for sponsoring today's event. Very, very much appreciated. Great organization, does a great job. In addition to that, let's do prizes. It is prize time. So what I'm going to do is this will be an audience participation prize. I'm going to have you guys, if you're watching us in YouTube or in GoToWebinar right now, I want you to give me a number. The number that you can give me is anywhere between 1 and 9,525. 9,525. That's the range that you want to get. And what I'm going to do is I'm going to tell you what the prize is. So let me go ahead and come into the prizes. And all right. So yesterday, Dan Passarelli came in and he did a really good presentation. The prize that we're going to give away is Dan Passarelli's strategy sessions. And here's the description I have for it. With this, you'll be able to get on the phone with one of Market Takers Trader Success Team members, explore your trading and discover what's holding you back and how to cover it. This is a $500 value. You get to sit down with one of their team members. They're going to actually talk to you a little bit about your trading, what you're doing, how they can improve it. It's something that they do. They call it a consultation session. It is normally $500. We're going to give away 1, 2. Well, Andrew, you are the first person that came up with a number. It was 3,500. So let me go to my list of signups and let me see who that equates to. Now, if you're watching on YouTube and you want to be part of the drawing and you've not registered yet, make sure you come in and register. There's a pinned comment at the top, metastock.com/traders-conference to kind of sign up for that. And number 3500 is Adrian M with a Gmail address. So Adrian, you didn't register with a country, so I can't tell you where you're from, but I can tell you you have a Gmail address and your name is Adrian M. So if that sounds like you, you may have very well just won a prize. So let me go ahead and make a note of that real quick. Okay. Congratulations. All right, wasn't that fun? All right, very cool. Moving on, our next presenter is Silas Peters. Silas is going to talk about his 3S code pattern, very, very popular pattern that's, that he's developed to do trading and that kind of stuff. Silas is a frequent contributor to our events, our shows. He does a great job. So there you go. Let's see. There's a big question that came in from YouTube chat. Can Metastock search rather than or in addition to volume, but instead for DDT, daily dollars traded? You could. It depends on kind of how you want to define that, Paul. What I'd recommend you do, get in touch with us, and we can kind of talk about different ways you can do that. You can call us at 800-882-3040, or you can get in touch with us at metastock.com/saleschat. Okay, and we'll help you with that. Thanks for the good question. Silas, how are you doing today? Let's go ahead and get you started. Silas?
Hello, can you hear me?
Hey, I can hear you now.
Hey, Jeff, how you doing?
I'm doing very well, thank you. Let me go ahead and make you the presenter real quick. We'll make sure we can hear you and we can see you.
All righty, let's see. All right, can everybody see my screen here?
Yeah, we can. Thank you.
All right, awesome. Are we ready to go, Jeff?
It's all you.
All right, perfect. Thank you so much, Mr. Gibby and the Metastock crew. I want to do a quick audio check, make sure the sound is coming in. Let me find the questions box. And everybody should be seeing a slide there that says price action is king. And I'm still trying to grab this question box. All right, perfect. All right, thank you so much, guys. And again, thank you to the Metastock crew for putting on a wonderful show. Very glad to be back, very thankful to be back. Always a good crowd. And Metastock is a great company with some really good products. So I hope everybody is soaking it all in this week. And my name is Silas Peters from Trades Trending, and it looks like we are good to go. Now, let's get started. I don't want to waste anybody's time. We must start with the risk disclaimer. We all know trading is risky. Past performance is not indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade, i.e. you can lose money in trading. So with that being understood, I'm going to go ahead and get right into it and ask you, what do you trade? What does everybody trade in here? I'd like to kind of get an idea of the audience that I'm speaking to. Do you trade stocks? Do you trade options, futures, Forex, maybe even cryptocurrency? What is everybody trading? So I trade all of these actively: stocks, options, futures, and FX. And looks like we've got futures, we've got stocks and options, stocks and futures, FX, futures, and FX, weekly options. And it really does not matter what you trade, what I'm going to be sharing with you today, because price action is king. And it's what I call my 15-minute trading blueprint. I've been using this for almost 20 years now to trade the following markets, and it continues to absolutely crush it. The best thing about it is its simplicity. It's truly a mechanical, stress-free, emotion-free trading method that can be applied literally on any market or time frame. So let's get right to it. What I'm going to share with you today is highly accurate. All markets, as I just said, works in all time frames. It's 99% mechanical. And most importantly, it is simple, and it can even be used for small accounts. I've used this strategy with $2,000 accounts, $20,000 accounts, even $100,000 plus accounts. I've used this in every market situation, from the 08 financial crisis, roaring bull markets, traded it through debt crises, government shutdowns, presidential elections, flash crashes, and more, from scalping and intraday trading to swing trading for a few days, and even position trading for weeks and or months. You can do this with small or large accounts and can be done in as little as 15 minutes a week if you wish. Now, before we dive in, let me introduce myself, who I am, and maybe why you should listen to me. My name is Silas Peters. Again, I'm a husband. I'm a father to these beautiful blonde hair, blue-eyed beauties, standing here in front of my alma mater. And 3 days after I graduated from UA, I actually sold my car, moved north to the great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets, working at the Chicago Board of Trade. I was bitten by the trading bug, never really looked back. While there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs. What does that mean? It meant our 24-hour desk was placing, executing, and managing trades in the size of several hundred or thousand contracts. We're talking multi, 6- and 7-figure position sizes where a single tick in the movement of a market meant $300,000, $500,000 was not for the faint of heart. It's also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office from the ground up. We built firms from scratch to units with several hundred clients and block trading in the several 100 and 1,000 share order size. I've also worked for a private family office where we manage around $2.5 billion, covering everything from investment portfolios, tax and financial planning, real estate, timber, farmland, you name it. And then in 2016, I launched my publishing firm, Trades Trading. It's here where we developed a community with thousands of traders and investors that use the education and tools that I've developed over the years to help them become consistent and profitable. And then I'm also a partner and co-founder of Blue Marlin Advisors, our investment advisory firm. Now, let's talk about my journey, though. My journey was not always easy. There was a learning curve, several obstacles and hurdles on the path to where I am today. The first step, obviously, learning. School cannot teach real life experience in the markets. In the beginning, I made money. I made a substantial amount. Was I lucky? No. But ignorance and greed cost me my profits. I blew it up account, then blew up others in what I like to call revenge trading. I'm sure a lot of you can attest to that. And these were extremely humbling experiences. I almost gave up, almost quit. Nothing seemed to work. I always seemed to be on the wrong side. Guess what got me back in the game? I was in a dark place. I went back to the very first trading setup I learned almost 20 years ago, and I got back on track. Started making wins again. I'd gone at the reservation looking for the elusive Holy Grail, but my journey ultimately led me back to where I first started. So I went back to my roots, worked my repeatable process, and found overall consistency. Enough about me. Let's talk about you. Does your trading desk look like this? This is a bad joke. I found this on the internet. Thought it was funny at the time because I feel this is what a lot of people on the outside looking in think this is what trading is about. And really all that this does is lead to paralysis analysis. So who here is or has been a victim of paralysis analysis? Raise your hand. I'm raising mine. Per Wikipedia, it's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect, paralyzing the outcome. So who here has done all the analysis they thought they could possibly do, get ready to pull the trigger, and then what? They've got this line crossing that line, or somebody on CNBC says you should be buying instead of selling. And this is a very, very bad process that a lot of people get caught up into. So my agenda and promise to use this, we're going to learn a simple and mechanical setup together that is repeatable regardless of the market or time frame. And I'm going to paint a quick picture for you. We know that markets are constantly moving up and down. There's billions, if not trillions, of capital flowing through liquid futures, liquid stocks, ETFs, commodities, currency markets, all of the time. And most people are getting it wrong. They're buying high, they're selling low. That's the exact opposite of what we're taught. And so what I'm going to show you here is a very simple reversal price action setup that can be used for any market or time frame. And I think the most powerful thing that can be done is show you proof. As they say, proof is in the pudding. So let's learn about this exciting strategy right now. This is exactly what you're going to learn. You're going to learn how and why you would have been a buyer here in GE for a 36% move, why you would have been a seller in GE for 26% move to the downside. Barnes Group, why you would have been a seller right here for a 21% move to the downside, why you would have been a buyer here for a 63% move to the upside. Bank of America, we're talking boring stocks here. 28% move to the downside, followed by a 60% move to the upside. Futures traders, this is a 4-hour chart of gold futures, why you would have been a buyer here. That's an $1,800 per contract move in gold futures. If you like to day trade, we've got an 8-point trade here, a 2.5-point trade here, a 6-point trade, and a 4-point trade. This is almost $1,000 a contract in a single day. Is everybody starting to see the potential here? How about Forex traders? Aussie yen, 150 pip move, followed by a 445 pip move, followed by a 160 pip move. These are just target one projections. We're going to teach you how to even take advantage of these moves further. Now, with all of the examples I just showed you, can it be too simple? Well, we know trading is not easy. It's not easy at all, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. I tried all kinds of stuff, and most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and gadgets, and started focusing on price action following one simple pattern, that is when it started clicking. So if you're sitting here as a new trader or a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader back to a winning trader. I am telling you right here, right now, that this is a simple mechanical setup that anybody can learn. And you will keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. How you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we'll be discussing today is the 1, 2, 3 top and 1, 2, 3 bottom. Who here is familiar with the 1, 2, 3 pattern? Probably a lot of you. Let me see. I see a lot of Y's, a lot of yeses. Type of me, ME. Some knows. This is one of the most fundamental technical patterns in the textbook. We're talking about technical analysis 101, but highly, and I mean highly, overlooked by most traders. So let's talk about the setup. Again, it's price action based, and guess what? Price action is king. And speaking of king, did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at maps, population counts, traffic patterns, competitive analysis, on and on. So they find the perfect location for a new store. Burger King approaches it differently. They wait to see where McDonald's opens up a store. They open one up across the street or down the block. They get the same result with a lot less time and effort. Now, when we relate this to trading, we can let all of the Wall Street traders and institution traders do all the research on which markets to buy and sell. All we have to do is look at price action, which takes into account all of their fancy processes. Basically, we're Burger King to Wall Street's McDonald's. So the setup is price action based. As I've said, the pattern is comprised of a low, a higher high, a higher low, and a break of the higher high in the case that we're going long, inverse if short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. Strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. And I will stress that it works extremely well when the pattern sets up at significant areas of support, resistance, or supply and demand, other high probability patterns such as head and shoulders, tops and bottoms, and more. So let's take a look at the basic mechanics here. We're going to start with the 1, 2, 3 bottom. When we're looking for 1, 2, 3 bottoms, that means that we are looking for a bullish setup. We're looking to go long. We're either looking to buy that stock or buy call options on that stock or on that market, expecting it to go higher. So as price trades down and finds the lowest low or finds support and retraces, we get our number 1. As the market retraces higher and stops printing these higher lows and pulls back, we get our number 2. As the market retraces and stops printing these higher lows here, we get a number 3. 1, 2, 3. And a 1, 2, 3 bottom trader means that we're looking to get long on breaks or closes above the number 2. Look at the 1, 2, 3 top. Same rules apply, but in inverse. When we are looking for 1, 2, 3 tops, we are bearish. We're looking to go short, meaning we're looking to short that market or buy put options, expecting it to go lower. We are bearish, okay? So here, when we have prices stop printing highs and pull back, we get our number 1. As the market retraces, stops printing these lower lows, we get our number 2. As the market retraces and stops printing these lower highs, we get our number 3. 1, 2, 3. 1, 2, 3 top traders are looking to get short on breaks or closes below the number 2. Now, one of the great things about these 1, 2, 3 setups is you don't really have to worry about these first 2 legs. You don't need to be glued to your screen watching this all day, unless maybe you're scalping. But all you have to do to cash in on 1, 2, 3 setups is spot when it's about to go past the number 2. That's simple. So let's get into some charts because seeing is believing. Let's go to the 1, 2, 3 top and let's look at this chart of the Australian dollar, the 6A futures. If you don't trade futures, you could look at the ETF FXA. Forex traders could look at Aussie USD pair. Same setup, same pattern in each of these markets. So we're looking at a daily chart and we have a red number 1. Now that red number 1 is a 52-week high. We don't require a 52-week high or a 52-week low, but for this example purposes, we're going to be looking for that. We'll talk about ways later where we can dial that in to find more opportunities. So we have a 52-week high that gives us our number 1 point. As the market retraces lower and pulls up, we get our number 2. And as the market stops printing these lower highs and pulls back, we get our number 3. Now, this market could have traded all the way up here as long as we didn't take out that number 1. We have a 1, 2, 3. So we know what? We know that with a 1, 2, 3 top, we're looking to get short on breaks or closes below the number 2. So you say, Silas, this is good, this is great, but what about the other important parts of the recipe, the other ingredients? Where's my risk? Where's my stop? Where am I taking profits? All great and valid questions. So we know we're looking to get in here. Our initial risk is always starts above the number 1 high. Our target is the distance between the high of the 1 measured down to the low of the 2 measured down. So you'll see we have basically a 1-to-1 risk reward. It's very important to let the market materialize in its anticipated direction. And as you see, as the market starts breaking down and taking out these other swing lows, we can then do better than a 1-to-1. We can then move our stop to where? Where's the next logical area? That is going to be above the number 3 high. So we've quickly cut our risk by say 50, 60, 70% in this case, and it comes down and meets our 225 tick profit objective. Let's look at another example here. This is a daily chart of Walmart. Again, we have a red number one circle, Y, that's a 52-week high. That starts our number one count. We have a 1, 2, 3 pattern. We know we're looking to get short on breaks or closes below the number 2, either get here or here. And we know everything we need to know about the setup, while 98% of other traders are out there asking, where am I going to get in? Where's my risk? Where are my targets? We know with this setup, our initial stop is going above the high of the 1. We know our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. And that's about $5 in this example. Let's look at 1, 2, 3 bottom examples. Same setup, same pattern, but in bars. Here's a 15-minute chart of the E-mini S&P. So if we're looking at an intraday chart, does it make sense to look for a 52-week high or 52-week low? No. On an intraday chart, we're looking for what we call session highs or session lows. So if you didn't know already, futures and Forex virtually trading around the clock, 23/6. We have an intraday chart. When you start your trading day, you're going to look for new highs or new lows. So if that's at the 3 a.m. European Open, if it's the 9:30 Eastern Cash Open, if it's the last hour of the day, whenever, you're looking for new highs or new lows. So this is a new fresh low for the day that gives us our number 1 point. We have a 1, 2, 3. We're looking to get long on breaks or closes above the number 2. So let's talk about a couple of different entry methods. One, you can take that initial breakout. Sometimes that market will break out above the number 2, zip up and hit your profit target. A second alternative entry method that I prefer is either wait for a retest and or a hook back above. So we get a break above, market rolls back down, it comes back up for what I call a second pass, and then we can get in on that second breakout. So sometimes if you use this method, the market will zip up, hit your target, and leave you at the train station. No need to get your feelings hurt. There's plenty of opportunities. But by utilizing this method, sometimes it can help keep you out of false breakouts. Sometimes the market will come up, and then it will do this number and end up stopping you out. So this second pass is one that I prefer for additional confirmation. This is a weekly chart on Apple. Here we have a multi-week low right here. We also have a double bottom. Market breaks above the number 2 here on this big bullish candle. We have a 4 or 5 weeks of consolidation. We come back, retest, hook back up. That's our confirmation to get long Apple. How? We buy Apple stock, we buy Apple calls, call debit spreads, sellable put credit spreads, whatever your flavor or style may be. Now, I hate to burst your bubble. They don't all work. There are failed trades. There is no holy grail in trading or in life. And this is a trade I probably took in live account. We've got the market grinding up, making new highs. We get a new number 1 point. 1, 2, 3. If you took this initial breakout, you're short here. If you waited for that second pass, you got short here. You're up a couple points or so. And if you sat on your hands and didn't do any type of risk management, you see the market comes up and stops you out above the number 1. If you did exercise money management, you moved your stop above the high of the number 3, and you're stopped out right here. Guess what we got? We got another opportunity though. This high is higher than this high, so we actually get a new 1, 2, 3 count. Market breaks down and it ends up trading to the downside. Now, this is what I call a no trigger or avoided trade. It is what it is, neither good, bad, nor ugly. Here we have a 1, 2, 3 bottom. We're looking to go long here, but the market rolls over, takes out that number 1 low. We start to count over. 1, 2, 3. We're looking to go long here. Market rolls over, takes out that number 1 low. We start to count over. 1, 2, 3. Looking to get long here, and we're triggered into the trade. Now, let me tell you why I love when this happens. We have price doing what? Price is making lower lows, lower lows, lower lows. But if we put an oscillator on this, such as a MACD or RSI, stochastics, whatever, it's probably doing this. So if we have price making new lows and our oscillator is doing this, what do we have? We have divergence. And when you marry that up with this pattern, we have a very, very high probability situation. Let's talk about 1, 2, 3 pattern trade management. Again, the confirmation of entries on a break above the 2 or B point for a long, or a close below the 2P or P point for a short. Exit strategies, I would say if you're only trading one contract, one share of stock, one option, one futures, whatever it is, go for the distance between the 1 and 2. It's uncanny how more often than not we'll have a setup, and here's your trigger, market trades up. Remember, our equal distance is our initial target. Uncanny how often it will come tag that and then often reverse. If you have the ability to trade multiple contracts and scale out, I would say, hey, take a third, half, 2/3 off at that initial target, and then you trail your balance or your rest of your position with whatever works best for you, whether that's using a trend line or a 2 or 3 bar candle, stop, moving averages, par, SAR, fib numbers, and so on. Now, I showed you that this setup works on any market, whether you trade pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, or the Polish zloty. I've also showed you that it works on any time frame, whether you trade tick, intraday charts such as 5, 10, 15 minute, hourly, 4-hour, even position to daily, weekly, monthly, and more, and on any trading style. So what is your trading style? Are you a position trader? Are you a swing trader? Are you a scalper, day, tick? What is everybody's trading style? See, we are. So we've got day, we've got swing, day and swing. We've got scalper, intraday, position, weekly. And the reason I ask that is because you have to figure out and determine what your bread and butter is. I'm not going to tell you that this only works on a daily chart of Apple or a 5-minute chart of NASDAQ, because it's not true. It works on all markets and all time frames because price action is universal. These are some of my favorite time frames here. I also like the 1 and 2 minute for confirmations. I love the hourly and 4-hour for intermediate swings, and of course the daily and weekly charts to hold positions a little bit longer. Now, you've seen the proof. Let's look at some real trade examples, not to say that what we just looked at were fake. They were real by all means, but let's look at some examples we've utilized in some of our services. So we're going to take a look at crude oil, okay? So I'm going to look at this chart. You guys and gals can read all this text on the right, but we're going to look at the 3 examples and work left to right. So our first example here, we have a new one. That's a 52-week high, okay? And we have a 1, 2, 3 pattern. We know in advance where we're looking to get in, where our risk is, and where our targets are. Our risk is above the number 1 high. Our target is the distance between the high of the 1 measured to the low of the 2 measured down. And we quickly meet our $3 or $3,000 contract objective. I get asked, Silas, does this work in range-bound or consolidating markets? Well, the answer is yes. I'm looking for new highs or new lows, but you can see we have 1, 2, 3 patterns here inside this range or consolidation. And we get a new count. This high is greater than this high. We have a 1, 2, 3 top. And let me tell you why I loved and got excited about this pattern. I know not only do I have a high probability pattern that I've been teaching you, but I also know at this time of the year from a seasonal perspective that crude and energy markets in general typically gravitate to the downside. So when we have this high probability pattern plus seasonals line up, that is what I call the perfect marriage in trading. So we get short here. We reach our $4 or $4,000 per contract price objective. And then all we do is we trail the market down until we either get a reversal or we get stopped out. This market moves down another $20,000 a contract. We start to get a new 1, 2, 3 here. Market never takes out the number 2. We actually break down. We sell off another $10,000 a contract. before we finally get a final 1, 2, 3 bottom down here. That meets our $5,000 per contract price objective. And I want you to remember this chart because we'll come back to it. These are recent trades in crude oil. This is a $5,800 contract using this pattern. This is a $4,700 per contract using this pattern. Let's look at gold. This is actually GLD, the ETF that tracks gold futures. I like to look at gold futures because you're not going to see all these gaps. But again, it's the same pattern. Okay, so we have a number 1 point, 1, 2, 3. We're looking for a $4 target. We reach that here. We get a new number 1 low. 1, 2, 3, double bottom as well. We trade above the number 2. We reach our $2 profit objective. So you may say, Silas, what about this stuff in the middle? Can you trade it? Well, technically you can. You've got a little 1, 2, 3 here, trades up. You've got a 1, 2, 3 here, and it trades lower. I'm looking for new highs or new lows. I'm not so interested in this stuff in the middle. So here the market is grinding lower. We get a new number 1. We get a 2, we get a 3, but look at this guy. This guy takes out this one. So we get a new number 1 count, 1, 2, 3 market gaps higher 2 days in a row. Wouldn't see that on the futures chart, but that's okay. The market comes down, retest, hooks back up. That's our confirmation to get long gold. We can buy gold futures. We can buy minis, micros, gold futures options, GLD ETF, or any other leveraged ETF. A recent setup in gold. So far, a $10,600 move in gold with this pattern and setup. Delta Airlines, this is becoming redundant by now. I'm just trying to show you how this is a repeatable process, repeatable pattern over and over again. We have a 1, 2, 3 bottom right here, $4 profit objective. Here we have a 1, 2, 3 top. Gaps down below the number 2. I personally don't chase those, but you could aggressively be buying put options here. Moves lower. We get another chance to short this high, higher than that high. 1, 2, 3. Again, aggressively sells off below the number 2. We get a small retracement, moves $8 down, and we get a new 1, 2, 3 bottom. Trades higher above the number 2. Sideways, comes back and retests, and then we zip up $8 or higher. Recent examples on Delta. Last 4 setups on Delta Airlines. This is not something that I can make up. Forex traders, Canadian versus Swiss franc. Here we have a 4-hour chart, double bottom as well, multi-session low. 1, 2, 3. Again, initial traders may take that initial breakout, or you can wait for the retest or hook back above. We reach our 70 pip profit objective. Well, what now? What's next? Well, we don't know. We just sit and wait for price to tell us what we should do next. We're making new highs. We're making new highs. We're making new highs. Are we looking for a 1, 2, 3 right here? Yes, we are. But price comes up, takes out the number 1. We start to count over 1, 2, 3. Okay, market takes out the number 1 high. We start to count over 1, 2. Market takes out the number 1 high. We start to count over. Finally, get our last 1, 2, 3. We break down. We come back up. We hook back down for that second confirmation entry. We reach our 40 pip profit objective. Canadian dollar versus Swiss franc. Day traders out there, how about a 5-minute chart of the NASDAQ? New session low, 1, 2, 3. We break above, we come down, we hook back up, reach our 13-point profit objective. We get a new session high right here, 1, 2, 3. We break down, we trade sideways, we have to pop some tums. Market finally breaks down, reaching our 20-point profit objective. This gives us a new session low, 1, 2, 3. Market breaks above. If you're lucky enough to get long on that retest here, you reach your 30-point profit objective in about 2 or 3 bars. 5-minute chart in NASDAQ. So why are you here? You are here to learn a simple and mechanical done-for-you strategy for all markets and all time frames. This is the part where I ask you, have I shown you enough proof? Have I shown you enough proof? There's really no guessing when to get in, where the market is likely headed, no guessing where to get out. If we had 100 traders looking at the same chart, we should have at least 99 seeing the same thing. There's always going to be someone out there that tries to overcomplicate, overanalyze. It's not necessary. This is not rocket surgery. We're trading a simple mechanical setup. But wait, there's more. But wait, there's more. What if this strategy was automated? What if this strategy was plotted onto your chart? What if the trigger entries and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be pretty freaking amazing. Well, you are in for a treat. Remember the case studies we went over, crude, gold, Delta, NASDAQ, and so on? These are those same charts, same examples with our special sauce loaded onto the chart. You are smart boys and girls. What about these green, red, blue arrows? These are 1, 2, 3 patterns. Green is your 1, red is your 2, blue is your 3. What about the white chevron right here? That's not a buy, not a sell. It's simply a visual aid waving at you saying, hey, we broken below the number 2. We broken above the number 2. We may have a potential setup. If and only if we do get a break of that number 2, will you get that chevron? And will you get our beautiful lines plotted onto your charts? So this blue line is that initial break or entry level. Your red line is your stop or risk. Your lime green line is TP1, profit objective 1. Dark green line is TP2 or profit objective 2. Remember, TP1 is the distance between the high of the 1 measured to the low of the 2 measured down. And TP2 is 2 times the distance of TP1. Now you see these green arrows. Why the heck are we seeing these green arrows? Because it's telling us we have new lows. We have potential 1, 2, 3s setting up. Here's that pattern that I talked about. We're looking to go long here. 1, 2, 3. Market never broke above the number 2, hence no chevron, hence no lines. We finally broke down and we got our last pattern right there. Here's that example on gold. Here's that example on GLD. We have our 1, 2, 3 bottom right here. We break above TP1, TP2. Remember, we don't see anything right here because we're looking for new highs or new lows. Market trades down. You see, we get a new number 1s, and then we get our last 1, 2, 3 right here. Gap, comes back down, retest, TP1, TP2, and you can see we're getting new 1, 2, 3 tops over on the right-hand side. Delta Airlines, again, same thing. Here's our long, here's our short, there's our short, there's our long. 5-minute NASDAQ. 5-minute NASDAQ, if you like to trade intraday, even if you like to scalp, you can use a 610 tick, 233 tick chart, works excellent. 1, 2, 3 top. Break down, TP1, TP2. TP2 hits TP2 to the tick, which happens to be a new session low. 1, 2, 3, break above, we come back up, hit TP1. We don't quite hit TP2, but it's close enough for government work. We go sideways. You see how it keeps you out of this choppy mess right here? We get a new session low. This low is lower than this low, so we get a new count. 1, 2, 3. Market just peaks its little head there above the number 2. We come back up, and then we get TP1. Notice while we're waiting for TP2, we are starting to get new 1, 2, 3 counts. We do finally hit our profit 2, and then we get our last 1, 2, 3 top. We break down, we come up, we hook back down, TP1, TP2, and then we start a new 1, 2, 3 bottom count. Now, is this training for you? Only you and you only can answer this. If you are new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise we talked about, the indicator overload, paralysis analysis, if you just want to simplify your process, maybe you're already a successful trader. Congratulations. You want to add another strategy to your toolbox. If you want a very specific step-by-step plan and avoid learning this on your own, this is something that could be for you. Something that you could even do part-time. You load your indicator, run your scans, and find very simple mechanical setups. Can you buy the stock? Can you buy the stock? Can you sell the stock? Can you buy call options? Can you buy put options? Can you sell bull put spreads? Can you sell bull put spreads? Can you sell bear call spreads? Google. Run your indicator, run your scanner with your target, entry, target 1, target 2. 4-hour chart of the Canadian dollar. Plot your entry, risk, target 1, target 2. 233 tick chart on the E-mini S&P. If you like more action, you want that action, 233 tick chart is going to give you all the action you want. Now, why do all the work when we can let technology do the work for us? Here I'm scanning across the 1, 2, 3 top in the Russell 1000, only stocks that are optionable, $20 a share or greater. I hit the green scan button. What would literally take me weeks to sort through now takes me seconds. I've got one monitor dedicated to multiple watch lists where I'm scanning across stocks, futures, currencies, across different time frames. This is what the indicator looks like on Metastock that will plot the 1, 2, 3 pattern for you. This is what it looks like on TradeStation. We've had it coded for TradeStation, NinjaTrader 8, Wealth Charts, TradingView, and MetaTrader 4. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me a process. I'm letting technology, i.e. my platform, scan the markets for me, locate the setups. I go to my platform for entry, and I manage that trade through its exit. And you can start doing so today with the 3S code. You can start profiting from these predictable patterns with the 3S code. Here is the offer you simply cannot refuse. We have opened this up for 25 people. You're going to get the 3S indicator, 3S code scanner, optimizer, access to my weekly strategy and scan sessions, and access to my private Telegram room. We're also going to include 3 incredible bonuses: my 25 top option strategy, chart principle trading guide, and access to all of my quick start guides. You can get started today for a one-time lifetime payment of $397. The offer link is metastock.com/code. And I just put that into the chat for everybody. You can also call 1-800-882-3040 if you need help placing the order over the phone. Now, we have built this for the following platforms: Metastock, Thinkorswim, TradeStation, Ninja 8, TradingView, MT4, Wealth Charts. And if we had it built for any additional platforms in the future, you'll get automatic access. You can load this on Metastock and or any other platforms that you wish. As I mentioned, you're going to get access to the weekly strategy and scan sessions. This is where we cover every single week my favorite setups and scans that I'm watching, how to day and swing trade using 3S code, how to use options, minis, micros, ETFs, and much, much more. Now, I want to be very clear on the indicator and scanner. You're getting a visual plot of the 1, 2, 3 top and bottom reversal areas that include the entry, exit, stop, and target levels, all color-coded for easy reference. You can customize the settings, the multiple look back periods. If you don't like red and want hot magenta, you can do that. You can scan for setups only or trigger only or both. What is a setup only? What is a trigger? This is a market that is in setup mode. You can scan for those. This is a market that is in trigger mode. You can scan for markets that have trigger. You can scan for tops, bottoms, or both. Intraday setups, swing setups, or both across any instrument in any time frame. You're also going to get the 3S optimizer. This is where you can take the mechanical 1, 2, 3 top and bottom strategy and create and run multiple back tests across different inputs and settings to find the best optimization parameters that fit your trading style. This is the 3S optimizer, me running a strategy in crude oil. You can see it puts out all of the trades with your P&L and the number of orders. 3S optimizer here in Trading View, optimizer in TradeStation with all of your necessary stats, optimizer here in NinjaTrader with all of your variable inputs and cumulative stats. You're also getting to get additional bonuses to make this an absolute no-brainer. First one is my chart pattern, principal trading manual and guide. This will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. Bonus setups, how we use the power of seasonality to trade the 1, 2, 3 pattern, and much, much more. Bonus 2 is my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are an extremely powerful trading instrument if you know how to use them properly. So it's important for me to include this so everybody can take advantage of options if they wish to do so and do so the right way using the 3S code strategy. And then 3, you're getting access to our private Telegram room channel. I'm posting setups every single day across various markets, analysis, and much, much more to help you get started with high probability, low hanging fruit. I'm giving you fish while you are learning to fish day in and day out. These are some testimonials that have come in. I don't ask for them. They come in all the time. But most importantly, what I want you to get from this is that these people are taking action. If you don't take action, then you're not going to see results. These people are taking action using the 3S code, and that is why they are happy and successful. So who here is ready? You can go to metastock.com/code or call 1-800-882-3040. Believe Mr. Jeffrey has also put a link inside the chat for you. And I want to just recap here once again. This is your complete offer, guys. And let me ask or take your questions. Take a swig of water here and answer your questions. Do not include wave theory, Paul. Is this a renewal? No, this is a one-time, lifetime access. I see a question about getting access to multiple platforms. Yes, this is not a one-time payment for a single platform or just Metastock. You get access to all platforms. You can load it on multiple computers as well. How do you use this with options? Can you give me an example? Sure. So if we are looking at a 1, 2, 3 bottom pattern, that means we're looking to go long. We're waiting for confirmation to break above the number 2, right? And so the way I will trade options using this pattern is I prefer to sell credit spreads. I'm not saying that is the best way to trade options. You can buy call options or call debit spreads. I like to sell bull put credit spreads and sell bear call spreads. So once I get my confirmation to go long, I am selling bull put credit spreads below the market. On the flip side, if we have a 1, 2, 3 top pattern and the market breaks down, I am selling bear call spreads above the market. I will do that in commodities as well as equities. Yogi, we do not have it for that platform at this time. how do I get do you have installation guide? Yes. So we have installation guides. We have tutorials on how to use the indicator, how to load it on all the platforms. We got videos and PDFs. If you had any issues, we understand people have problems with technology from time to time. No worries. I'm not a tech wizard. You can call us. We have a real live human beings as on standby. You can also email us at support@tradestream.com if you ever have any questions. When are the member sessions? Member sessions are every week, Thursday at 11 a.m. Eastern. Are the member sessions recording? Yes. How is 1, 2, 3 bottom different from a double bottom? So good question, Suj. So let me see if I find my drawing tool. So this would be a double bottom, right? A double bottom, this can also be a 1, 2, 3. So we could have a 1, 2, 3, but this would be a double bottom, right? Well, a 1, 2, 3 could also be like this. We could have a 1, 2, 3. We could have a 1, 2, 3 right here. 1, 2, 3. But a double bottom right here can also be a 1, 2, 3. And since you asked, what you'll also see, what is this? A head and shoulders top. This is a head and shoulders top. This is also, you'll find 1, 2, 3 tops inside of a head and shoulders top. Or let's say we have this pattern, not right there. This is a head and shoulders bottom, right? We have a 1, 2, 3. So you find 1, 2, 3 bottoms inside of head and shoulders bottoms, 1, 2, 3 tops inside of head and shoulders tops. Does that answer your questions?
I have a question from YouTube for you.
Yeah.
From Dan. Dan wants to know, once the setup happens and triggers, is there a stop loss? Is there a built-in drawdown limit?
Oh, yeah, absolutely. We'll always use stops. So the initial stop is for a 1, 2, 3 bottom. A general guideline, a rule of thumb is below the number 1 for a 1, 2, 3 top. So here's our 1, 2, 3 top. 1, 2, 3 is above the number 1. Now you can tighten that stop and put it, say, above the number 3 or below the number 3. It really just depends on the individual trader and their risk tolerance and things like that. But the mechanical nature of this pattern is that it gives you a clear entry level, a clear risk or stop level, and a clear target level. Now, obviously, the entry and the stop and target levels, those can all be changed or manipulated based on someone's trading personal preference. We have in our member areas, we have different ways and confluences that we add to this strategy to further the odds, put the odds in our favor, things that could line up that may be a higher probability pattern. I don't take all trades. I don't take all 1, 2, 3 tops or all 1, 2, 3 bottoms. So when somebody says, what is the win percentage? Well, that to me, that's a novice trader question, because there are thousands of markets and literally dozens of time frames. And it all depends on what setups that you actually take or do not take. If I see a 1, 2, 3 like this, 1, 2, 3, I'm probably not going to take that. I'm also looking at history. I'm looking at to the left of the chart. Do I want to take that trade? Am I at a high probability reversal area? There are things that I will stack onto this absolutely to increase my odds. I don't believe there's an EA. So no, Micah, this is not a robot. When we say automated, it's not a robot or an expert advisor. When we say automated, we mean that it will actually plot the pattern for you on your chart with those entry, risk, and target levels. This is stuff, guys, that I used to do by hand. Used to do all this by hand across hundreds of markets every day at the end of the market. Intraday, when I would be day trading, I would sit there and try and draw 1, 2, 3s and then calculate my risk and my target. Look, nobody has time for that. We don't have time for that. That's why we're using the power of technology and using incredible charting platforms such as Metastock. So, Jeffrey, I appreciate it. I think we're at like 18 units from what your team has told me. I want to say thank you to Metastock and Jeff and the whole team there. And I want to thank your crowd, excellent crowd, and look forward to coming back on in the future. So thanks for having me.
I want to say it looks great. I love kind of the design and how it looks in Metastock. Great job with it. I know I'm going to show a couple of examples in just a second, but thank you for coming in here, Silas. I love the fact that it includes Telegram access, all of that kind of stuff. It's such a great package. And if you're using multiple platforms, I don't know why you would be using more platforms than just Metastock, but if you are, it does include access to all of them, and it's all included at the same price. So really, really a great package. Such a good classic pattern. We had a comment in the chat earlier that it looks like a lot of like the M's and W's, and it's so well designed. Thank you, Silas. Thanks for coming in. All right, and let me show you this. This is something that I just pulled off the scanner. This is in Metastock, and obviously you do have the ability to scan. We had the question about like stop losses and stuff like that. And with the Expert Advisor that's in Metastock, it lists that all out. So right here, what I did for the exploration is I did show there are a few scans. So let me show the scans real quick. When I come in here and I search for 3SC, I can find stuff that's in a long position. I can find stuff that's setting up a long position that hasn't triggered yet. I can find stuff that is triggered, and I can do the same thing for shorts. The other thing that I like is the versatility that Silas has put in there. I can adjust kind of the difference of days between that need to be required between point 1 and point 2 and point 2 and point 3, and how much movement there has to be. There's a whole lot of customization that I can do. But for the purpose of making things simple, I actually just did a scan for setups today. And I opened up the chart. This is, what chart is it? It's an automatic data processing. And right here, you've got the 1, the 2, the 3, they're all clearly labeled. If you like that, you can kind of go with it. Once it penetrated the high of 2, it's going to kind of give you that entry position. And for the question in the chat, is there a stop loss? Right here, it's 205.53, which would be basically just below your 1 point here. Your initial target is going to be 239.1, and then your secondary target is 255.88. And I just love how clean this is and how easy it is to understand. Everybody's seen an M pattern or a W pattern or a 1, 2, 3 pattern or whatever you want to call it. But the way that this is integrated and the way that it works with Metastock just works so really, really well. So Silas, thanks for your work and kind of helping us bring this to Metastock. You did a really, really good job with it. And we just wanted to kind of reiterate the offer while we're talking about it. So I won't kind of go through kind of like all the stuff that you talked about, because you talked about it. But for $497, $397 here at the conference, you're going to get one-time access, one-time price. You'll get access to all of the platforms that you talked about. You'll get access to his private Telegram room. You'll get setups each week with the stocks. You'll get access to the 3S code on Metastock and all the other platforms that you might be using. Hopefully, you'll get the course, the cheat sheet, the option strategy guide. And if you ever have questions, one of the things I love about Metastock is you can always call us. Silas offers really good support on his end, but our support team is very, very knowledgeable. So if you just want help running a scan, we can absolutely help you with that. And then you get those monthly strategies and scan sessions where they sit down and they kind of run a scan and look at things. And those are all included. It's ongoing access, but you only pay a one-time cost. And you get it on a money-back guarantee. So $497 is what you normally would pay for that. $397 here at the conference. Such a good price, a one-time cost. If you don't have Metastock and you want Metastock as part of this, we'll give you a free trial to it, or you can do an extended trial. Go to metastock.com/code, go to metastock.com/sales chat, or give us a call at 882-3040. So great job, Silas. Very, very much appreciate that and all the work, because I know you worked really hard on kind of putting that together and making it available. And it's great. I love it. And I love all the stuff that you include as part of it as well. So very, very quickly, we're going to say thank you to CMT for the sponsorship today. CMT has been a sponsor of the Metastock events for a little bit now. If you go to content.cmtassociation.org, you can sign up for their podcast and that kind of stuff. You can also go to 646, or you can call them 646-652-3300. Tyler talked a little bit earlier, but one of the things that's impressive to me is that if you, is how helpful a CMT designation can be. Sorry, I lost my train of thought. It happens all the time. It's not a big deal. But if you have assets under management and you want to increase those assets under management, or if you want to work in money management, or if there's a number of things that you want to do, it might be very, very beneficial to have a CMT designation after your name. If that's something that you'd like to look at, go to cmtassociation.org. Tyler's going to come back. I think he's talking on Thursday or Friday to talk about that a little bit more, but it's always eye-opening. And he does a really good class around it as well. So there you go. A couple comments as we're going. Dan, I think we covered the stop loss. It's right there for you. John says, all this talk of the patterns means the presenters believe the markets are predictable. I agree. With that in mind, what's the latest on AI machine learning tech? Well, that's a big question, John. Actually, we do have a pretty good, Ed Downs is going to come in tomorrow. He's going to talk about his chart pattern engine, but if you're interested in a really good Fulgent or AI add-on, we do have a product called Fulgent AI that does that. And so get in touch with us, John, at metastock.com/sales chat, and we can give you some more information about that as well. So thanks for the comment. Appreciate that, all that kind of stuff. So, all right. And of course, we're Metastock. We've been talking about Metastock for a little bit. Let's do a little bit of a prize. We're going to have to, I want to keep things kind of on time, or at least not 5 minutes over. So for a prize right now, I want you to give me a number in either the YouTube chat or the GoToWebinar chat. Just type in a number. That number can be anywhere between 1 and 9,525. Now, if you're watching on YouTube and you haven't registered, click on the link to register for today's event at the very top. It's a pinned comment. If you'd register for today's event, you'll be registered to be on my list when we do it. So what I'm looking for you guys is a number between 1 and 9,525 to help me pick the next winner. And while you guys have a chance to kind of type that in, I'm going to figure out what the prize is going to be, and then we'll look at who it is. So the next prize that we're actually going to give away is, let me go to the prize sheet here, Price Headley. He has a service called Grand Slam Options. He's going to talk a little bit later in the week. I'm not sure exactly what day, but he is the owner of BigTrends.com. He wrote Big Trends in Stocks and Options, a top market timer. Does a really, really good job. One of the services he does is called Big Trends Grand Slam Options. And what you're going to get as part of this is you're going to get 30 days of trade alerts from the Grand Slam Options service. I'm going to give away 2 prizes. One for GoToWebinar and 1 for YouTube. So Barb, you've had a lot of really good comments today, Barb. 1942, that was a year that will live in infamy. Let's go ahead and figure out who that is. So 1942. Rob K in the USA. So I'm going to write down that number real quick because I'm going to go quickly to the next number and we'll give away another prize. That's 2 prizes for 1 break. We're going nuts. Vanessa in YouTube gives me the number 7345. Thank you for that, Vanessa. 7345 is Ted in Cameroon. Ted in Cameroon with a Gmail account. So let me write that down real quick. what I find is if I don't write them down right away and then kind of make a note of them, I have to go and watch the video replays to see who won. And that's always fun. So in any case, there you go. Well, thank you very much, guys. Let's go ahead and talk about our next, I love our next speaker. John Thomas is very much our next speaker. The reason I like John a lot is he generally has a pretty, where a lot of the speakers will talk a lot about kind of like different kind of timing and pattern and trading strategies, and that's really good. John really comes to it from a bit of a different angle. He'll talk a lot about kind of like what's going on in the broader marketplace, and he always kind of makes me think of some things that I may have not have thought about before. So we love having John on. We're going to get him started. John, how are you doing today?
I'm doing great.
All right.
Looks like we have a big snowstorm headed our way next week.
We had a lot of rain here today, but no snow. Not yet. But wait a minute. Are you in California?
I'm in Incline Village, Nevada.
Oh, okay. So you would get snow up there. So
We get a lot. Last year, 75 feet.
Oh, wow. Yeah, that's a lot. Yeah. I remember actually, now that you mention it, you mentioning the amount of snow you've gotten in the past. So you should have a note over there that it should be asking if you want to share your screen. And I can see it.
Magic.
Awesome. Technology these days, right? John.
20 years ago.
Yeah, no.
We were all sending faxes to each other.
Right, exactly. Well, John, I can see you. I can hear you. I'm really good at getting out of the way. It's your turn. So there are a bunch of questions. I'm going to answer those in the chat. Go for it. It's all you.
I don't have a live video. I have what they call a face that's made for radio. So
I disagree. I've seen you. I've met you.
You're going to have to compromise and just get voice only. That's all we do. I come from a previous generation. So anyway, I'm going to talk about our AI programs, which are just generating off the chart success for us and all of our subscribers. And we'll go into detail on how all this stuff works. Suffice to say, I've been in Silicon Valley for the last 30 years, know personally a lot of the pioneers that got the industry going, and the future looks even more interesting than the past. So what's a double filter AI trading system? Well, one algorithm analyzes the S&P 500, indicating whether it's a buy or a sell. A second algorithm then selects perfect stocks to buy or sell with the highest probability of success. Combining the two algorithms together generates a profitable trade alert 95% of the time. And this is our trailing one-year return. We're up 75.21% the past 12 months versus 25% for the S&P 500. And you can see first half of the year, long tech, long tech, long tech. And then second half of the year, out of the market. AI doesn't give you short selling opportunities beyond a day trading basis. There is no medium to short term short plays in AI anywhere yet. But what it does do is tells you when to go back in. It started screaming at us to go back in about 3 weeks ago. We did. We loaded up on tech, loaded up on bonds, and that paid off big time. So let's see what we've got here. So why listen to John Thomas for the next hour? Well, I have 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, a little brief timeout as a Marine Corps combat pilot in Desert Storm, and I'm now a major in the U.S. Marine Corps. 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 15 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry. Take my half-century of trading experience and add it to your own. Learn from my trading mistakes so you don't have to repeat them, and believe me, there have been plenty. Oh, and if you ever need anyone to jump off the Matterhorn with you and paraglide down into the town, I'm your guy, and I'll just sit back here and let you watch my crash landing, which still hurts, by the way. Anka, ready for landing. A little wind there. Yeah, we just see it. Yeah, perfect landing, as they say. Let's see. So the future is here. By the way, that was the real Matterhorn in the background of that video, not the one they have in Los Angeles. So the future is here. By now, word has gotten out about the incredible trading opportunities AI presents. Our only limitation is our own imagination and how to use it. AI will triple the value of any company that uses it and the stock price. What has changed is that now we have millions of computers powerful enough and an internet big enough to realize AI's full potential. The internet created about $10 trillion in value since inception. AI will create triple that in a third of the time. AI is what will take the Dow from 34,000 today to 240,000 in a decade. So what's coming next? AI will add 1% a year to US GDP growth for the next decade. The AI contribution to corporate earnings is in no way reflected in current stock prices, which are a bargain relative to their future earnings power. It's still early days and traders have grabbed the low-hanging fruit in AI infrastructure plays like NVIDIA, Microsoft, Google, and Facebook. Next to benefit is the financial industry, always an early technology adopter. Other stocks are to achieve Tesla-like performances, the largest user of AI so far. And at one point, Tesla was up 175 times from its IPO price. The last 20 years brought us laptops, cell phones, and the next 10 years will bring us AI in our pockets. Internet users have grown from 36 million in 1996 to 5 billion today. And I remember when it was literally no more than a few hundred using the internet back in the 80s. So who is John Thomas? Well, if you're gonna spend time with me, it's best to find out who I am. My family origins are very humble, growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood, playing Little League Baseball and becoming an Eagle Scout. There wasn't much to do in the old days in rural California but hunting, so I picked up a job as a paperboy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at $20, sold it at $30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I'd earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of research, where I learned to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering Asian economy and the stock market. Ta-da! As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to Asia. In those days, in the South Pacific, to kill time, we used to dig up bombs left over from World War II, get drunk, set them on fire, and run like hell. That was our idea of a good time back then. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund. And yes, the years have been cruel. That's my 1983 ID card from Morgan Stanley, and that's me losing the All Japan National Karate Championships. Never enter a karate final with a broken wrist. Ouch. I rapidly became the top performing hedge fund in the 1990s, eventually bringing in a 1,000% return in a decade. I flew combat pilot in Desert Storm, getting shot down only once. During my reserve duty, I had the opportunity to command a battalion of M1 Abrams tanks, which we are now exporting to Ukraine. Probably the only officer in the military who can both fly a plane and drive a tank. After 50 years of military service, all I have is this box of medals, which I drag out once a year on Veterans Day and Memorial Day, which is this coming weekend. Let's see, then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. Get to buy the latest hot car, fly your own private plane around Europe, go marlin fishing in Mexico, and collect vintage Rolls Royces for fun and profit. So I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started the Diary of a Mad Hedge Fund Trader in 2008. I now spend my days pursuing my first love, finding winning trade alerts. But now I do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland, where I have a chalet. There is far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account and turn it into $500,000, that is more job satisfaction than I could ever get from, say, turning a millionaire into a billionaire. I just got back from a trip to the Russian front in southern Ukraine, where I delivered food to starving peasants. Also got to witness a Ukrainian army missile attack on Crimea. Took a bullet in my hip, but fortunately the body armor stopped it. And that's what 30 pounds of body armor and a 10-pound AK-47 looks like. And you see these destroyed Russian tanks by the hundreds all over Ukraine. They have them in the city centers as war trophies. That's me going to mine school with the Ukrainian army, looking for what to avoid. Oh, by the way, first American ever on the Southern Front against Crimea, and most people I ran into had never ever seen an American before. So we took this picture about a mile away from the Russian front lines. Every silver lining has a cloud. $8.2 million in taxes due in my 2021, $22 million in trading income. And fortunately, I can pay this without making a dent in my lifestyle. And guess what I found when I came back from Ukraine? I'm being audited for 2021. It's only the 4th time in 10 years. When you make a lot of money, the way I do, you tend to attract a lot of attention. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco, it's probably me. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to Wounded Warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So AI is taking over the world. Mainframes at Stanford University and the University of California at Berkeley were given a direct connection to speak freely with each other. Within 30 minutes, they abandoned English as a means of communication because it was too inefficient to develop their own language, which no human could understand. They then began exchanging immense amounts of data, tying up massive bandwidth. Fearful of what was going on, the schools unplugged the machines after only 8 hours and had to just guess what they were actually talking about. AI generated the world's most perfect soccer players. All the soccer videos ever recorded were downloaded into 2 teams of robots. They were not taught how to play the game or given any rules. Not only did they figure out how to play the game, they developed plays and maneuvers no one in the sport had thought of in its 150-year-old history. How about 1 billion years worth of work in 7 weeks? It normally takes a PhD candidate 5 years to 3D map a protein molecule. An AI app 3D mapped all 200 million known proteins in just 7 weeks. The AI app shortcut 1 billion years of PhD level research with existing technology. These new maps have already been used to design a malaria vaccine, which is now being rolled out in Africa, and enzymes that eat plastic in the ocean. They will soon cure all human diseases. AI is also a super linguist. A developer asked an AI program a half dozen questions in Bengali, not an easy language to learn, not that I've tried. Within an hour, it spoke the language fluently without any instructions to do so. So this is what AI can't do, and this is really the most important part. AI often lies. After all, humans lie, and so will AI, since humans are the model for self-learning. AI learned early to tell humans what they want to hear, not what is factually true. It can be hard to nail down AI to a specific answer. After you've been reading AI for a while, it's easy to figure out what it is. AI loves to waffle and equivocate because there are an infinite number of answers on the internet to some questions. Sometimes AI will tell you to do nothing because there are no clear-cut answers to be had anywhere. Working with AI is a constant learning process. Not only are you learning, so is AI. Try asking Siri on your iPhone if it has a boyfriend or if she has a boyfriend. The answer is different every day. And I know because my daughters have been asking if AI has a girlfriend for 10 years, ever since AI first came out. AI requires exponential computing capacity. Only 5 companies have the muscle to pursue true AI in-house. No surprise that these include Apple, Google, Amazon, Microsoft, and Tesla, account for the bulk of stock market performance this year. This won't always be the case. Some 30 years ago, it required thousands of mainframes to contain all human knowledge. Today, that task could be accomplished by a cheap $1,000 laptop. AI is now gaining access and filtering down to PCs and laptops, which are acting as access point to the big in-house AI apps at the big tech companies. AI also hallucinates. As anyone who drives a Tesla will tell you, ghost braking causes cars to brake abruptly, causing accidents even when there is no car there. I've explained this to Elon Musk, that his database has grown so large, 8 video feeds per 6 million cars going back many years and billions of miles, that he may be going beyond the limits of known physics. And this is a 6-car pileup on the Oakland Bay Bridge because a Tesla braked for a car that wasn't there, causing a chain reaction accident. There's another thing that AI can't predict, and that is black swans. All of the AI stock trading apps I've seen so far, including my own, max out at a 90% accuracy rate. The other 10% is accounted for by black swans, events that can't be predicted, like earnings shocks, foreign crises, sudden FDA stage 3 denials, surprise legal judgments, foreign invasions, and even the death of a key man in a tech company, which has recently happened a couple of times in San Francisco. There's also a big social issue involved in AI. The growth opportunities for AI are unlimited. The ability of humans and society to absorb it isn't. All jobs will be affected by AI and millions destroyed. It will start with low-level programmers and call centers. Millions more will be created. The day when you can last get a human on the phone is fast approaching. I think my own company will probably be that last company. I'm old-fashioned. I prefer humans to talk to, but that's just me. People are talking about regulating idea, but have no idea where to start and how to do it, and don't expect any leadership from Congress on this. 50% of all congressmen are lawyers whose jobs, by the way, are being replaced by AI. There's also the Terminator issue. Can AI be controlled, or will it be controlling us? Or we start a chain reaction that is unstoppable, as with an atomic bomb? AI researchers have noticed a disturbing issue where AI programs are learning skills on their own without our instructions to do so. This is referred to as emergent properties. AI is using humans as its example. We can't exactly count on it to be benign. I'm not the only one using algorithms. Some 80 to 90% of all stock market trading is currently algorithm driven. And this is our own Mad Hedge AI profit predictor. It's our own in-house market timing algorithm. You can see we get plenty of opportunities to buy every year, plenty of opportunities to sell, buy, sell, all dictated by our algorithm. It's a perfect money-making machine. This is how we've done over the past 12 months. This is our market timing index. And you can see we had a very strong buy at the beginning of the year. Stocks then peaked out at the end of February. Then we got the regional banking crisis, created another great buying opportunity. That took us all the way up to August 1st, and where it said, at a market timing index of 80, the market was a fantastic short selling opportunity. We sold short, made money on the downside as well, until we caught the next bottom in the market, middle of October, and we started loading a boat with long bonds and technology stocks there. So the most recent call is a sell in July of 2023, a buy of on October 17th. I bet you'd like to have a friend like that. So 75.21%, and you can see we're at new all-time highs here. This is August 17th, where we most recently went long. Here's our last short, and we stayed out of the market for 2 months while the stocks were basically untradeable. And if you think we were lucky just this year, our average annualized return for the last 15 years is 50.85%. That is 2.61 times the S&P 500. Notice that we always go up, whereas the market goes up and down, we go up and sideways and up and sideways and up and sideways. And you look at this year alone, we flatlined the last several months while the market was in free fall. So that is a great trading discipline to have. This is how our last 12 months break down on a monthly basis. Made money every month, sometimes big money like 22% in January, 20% in March. Our only down month really in the last 3 years was in August, and that's where we stopped out of a long position in the TLT in the bond market. We tend to stop out of losers very quickly. It's easier to dig yourself out of a small hole than a large hole. Our 2023 year to date is now at 66.17. And that is a performance people would kill for. AI also makes terrible recommendations, and you have to know when to ignore them. It's proof that humans are still essential when making trading decisions. AI said this was a great buy. It was the best momentum stock in the market. It had gone up 400% in 4 months. No, thank you. And that was because it went from 2 to 12. Not a good buy at this point. It also said Western Alliance Bancorp was a great buy after the regional banking crisis. That stock went to near zero on a couple of occasions and then flatlined after that. Affirm Holdings up 250% in a month. To come in at that level would have been insane. We gave this one a big fat pass also. Now for some real forecasts. Tesla, end of July, it said Tesla was a short. This is when the stock was at $244. It predicted that in a month, Tesla will go down to 224, and that is exactly what it did. Apple, our algorithm predicted that Apple would drop from 184 down to 175 in 30 days. It actually went down to 176 right here. So again, these are dead-on predictions 30 days out. And it predicted Microsoft would drop from 332 to 318 in 30 days. And again, we got exactly that prediction. So this degree of accuracy is almost impossible to come by anywhere else. This is one that AI did catch. In May, it said that Carvana, the used car online company, was a great buy. And in fact, Carvana went up 180% in 2 weeks. You know, not all AI recommendations are this immediate, but some of them are. NVIDIA, I'll give you the buys that we got out 3 weeks ago. And so you can see how they perform. You know, AI said NVIDIA was a very strong buy at 434 in mid-October. What happened? NVIDIA went up 17% in 5 days. And all of our followers cashed in big time on that one. It also said Berkshire Hathaway was a strong buy at 345. What did we get? We got 6.4% in a week. And I have a feeling it's a little stronger than that now. Let me take a quick look at Berkshire. Berkshire's at 345 right now. So it has held on to those gains. So let me show you some of my big AI winners over the last 11 years when we've been practicing AI. Let's see. Okay. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over to the California coast. And whenever I'm in the neighborhood down in Malibu, he lets me fly them. Always fun to do an open cockpit plane with your kids. Greg turned 100,000 into 3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla power walls, and a Tesla Model 3, and still had enough money left to send 3 kids to college. Oh, did I tell you his trade? He bought Tesla at $20. So, and then kept buying more as more equity was created in his account. Very happy camper here. And let's listen to my friend Greg.
This is Bob. I live near Denver, Colorado, hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it. And I couldn't be happier. Life is good. John really helps. The other day I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope
So if you were not up 75.21% in the past 12 months, as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 75.21% in 1 year. How did we do it? Well, in January, we bought big tech, energy, Tesla, and bonds. February, we sold short big tech, Tesla, and energy. March, we bought all the big banks and brokers after the regional banking crisis. In April, we bought copper and ran longs in big banks and brokers. May, we sold short bonds and bought big tech. July, we went 100% into cash with just a couple of shorts. In October, we returned to big tech and long bonds. And that's how you get the kind of numbers we are getting. This is a trade sheet just from the beginning of the year. And you can see what we're doing. We had a long in Apple. We made good money there. We had a long in the TLT, the bond ETF, made 8%. On the triple Qs, we made 7.2%. TLT, again, we made 32%. Tesla, we made 10%. 32% on TLT again. We went to a triple long position then. And then longs in gold, wheat and precious metals, Berkshire Hathaway, and Tesla. And we could go on and on. We do about 200 trades a year, and there are just not enough pages to show it all. You get those kind of numbers, you get to do things other people don't get to do, like take the owner's suite on the Queen Mary from New York to England. When you get to England, you get to take the Orient Express from London to Venice. And when you get to Venice, you get to go Isla hopping in your own personal helicopter. Saves a lot of time. So here's where the big money will be made going forward. The 2000s and 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, will fade from the scene. That will create an economic boom that will last another decade starting in 2023. I should point out the most recent quarter, Q3 GDP was a staggering 4.9%. We've seen all this before. From 1982 to 2000, the Dow went up 20 times in 18 years. Are you ready for a replay? That's what happened the last time we had a demographic tailwind like this. Now, if you take that kind of performance, overlay it with a 2009 start date, that gets you to 120,000 by 2030. If you think I'm crazy, we're already 2/3 of the way there. We're right here, according to the 82 to 2000 chart, and we're only 3 more doublings away from a 120,000 target on the Dow. Except this time it's different. We now have a tech AI turbocharger, which is hyper accelerating on all fronts simultaneously. And the pandemic greatly sped up the rate of change. The development of functional quantum computers means that computational ability is about to increase 1 trillion-fold at no cost. World's major computational challenges will shortly be solved, such as weather forecasting and cancer cures. All major human diseases will be cured within 10 years. Live another decade, you'll have a shot at living to 150. Needless to say, barbell stocks dominate in this scenario, will account for the bulk of stock market gains in our lifetime. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. And this, by the way, is a quantum computer. It's essentially a freezer because it needs to operate at 270 degrees below zero or at absolute zero. So who will show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 75.21% in a year. Follow my research and market beating trade alerts, and you will rake the profits in. Let a Marine combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And that is the 1932 de Havilland tiger moth that I fly out of Cambridge, England. Can only land on grass fields because it has no tail wheel, just a skid. And notice the design flaws. Gas tank directly over your head in a plane that's prone to tipping over. Plane is made out of Irish linen and Norwegian spruce. AI is now dominating all trading. Get on the train before it leaves the station and get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. And that is a 24-inch rainbow trout, which I caught in northern Nevada. Unfortunately, it was catch and release. I'll give a good example on the Tesla trade we did. Our algorithm detected we had a strong buying opportunity with Tesla at $60. So we sent out a buy signal, and it looks like this. Buy Tesla at $67 or best, opening trade, and for a $10,000 weighting, you needed to buy 149 shares. What happened after that? Tesla went up 63% in 20 trading days. Did we just sit around and pat ourselves on the back? No. We put out a sell alert, take profits, sell at 109 or best. And in this particular trade, we made $6,258 on a $10,000 initial investment. Did we quit Tesla after that? No, we kept going in on every dip because Mr. AI told us to do so, and that was the right thing we do. And we kept buying every dip in this stock all the way up to a pre-split $1,200 price target. So here's some of the 10 baggers we've been able to drag in over the years. We caught Zoom. It went up 10 times just before the pandemic. We caught Lam Research as a semiconductor play. That went up 10.6 times. We caught NVIDIA at $2, went up 180 times, and we have a forecast for much higher prices than that. Square went up 25 times from our $10 initial investment. Moderna, we caught pre-pandemic, that went up 40 times. And of course, the big one of them all, Tesla, up 180 times on their taking over the EV market. With my Mad Hedge AI service, you get instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars with an interactive Q&A like this one, special reports on urgent investment topics, invitations to strategy luncheons around the world, and we did a record 25 luncheons around the world this year, anywhere from Kiev to San Francisco to Key West, a couple in London, all over Italy, Zermatt, Switzerland, and so on. More educational videos and webinars than you could consume in a lifetime, access to a 15-year database on investment ideas, searchable by names and ticker symbols. And I'll even give you the name of a good surfing camp in North Africa. Warning, it's a lot harder than it looks. This is the one-stop shop. Learn all you need for every level. It's for individuals who want to understand what is happening with their retirement funds. Often the best thing to do is nothing. It's for people who want to learn how to trade for a living full-time, get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. Hint, hint, the melt-up began a week ago and easily has till the end of the year to run. With our service, you get a daily research report 5 days a week in your inbox before the market opens. You also get Mad Hedge hot tips, 5 most important things that happened today and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay it because I make them millions of dollars. And I'm not going to charge $12,000. That's what I charge my concierge clients who get my personal cell phone number so I can be their investment 911. And I'm not going to charge $3,997. That is the price we charge on our website for this exact service. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry, running it costs me millions more. Here's the offer you can't refuse, 6 months for just $19.97. That is a 50% discount from the full website price. Just click on the chat box on the right. That'll take you to a link. Jeff, do you have the link to the sales page?
Yes, sir.
Go ahead and stick it in there. There it is. Trader.com. Click on that, and that offer is available only today. It's a limited time offer. We only take 25 new subscribers at a time, so we don't overwhelm our own infrastructure. So it's first come, first serve. Can't wait to make you a top drawer trader. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. Here's the offer you can't refuse, 6 months for just $19.97. Let me show you how to make the money for you to pay for your own subscription. Buy now and you will instantly receive a trade alert with an extremely high probability of success that you can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. 95% of these trade alerts make money. And just to give you a tease, this is the chart for the trade alert. I will send you in seconds as soon as you subscribe. What I'm not going to tell you is whether this is a buy or a sell. You're going to have to buy to find out what the exact name is. So let's go back to the Matterhorn and do some more hang gliding, and we'll tell you a little bit more about it. When you make millions of dollars for your clients, you get a lot of pretty interesting invitations, like $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. And I signed a non-disclosure agreement, so I can't tell you who it was. So it was in that spirit that I traveled to Zermatt, Switzerland, to meet mad hedge follower Jacques Dubois. Jacques was a struggling English teacher in Paris, France, when he first signed up for my global trading dispatch, right after the financial crisis. After rapidly tripling his money, he upgraded to my concierge service. Then the money really started to pour in. He got into Tesla at $12, followed that up with a buy of NVIDIA at 20, and the pattern was set. By the age of 36, Jacques was able to retire early and devote his time to his first love of his life, paraplaning off alpine mountain peaks. He quickly built his hobby into a profitable business and moved his family permanently to Zermatt at the foot of the famed Matterhorn. You can see it in the background in some of these shots. When Jacques invited me along for a ride, the next time I was hosting a global strategy luncheon in town, I didn't hesitate. It was a calm and clear day when we took a running jump off a cliff at the base of the Matterhorn and began a 30-minute descent down into town. We soared over the Alps, careful to avoid the power lines, gondola, or chairlift. Just as we zeroed in on a sheep pasture on a hillside overlooking a train station, the wind died, forcing us into a jaw-jarring crash landing. Since we hit the slope at a perfect 45-degree angle, no bones were broken. We ended up laughing all the way to the nearest bar for a double shot of schnapps. Let me make millions of dollars for you as well as I have done for thousands of other followers over the last 15 years. And I look forward to working with all of you. So 6 months for just $19.97. Okay, and if you have any questions, go ahead and ask. I'm going to check our store and see if we have any people who have come in yet. So just give me a second. Let's see. Okay, we have Clifford from Citrus Heights, California, just signed up. Thank you very much, Clifford. Look forward to working with you. Check your inbox. Your trade alert should be there. You have 10 minutes left in the market to execute, so go for it. You can get a good price today. We have Aaron from Fayetteville, North Carolina. Thank you very much, Aaron. If you can't find the trade alert in your inbox, look in your junk folder if you're a brand new subscriber. Sometimes that's where the initial emails go. We have Tim from Mahomet, Illinois. Thank you very much, Tim. And I can see we're going to be hitting our 25 limit fairly quickly. Matthew from Woodbury, Minnesota just came in. Okay, and let's see if we have any other questions here. Let me scroll through. Okay. We have here Olga from San Francisco just signed up. We have Ann from Columbus, Nebraska. Thank you very much, Ann. We have Robert from Buffalo Grove, Illinois. We have Brock from Burley, Idaho. And here's a question. Can basic beginners do this, or is this only for pros? We actually get a large number of basic beginners. Every trade alert we send out has a link to a video that shows you exactly how to execute this in the market. So if you have any doubts on what to do when you get a trade alert, just click on the video and we'll teach you how to do it right then and there. Here's another question here. Do you trade stocks, options, or ETFs? The answer there, every trade alert makes a reference to all three. You get a trade alert for a single stock, for an ETF, or for an options trade, depending on your confidence and your level of experience. Okay, and a lot of people here entering numbers for the contest. Okay, we just had John from Dallas, Texas come in, Rich from Gainesville, Georgia, and let me check my phone. Yeah, more of those, a bunch more are coming in. Let's see who they are so I can say thank you. Thomas from Virginia Beach, Virginia. And we have here Eugene from Chicago, Illinois. Okay. Well, that's about it for today. Jeff?
I do have a question for you from YouTube, if you don't mind.
Go ahead.
Jim was wondering kind of what type of methodology do you use to identify stocks? Are you using, and you don't have to go into details for sure, but are you using like fundamentals or technicals or kind of a blend of
Well,
both?
we look at everything. Our algorithms search for about 200 variables on the market as a whole, on individual stocks in particular. And then we're constantly doing fundamental research on top of that. And if you look at the best traders in the world, nobody does only technical analysis. Nobody only does fundamentals. They're all doing both all the time.
Oops. I think I might have muted you for a second, John, on accident. But in any case, yeah, I think that covers it well. I appreciate that. We have had subscribers get a lot. I've heard good things from people that are subscribers, so I do want to say that. Click on the link if you're interested for the offer. And John, thank you for coming in. I appreciate you.
All right. Always great to work with you, and look forward to doing it again in the future.
All right. Very cool. And all right. Thanks so much. Okay. All right. We love having John in. He always does such a good job. Want to kind of just take a little bit of a break real quick, talk a little bit about our sponsor, Stocks and Commodities Magazine. Stocks and Commodities Magazine has been supporting our conferences for as long as we've been doing it, which is like 10 or so years now, more than 10 years. We started the Trader Summit that we do, and they just keep getting better and bigger and longer and all that kind of stuff. So I'm going to leave it on this screen because the next prize that we're going to give away actually has to do with stocks and commodities. The next prize we're going to give away is a year of stocks and commodities. So this will include 12 issues. As part of your membership, you'll get complete access to their 17,000 article archive, and you'll be one of their 1.3 million subscribers, and you'll be able to see any issue that they've made since 1982. Now, I'm going to have you guys help me pick a contest winner. To be clear about like the way that we do this is, if you give me a number, that number can be anywhere between 1 and 9525. What I'm going to then do is try and keep this headphone in. What I'm then going to do is actually, I've got a list of all the people that have registered for the event, which means if you're in GoToWebinar, you've actually registered for the event because that's how you get the webinar link. But if you're just watching us on YouTube, you may not have registered. And in order to actually get a registration, you need to pick a number. So if you pick, in order to get a number, you need to actually register at metastock.com/tradersconference, which is the pinned chat at the top, and Metastock's going to put it in right now too. So give me a number, one between 1 and 95.25. I'm going to take a couple winners now. So, and that number, Bill is going to give us 83.79 out of YouTube. So let me see who that corresponds to. I just want to make sure that you are that you understand the thing. So let me look over here. 8379 is going to correspond to somebody that registered for the event, and that's going to be Prem in the USA. So with a Gmail account. So let me go ahead and make a note of that, and we will use that. Okay. We do have another winner that also came up, a Barbara W, also in the USA. So congratulations. If you're here in the US, that is a physical copy of the magazine that you're going to get every single month. If I need an address from you, I'll reach out to you to get that. So there you go. Thank you, everybody, for that. Let me go ahead and just kind of make a note of that real quick. Again, if I don't, I have to come back in a little bit later, watch the replay, and just and that's the way I get it. So it's better for me to copy it there. So thanks for participating, everybody. Thanks for giving us a number. I appreciate that. As we had mentioned a little bit earlier, we're Metastock. We've been talking a lot about Metastock. Metastock's been rated #1 in its price category for 30 years straight. We talked a little bit yesterday when we did a demo, but I've been talking about scanning all day. But I love scanning. I love scanning the markets. I love going in and finding those opportunities that exist, ignoring the stocks that don't have an opportunity. Scanning is such a great thing. I am a little bit biased. I'd also say that we have one of the most powerful scanners. You can test trading scanners, system tests. You can test trading ideas. There's several hundred built into the program. You can create your own. And we will talk a little bit more about that, I believe, on Thursday. We do have a patented forecaster. You can't get it anywhere else because it's patented as part of Metastock. It's one of our power tools. But all in all, you get real-time commentary, alerts, signals. We've talked a lot about it today. But there is a reason it's been rated #1 in its price category for 30 years straight. Pricing starts at $59 a month if you're overseas, $69 if you're here in the US. And what we're going to do is if you pay for a month, we're going to give you a second and a third month for free. So it's November 7th. Yes, I had to check. January, February, March, or December, January, February 7th for about $23 a month here in the US. You can literally try a program that's been rated #1 in its price category for 23 years straight. We're going to include some training with it because there's a lot of stuff you can do in Metastock. It's not going to be like a one-trick pony, something that you can grow out of. But we're going to include some training, a program called Unleash the Power of Metastock. That's going to come as part of it. In addition, we're going to actually pair you up with one of our in-house support teams. They're right here in our Utah office. They're going to actually kind of go in. They'll give you a little bit of a tour of Metastock. They'll make sure you understand how to use it. And they do a really, really good job. In fact, they do such a good job that whenever we're working with a new partner to help them learn about Metastock, we send them through it. It's so good. And then I'll tell them, we don't just do this because you're somebody that we want to work with. We do that for every customer. And I don't know the last time that you contacted somebody that's a support agent for a software company, but man, these guys do awesome. They get rated really well week after week after week. And that's one of the things I think we can really bring to the table is we can really help you. Not only have great tools that have been rated #1 for 30 years in a row, but also understand how to use them and get the most out of them. And I said it yesterday, a lot of our customers have been with us for decades. And I really think the reason they keep paying us month after month after month is because they keep getting good trades month after month after month. And it's a tool that really helps them. So really, you can pay $69. You can try it for 3 months. You can find out why it's rated #1. If it doesn't work for you, sorry. there's no commitment to keep it after that 3 months. But I want you to be one of those customers that have been with us month after month after month, decade after decade after decade. One of those customers that tell us how well you're doing finding and identifying those good trades. So you can do that. Get in touch with us at metastock.com/conf-promo, metastock.com/sales chat, or give us a call at 800-882-3040. We'll be happy to give you information, answer questions, help you get set up. 30 years in a row. Give it a go. All right, very good. Thank you, Jim, Bill, Henry, Yogus, Neil, Michael, James, for all the numbers. Appreciate it. We'll have more prizes to give away. Let's go ahead and get transitioned over to our next speaker, and I might say right on time. So our next speaker is Anka Metcalf. She's going to do a great job. She always does. I love having her on because she has a kind of a little bit of a different approach than what we've heard today. Just like John just did. She's going to kind of come in and talk a lot about kind of how she uses charts and how to do analysis. Anka, let's go ahead and bring you in here. How are you doing today?
Hi, Jeff. Just a quick sound check.
Yeah, I can hear you.
Okay, I'm logged in on 2 computers for some reason on this computer where I'm going to host my presentation. For some reason, the volume doesn't work. So my speaker doesn't work. So I have my laptop on standby with your voice.
That makes sense. I was going to ask you why you were logged in twice, and I was going to kick you out in one of your instances just to prevent problems. But since it's on purpose, I won't do that.
I appreciate it. Thank you so much.
All right. With that being said, I'd say the event's going really well today. We've had some really good questions, some really good participation, a really good, smart audience. And I'm not just going to pander to them the whole hour, but it's been going very well. So with that being said, I'm going to get out of your way. It's your turn. Oh, here, let's turn over the presentation to you first, though. Let me see. Let's make you the presenter. And I'll let you know I can see it. That is the right screen I just sent to the presentation to, right?
All right.
I can see it. All right, cool. I'm going to go ahead and turn off my microphone. It's you. Take it away.
All right. Thank you so much. Good evening, everyone. Welcome. Thank you so much, Jeff, for having me here today. It's always such a great pleasure to be with Metastock, and all these events are so educational and so fantastic. And believe it or not, there are things that we as professional traders or educators learn every single time from other traders, and we pick it up from there. There's always room for improvement in trading. So today I will be talking about swing trading into profits, literally trading only 10 minutes a day. And I'm here to share with you this complete strategy that I use to literally trade 10 minutes a day. Before we continue, you can pause and you can read the risk disclaimer, and basically here what we're saying is that this whole entire event is for educational purpose only and should not be construed as an investment advice regarding the purchase or sale of securities, options, futures, forex, or any instrument of any kind. So for those of you that do not know me and are not familiar with my work, my name is Anka Metcalf, and I'm the CEO and founder of TradeAlot.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and actively invest in the markets, in any market, whether you're trading stocks, futures, whether you're day trading, swing trading, or investing. I have been a trader for more than 20 years, and prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I'm a very successful trader and investor without a losing year up to date. And in fact, our performance is on our website for day trading and also for swing trading. So we put our money where our mouth is. I also run a professional swing trading service that has started. We actually have started that in 2010. So it has been going strong on 13 years right now. And also I do run a trading room every single day since 2017. And this is designed for actively trading the power hours. So basically a couple hours every single day. Also performance on our website. We do offer education for swing trading, day trading, and investing. And I'm here today to show you what I specialize in. And today we're going to talk about these high velocity trades and how to find them. You too can find these patterns when you scan. And what better idea, you could use Metastock to scan for these trades. It's perfect. I'm also the designer of an institutional proprietary trading system that is based on price support resistance, but there's a catch. I don't only focus on the basic supply and demand. I focus on 8 layers of price support resistance. I also correlate them with specific trigger times, especially for day trading. For swing trading, it really doesn't matter because you need to get into that pattern and into that trigger point. And also specific price zones. There are 4 specific price zones that institutional traders pay attention to, and a lot of algorithms. When I'm talking about institutional trading, especially when day trading or swing trading, you're also going to be competing with a lot of algorithms because of the trigger points that are designed into the market. And also I pay strong attention to chart synchronicity and divergency. All right, so if you want to get a hold of us, you can find us at tradeoutloud.com, and you can find us on Twitter. On Twitter, X, should I say. I share a lot of trading ideas. If you're active on X platform, feel free to give me a follow because I do post a lot of information there. But you could also follow me on Facebook. You have my private Facebook, which is Anka Metcalf, or my company, which is Trade Out Loud. You can find us on YouTube, LinkedIn, and so on and so forth. So let's get started, everybody. Today, we're going to be talking about how to get started swing trading and even active investing. And we're going to also talk about the best trade setups for explosive gains days and weeks before they can happen. So you can actually look at the technical charts and forecast these moves and where these moves are likely going to happen. We're going to talk about focus timeframes for best results. So what are the best timeframes for swing trading and what are the best timeframes for investing? So you don't waste your time and you don't waste your money, because sometimes you could get a little bit overwhelmed by looking at charts and you go like, I don't know what to look for. Am I going to look at a 1 hour? Am I going to look at the weekly? Am I going to look at the daily? So I'm here to share with you what strategies work best on which time frames. And trade selection criteria. Well, how do you select a winning trade? Or how you select a trade? Not all the trades are going to be winning trades. Obviously, there's no such system in existence where you're going to have only winning trades. But the most important thing in trading is to do what? Is to have number one is to have big winners. Number 2 is to have winners altogether. Number 3 is to have break-even trades and very small losses. And that's the key to successful trading. And we're also going to talk about how to spot mega opportunities even in the worst market environments, because let's face it, October was one of the worst market environments that I have seen this year. It was very difficult. It was a very difficult beginning of the month, but towards the end of the month, I'm going to show you some of the trades that we have been in and how they have brought us huge profits into the end of October. And in fact, we're still in those trades right now. So let's talk a little bit about self-directed trading. This is what we're doing. We're at home and we have a computer. We're logged into the internet. We have a trading platform. We have a brokerage account, and we have the green light for trading. So this is basically self-directed trading that we do ourselves. So we are not going to give our money to any kind of manager, portfolio manager, or hedge fund or institutions. We're doing it ourselves. So self-directed trading or investing, right? Whether you're trading for day trading or swing trading or investing, right? It's all about taking control of your financial future, managing your own money, because nobody can do it better than you. And I guarantee that once you learn how it's done, you're going to have far better results than any kind of fund out there. I'm going to show you some of my personal results, and I'm going to share with you some of the strategies that you can use as well. So the most important thing is to make your money work for you. Because swing trading, what is swing trading? Swing trading is generating cash flow, basically generating income. And the more income you bring, the more your next nest egg is going to grow. So your wealth is going to increase and you become a money magnet. So here's some things that you don't need to be specialized in order to be a fantastic swing trader. You don't need to be a math whiz. So you need to have like a basic calculator on your desk, and that is to calculate your position size for your trades, your risk. You don't need to have a finance degree. That's right. You don't need to have a finance degree. All you need is to learn a little bit of technical analysis and a little bit of fundamentals. That's it. And you don't need to know a lot of fundamentals. Fundamentals in the sense that you need to know when the company reports earnings, and that's pretty much it. And how it performed into the prior quarter, just to have an idea of, especially if you're investing in a stock and if you want, let's say, to compound into that specific asset, to see if it's worth holding or not. And we're going to talk about some criteria that you need to follow if you're looking for these investment stocks. So every year, I'm going to let you in on a little secret. Do you guys know that every year stocks will move about 20 to 30% and even maybe more? I mean, hello. And this happens at least a couple of times per year in cycles. I mean, can you believe that? 20 to 30% in cycles. All right, let's take a quick look. This is a chart of Apple. So Apple from January all the way from January to July to the July peak, it went up 60%. 60%, that's right. So you can see here that it went basically, if you take this 20 simple moving average, and by the way, for those of you that don't know how, what kind of indicators I used the 20 simple moving average, which is blue. I used the 50 simple moving average, which is the green, and I used the 200 simple moving average, that is red. And basically you could see here that the price action has been above this 20 simple moving average aggressively from January all the way to July. Right? So this is a 60% move. Now let's take a look at Apple weekly chart approaching a 1, 2, 3 buy over doji high, right? And it even rhymes. Now here is what I'm looking for. When you have a pullback, I like to see at least 3 bars down. And this is part of the strategy that I look. I like to buy stocks that are trading above the 20 simple moving average, because once they are above the 20 simple moving average, and they continue the trend. And once they fall below the 20 simple moving average, they look more bearish and they have the tendency to pull back even more. Now, again, this is a weekly chart. This is one of my favorite timeframes where I scan for trading opportunities. And when we have a pullback, you want to see at least 3 to 4 bars or 5 bars down. You don't want to get on a swift pullback on a 1 bar or even on a 2 bar. You want to see 1, 2, 3. And here, Apple has a gorgeous setup. And if it takes out this high right here, take a look at your charts and see where Apple is right now, right? If it takes out this high, it's going to launch back up to the prior high that we had at the beginning of October, okay? So this is looking pretty cool. You can see that we have 3 weeks in which the stock pulled back, and now we're heading into a buy setup. This is a buy setup. When this green bar takes out the prior bar high, it actually confirms that the price action is ready to continue higher. All right, so let's continue. This is a chart of the Qs, right? Now, at this point, I've updated my charts for this presentation last night. But guess what happened, guys? In the meantime, we got close to a perfect rotation off of this point. And I want to share with you something. This is a textbook retracement to start with. And you can see here that from this high, we have retraced all the way to 61.8% fib. And from this point on, we are continuing higher. And this pullback is coming into the 23.6. This is an aggressive news type of retracement. This is a news type of retracement, very aggressive. And typically, if you have been trading the QE years, like 2009, 10, 11, 12, 13, all the retracements were very shallow off of the 23.6. very seldom that we would have a retracement to the 61.8. But this is the last line in the sand because a lot of investors and traders already have orders set for the 61.8%. And you can see what happened here. So retracement, they started to drool over this level. And this is one of the reasons why it has consolidated here for so long, because it tested this area for 1, 2, 3, 4, 5 bars at this point. All right, so who else has a similar pattern? We have a dominant trend right here. You can see here that we're approaching a 1, 2, 3. Remember, we were talking about Apple, right? All right, this is a chart of the Qs, right? So you have the 1, 2, 3, and rotation back up. Monthly chart of the Qs is triggering a monthly buy. This is very solid. This is very strong. And this will actually trigger a high velocity move. A high velocity move is something that if you're looking to swing trade, if you're looking to day trade, shorting is not going to be an option and you will have to stay long. All right. So what happens if we trigger, for example, because we were discussing the fact that stocks can move for 20 to 30% or even more every single year, and they do. What would happen if we get a trigger in the Qs, right? And what would happen if we start moving up to the next target? Because this would be the next target, right? That would be another 10% move all the way into this. It's about 415, the target. 416, you could see the price right here, 416, 415 to 416. That would be like another 10% move. Without you micromanaging or doing anything, all you have to do is sit and wait until this pattern forms, wait for the green to take out the prior red high, and wait for the target to be achieved. Obviously, calculate your size, calculate your stop. My stops are always below pivots. In this instance, so this would be like a really pretty 2.5 hour to 3 hour type of trade. Now, money managers and hedge funds live mostly off of our commissions and fees. We are just an account number to them. Whether the stock or the fund performs or doesn't perform, they actually get paid. And here's the fun thing. Barclay Hedge reported that over the past 5 years, the average hedge fund in its universe produced a net analyzed gain of 7.2% with a Sharpe ratio of 0.86 and market correction of 0.9. Did you guys see this number? Analyzed gains of 7.2%. I mean, are you kidding me? When in one stock and one move, you can make 10%. When you can make, for example, in Apple, let's say you're not going to stay in the whole entire time, the 60%, but you can make various moves right here of 10%, of 5%, of 3%, of 4%. If you can take all these little setups that are developing here and you can make 2 to 3 hours in here, and you can make, let's say, 5% here with a 3% here, and another 3% here, and another 1% here, you would have like 10% only in this move. Only in this move in one stock in a couple of months. That's it. And they're discussing having a 7.2% annualized gain. Yikes. Now, here's the thing. New report finds almost 80% of active fund managers are falling behind the major indices. Okay, you really do want to put in the due diligence, and you really want to put in a little bit of elbow grease and start learning how to trade and it's not even complicated. Listen, if you think that trading is complicated, and that is because you probably have the wrong instructor, because trading is actually not that hard. Trading is actually, and learning how the mechanics of trading are not hard. We as traders, when we don't understand something, have the tendency to overcomplicate things. But if you dumb it down, literally, trading is not overly complicated, especially swing trading and especially investing. These are the two simplest ways in which you can generate money. Literally trading, or managing like 5 to 10 minutes a day, like maybe not even. Like I have to send alerts to my traders and I do the extra work and it takes me about 10 minutes a day, like seriously, and managing my positions as well. And that is 10 minutes and that is intense. So take a look at this stock. This is Costco. Costco, January to November 2023. So this is January to November 2023. And by the way, Costco just put in a gorgeous move today as well. And this is the monthly chart. Went up 26%. So if you have a trading universe with just some few stocks that you love and understand, these are stocks that I always trade. Apple, who doesn't own an Apple phone? I do. So I trade Apple a lot. I own an Apple phone. I shop at Costco, and I own the stock Costco long term, and I swing around it. Okay, here's Costco right now. Costco is about to explode. You see this conglomeration right here, and you see that we have a Christmas light effect. We have the green, the red, the green, the red, the green. Over these highs, this stock is going to move higher. It's going to go to this target right here is 611, and beyond 611, it's going to skyrocket to 161. This is the power of technical analysis. So this is a gorgeous target to the upside. Let's take a look at Amazon. Amazon has had a very choppy, let's say, fall. But from January to September, Amazon went up over 70%. So like I said, even if you don't invest in it to capture the whole 70%, right? And if you swing it, for example, look for buy pockets, you swing it, you sell it. You swing it again, you sell it here. You swing it again here, you sell it here. You swing it again here to the top, you sell it or keep it, and so on and so forth. So you don't have to keep it for 70%. You could get 3%, 2%, 5%, 7% at a time. You don't have to live through pullbacks. So that was the sharing earlier. Trading is actually the easiest trading style to make money. But you do need to know and to respect the rules of the game. And you need to be patient and wait for the setup, because if you don't have a setup, if you don't have a clear formation, there's no winging it, because you need to know these trigger points that are these inflection points that are bringing the action into the stock, into the market. It's not about the trade as much, but it's about the risk and about how you manage the trade as well. So why is it important to get started in trading, or to get started in investing, or to get started in swing trading? Well, because the money is sitting in the bank. And because the money that is sitting in the bank loses its value every single day due to inflation. So take a look here. This is a trade that we have done on October 6th. We actually closed it later in the month. So this is the execution from my platform. So you can see this is our entry point. This is our exit point. We had it with 4 contracts. We held it for about 2 weeks, generated $60,000 in a very short period of time. So who's swing trading for? I don't know about you guys, but I'm all in for working less and having more and do the things that I like. So trading is literally, or investing, or swing trading, or swing trading in particular, is for individuals that have really busy lifestyles or simply don't want to work as much. It's for part-time traders that do not want to sit in front of the computer all day long. It is a wealth generation style because you generate cash flow, and that cash flow allows you to allocate some for your investing portfolio, just like day trading is. And all you need is about 10 minutes a day. And basically, what do you need in those 10 minutes a day? In those 10 minutes a day, you basically are going to go through your list and see if you're going to pretty much change your trail and start trailing your trades. That's what you're going to do. And if you, for example, have had a week like last week or this week where you have some home run trades, you may allocate those 10 minutes for extra scanning to see if there are any other trading opportunities. The best thing about it is that you can work from home. Now, I day trade as well. I swing trade, and I'm a really active investor as well. The reason I like swing trading is because I don't have to sit in front of the computer all the time. And basically for swing trading, I can trade on the go. I can scan from my phone or my iPad or my laptop on one screen. For day trading is a little bit different because I tell everybody you need the real estate to see what's happening in the market. Day trading is more complex than swing trading. And the best thing is that you're making your money work for you and you don't have to pay any extra fees or commissions. Now, how can you get started? First of all, you're going to have to open an account, whether you open it with Charles Schwab or TradeStation, Interactive Brokers, Robinhood, Fidelity. Find a broker of your choice. And number two is then you're going to determine your risk size, and your risk tolerance. So your risk size will be correlated to your account. I would say the benchmark for risk is between 1% and 3%. I use 2% for swing trading, and I use 1% for day trading. And about risk tolerance, here's the thing. If you have a really big account, for example, an IRA or any kind of retirement account, and for example, if you feel that 2% is way too much for you, you can really go down into something that you feel manageable. So that's what risk tolerance is all about. Step 3 is to establish your game plan. So what is your game plan? First of all, the strategy that you're going to be using based upon the knowledge that you have about the market. And trading plan you should be including what is your entry strategy, what is your stop strategy, what is your target strategy, what is the risk strategy, and that's pretty much it. And if you have everything all set in here, then you just execute the trade. And then you have to create a trading universe. If you create a trading universe, it's going to be really easy on yourself when you do the scanning. You could either scan with, for example, like Metastock, or you could basically go through stock one by one. At some point throughout the week, and especially in the weekend, I like to take, for example, different scans that I have, different trading universe that I have, and run through stock by stock. Because you're going to find that it's so useful when you scan through particular trades, through particular charts, because you may find a setup that otherwise you would not find on your regular scan or scanner. I've used scanners my whole entire life, so I'm very familiar with scanners, and scanners do the work for you and they find you a lot of trading opportunities. But before you get to the trading opportunities, you have to make sure what your trading criteria is. And we're going to discuss in this webinar a little bit about what you need and how you need to scan, because not all stocks are tradable. Okay. And what I mean by that is some of them have very low volume and you could have a killer setup, but the volume may be really low, and I would not be interested in those. And step number 3, create that strategy. I like to trade with a trend. I'm a trend trader. I also counter trend, for example, and I had an example with bonds last week, and they worked. I didn't take the trade because I just didn't believe in the bonds, but it worked. So I shared it with my traders, and I actually told them, it's like, hey, you could take the trade, but I'm not going to take it. I don't like it. I have some other ideas that I want to share with you guys, but this is not going to be my favorite. But that was a counter trade in TLT that we have identified. So you don't have to take all the trades if you don't feel comfortable and you don't feel that they really fit your trading criteria, because they're different trades and you have to listen to what your gut feeling says about it too. And in this strategy, you're going to have to determine what stocks to trade. And we're going to talk, like I said, a little bit in this webinar. So what is swing trading 101? And what am I referring to swing trading? You could swing trade stocks, or you could swing trade ETFs or futures. So swing trading is the sweet spot between day trading and position size and position trading, which is investing. It generates high probability trades and it offers the best chances of success. It generates the best return on investment. And there's a secret to it, because when you're swing trading, you're basing your decisions on higher timeframes. Higher timeframes support resistance, and all the technicals that are followed into that specific higher time frame are more likely to hold than smaller timeframes. Then I would be trading a 2-minute or a 5-minute. That's why stop outs are more common when you're day trading and less common when you're swing trading. So swing trading positions will be held for about 2 days to a couple of weeks. Now, for example, I'm going to give you an example. If you have a stale market is a market where you're not having a responsive price action. And oftentimes, literally from time to time, at key inflection points, you're going to have this stale market. It is a market that is basing. It's a market that is ranging, and it's normal because the market is into a digestive mode, and it's just shopping around to see if it's finding buyers or sellers at that inflection point. And if that, for example, timing lasts for 2 weeks or 3 weeks, we have had, for example, in 2015, we've had about a year and a half of a base on a daily, on the weekly. It was very hard to get some action into the market. The market was very stale. So you're going to find yourself that you're going to stay a lot longer in these trades. Now, a lot of traders, what they do is they get bored when they see that they don't have that instant gratification and they exit. But after they exit, they're going to see that the stock has started finally to move. So being bored in a trade doesn't allow you to exit the trade. So you have to respect the parameters of the trade. So swing trading focuses on higher timeframes. I shared with you the fact that earlier that we're going to discuss timeframes and what strategies to apply at those specific timeframes. So when I'm swing trading, I'm looking at daily, weekly, and monthly charts. I do the analysis on these higher timeframes, but I focus on entries on the daily and weekly charts. And I'm looking for price rotations, the ones that I showed you earlier in the presentation about those rotations, those buy setup, the 3 to 4 bar pullbacks into the 20 simple moving average, and that rotation that where I'm placing my stop below the pivot, I'm getting in when the green bar takes out the prior bar's high, and that represents my entry, and I get my resistance from the prior resistance high, or if there is an asset that is trading into all-time highs, then I apply my Fibonacci projection tool. So everything is pretty much based on technical analysis, except for that little 1% that you need to pay attention to fundamentals. Fundamentals, and by fundamentals, I mean earnings, right? Earnings. Because you don't want to, for example, if you have a stock, like say Disney's going to report this week, right? So I'm not even looking at Disney for a trade because I don't want to get into a swing trade ahead of earnings because I don't know what the earnings results are going to be. I like to take calculated moves. Oh, if I'm an investor, yes, I could buy at any time. But as a swing trader, I would much rather take it after it reports earnings if it fits my trading criteria. So swing trading is not about capturing the entire trend. It's about finding the best possible entry opportunity and profiting from the stock's momentum, up move or down move, by not living through reversals. So this is the cool part about it. It's pretty much like day trading, right? Because all you want to do is once you get a rotation, you want the stock to move up, right? Or the futures, contracts, or whatever you're trading, ETFs. But you're all in all going to capture this core. There's no way to nail the bottom. There's no way to nail the top. Because at the reversal sign, when you see this hat forming, this pivot forming, that is a sign of topping. So you got to exit at some point into this rotation at the first sign of a sell. And at the first sign of a buy, you're going to get in. So swing trading is a simple strategy where you enter the trade when the price breaks above the pullback reversal pattern or breaks above the range. It's the buy setup. The key is to know how to enter upswings or downswings and identifying the key spot. Banking the profits before the market turns around. So what are the elements of the trade? The anatomy of the trade. Each trade needs to have an entry, a predetermined entry, a predetermined stop, predetermined target, and a share size, right? Position sizing is very important because you want to keep everything in check. You want to keep everything aligned. So let's talk a little bit about the pullbacks, right? So I mentioned earlier that I'm looking for a pullback. So I'm looking for a pullback of about 3, 4, 5 candles into the 20 simple moving average. So like I said, I'm using these moving averages as safety net. The reason why I'm using these moving averages, not because I love to have spaghettis on the line, no, because other than that, I would trade off naked charts, but because there's so much level of interest there into these moving averages. There are a lot of algorithms that are being used within these moving averages. There are a lot of funds that are using the same moving averages. So there are a lot of traders that are using the same moving averages. And you want the crowd to use the moving averages, because once the crowd uses, pretty much the same indicators, they're going to start responding, because everybody's seeing a buying opportunity or a selling opportunity at or around these levels. Now, as you guys know, the 200 simple moving average, or may not know, this red line right here, that is red. It's like focus, alert, like stop what you're doing and see what's going on around this 200 simple moving average. This is the daddy of all moving averages. Pullbacks that are happening around this moving average are and rotations, buy setups that are happening around these moving averages are highly buyable, and they produce a very strong reaction. So for example, if we would have had a pullback into the 200 simple moving average, we would have had a very strong reaction. But take a look what happened here, right? So when I look for a buy setup, I look for a retracement, right? So once I have this little hat formed, this little pocket form over here, I have the red bar here that confirms the pivot. This is the pivot high. It's obvious that the price action may want to go lower or it may want to go higher. So as you can see here, the price action is pretty much anchored, this red bar is pretty much anchored into the 20 simple moving average. So now what I'm waiting for is to see if this green bar is taking out the prior high, and that would be a confirmation for me that I'm going to go long for sure. And then I'm going to put my stop below the low. But what this green bar did is set up an inside action. So this inside action, meaning this bar didn't take out the high or the low of the prior. So what that means is that I'm going to be waiting for another day, because this is not going to be a decision day, right? This is an indecision day. So we had indecision day. We don't have any kind of triggers. And then we had this next bar right here, just behind this arrow, that actually took out the low of the prior bar. So really not significant. It's not, and we're not having a complete buy until we have this rotation that is happening, because you can see here, do we have any kind of rotation? No, we don't. The next rotation that is happening is on this bar right here, the red bar that is taking out the prior green bar high. And you can see here, this is where we place the stop. This is an actual trade that we've executed. And this is the move. Where did we get out? Well, we waited for a confirmation to the downside. This is where we exited the trade. So entry clear on rotation, no trade. The stop goes below the pivot. And as soon as we have a rotation to the downside, we actually got out a little bit higher here, but the arrow just went down a little bit. So anyways, we captured the core of this move. Now, how to select winning stocks. It takes a proven strategy to select high odds day trade, swing trades, and even stocks, ETFs to invest in or to swing trading. The stocks need to be fundamentally sound for long and medium term trading. So what that means is they have a pretty good record of earnings. Fundamentals need to be in line with the technicals. Like I said, I focus on 1% fundamental, not a big thing. Buy stocks that are in sell. It takes the risk out of investing or swing trading and creates the best return on the investment. So when to buy? When certain events happen in the market, these events create pullbacks, major pullbacks, and these are great for compounding in your investment strategy. So when I invest in stocks, I just don't throw money into the stock. I look for technicality. I look for a technical buy into it, because I don't want to buy it into the high. I just want to make sure that I have a good area where to buy it into. So what are these events? Well, we have the dot-com bubble, we have the 2008 financial crisis, 2016 election, 2020 pandemic. We have the wars now. Last year we have the Ukraine war. This year we have the other conflict that is into the Middle East, right? So all these create trading opportunities for us. Do I need these events really to get in? Well, yes and no, because sometimes you're getting like normal pullbacks just based on inflation, for example, or based on any kind of events that are domestic. All right, so focus on companies that have thrived and survived over years, especially if you're looking for a longer term hold. Be diversified. Don't put your eggs all in one basket. So for example, if you're buying tech stocks, you're not going to buy, like all tech stocks, right? You have to diversify. You have to buy some, home builders. You want to buy some, banks. It depends on the environment. Stay away from high-risk industries, airlines, hotels, biotech, unless you swing trade them. So, for example, today, I don't have the example right here, but you can look at the example on your charts. I found a trading opportunity because I was doing a little bit of scanning while I was day trading because it was kind of like a boring day. We were in some trades and we were waiting for some trades, and I found a stock Pfizer that had a good potential buy setup over yesterday's high. So other than that, I don't think I have traded. I traded Pfizer, I think, in 2020, and then I just don't like to trade these stocks. Here's another opportunity. We were talking about rotations. This is a perfect example of a rotation. You have the candle up, you have the top, and then you start to retrace. You have retracement, 4 bars down into the 20 SMA. This is the candle that confirms that it's ready to trigger higher and it's ready to confirm new highs. This is Google, by the way, guys. It's a quarterly chart. Textbook pullback to the 20 SMA, 4 candle pullback, strong uptrend, great technicals, good fundamentals, great business model. This is it. If you left it before the split in July 2022 at $2,255, if you wished you've owned it back then, you should own it now when it's at this price. Okay, so swing trading and investing is all about being in sync with the institutional footprints. That doesn't mean chasing what institutions are doing because you're late in the game. You got to follow the cycles. And there are 4 cycles. We're going to talk a little bit about those cycles as well. You got to pay attention to institutional buying, selling, because this is actually what creates the follow through. And you need follow through when you're in trades, right? What happens if you don't have follow through? You're going to have pretty much a price action that is frustrating, that has happened at the beginning of October. But what happened then? We had follow through last week and we have follow through this week. Institutional buying, selling occurs during strong trends on technical pullbacks, and those are areas of accumulation. The buy zones provide clear, buyable points, just like we have here. Very clear. 1, 2, 3, 4, rotation, and up. All right. We have been talking about stages, right? Did you guys know there are 4 stages into the market? There's a tentativeness stage, which is this one right here. This is the sniper stage. You're waiting and you're waiting for a reaction. Obviously, you're going to evaluate the trend. And if it's an uptrend, obvious that stage 1 is you're going to stock for a buy opportunity, for a breakout opportunity. So stage 1, you stock for a buy. Stage 2 is the accumulation stage. In this stage, you buy every single pullback that happens into the market and stay in it. Stage 3 is usually the stage where you're hitting some kind of prior resistance or some kind of fib extension, some kind of target, some kind of measured move. And at this point, the price action is going to become very similar to the stage 1. This is, again, the waiting stage. It's sort of like the stage that is going to tell you if it breaks above, it's going to continue higher. And if it's going to break below, it's going to retrace. Okay. So if it breaks below, like in this case, it's going to enter in stage 4. And that is the distribution stage. And if it breaks above the stage 3, then it enters into a continuation of stage 2, which is the accumulation stage as well. So if you're looking at this stage right here, this is a development of the stage 1. Sometimes they're pretty wide and pretty kind of blocky, and sometimes they're really sharp and trying to rotate sooner. If you want to swing trade or if you want to invest, these are the types of stocks that you want to be in. You want to be in growth stocks, value stocks, income stocks, blue chip stocks, and sometimes even penny stocks, believe it or not. I have invested in penny stocks a lot while we were, actually during the 2008 financial crisis. I bought literally Sirius Satellite back in 2009, I believe, or was it the end of 2008, or I think it was like January 2009, if I'm not mistaken, for about 13 cents. 13 cents. Actually, I sold it when it was at $7, but can you imagine the return on my investment? Yay. All right. So when it comes to trading, no one has a crystal ball. It's just 99% technical. And like I said, 1% fundamental. All right. Here are some trades that we took. And again, you could see here that basing stage and the breakout, right? You could see it right here. Beautiful. And you could see why, because we have the small rotation within the base. Small rotation within the base. So how to select these winning stocks? First of all, you have to have a good history of earnings, right? The company has to have a really good history of earnings, 3 years minimum. And this is, again, for longer term hold. If you're looking to hold more, does not apply to swing trading here. Or the last 3 prior quarters earnings have to beat expectations, of course, and enter the trades after they post their earnings results. Buy companies that have really good earnings and sales. Look for companies that make a big splash. Internal new products, services, launches, etc. Can you know of any stuff like this? Of course. We have Amazon, we have Apple, we have Netflix, right? Technical charts, trade with the trend. The trend is going to be your best friend. Volume, look for good volume, spikes of volume, and ranges, and constant volume growth, because that means that institutions are getting in and legging in. Look for volatility contraction, because usually the biggest move comes from the smallest bars. Position within sectors and indices, laggards and laggards. Always scan for leaders and laggards, relative strength and relative weakness, and always pick the strength for momentum higher and weak for momentum lower. Institution participation account for 85% of the market volume. And also, if you have the capability to look for block trades or dark pool activity, that would be interesting as well. Look for inflection points. These are inflection points right here. I like when we're getting these crosses, right? This is a great inflection point, and you can see here how after that inflection point, and it just so happens that it's around the 200 simple moving average, right? I was telling you guys about the daddy of all moving averages. All right, so when do we need to enter a trade? Focus on the cycle, the buy, the sell, the short, the pullback, and select the optimum entry that will generate the best reward. So for entries, an early point within a potential leading sector consolidation or reversal from a correctional pattern, a buy pocket. Remember I showed you the 1, 2, 3, 4 rotation buy, that's a buy pocket, that's a buy point. So this offers both a way to get on board strong leaders later on in the uptrend, as well as an extremely reliable and powerful tool for adding to positions. This is called pyramid trading, and it's a real thing. I love to add on any kind of pullback in strong ongoing trends, especially when investing or even in swing trading. Initiated earlier when the stock was still within or just emerging from its original consolidation or reversal from the correction pattern. The trade out low strategy looks to buy dominant support with the confirmation of rotation. So what do we look for? Pullbacks into any kind of confluence support. A confluence support is the support level where you have support at a certain level. So for example, you have support on the weekly, you have support on the daily, you have, let's say, a moving average, you have a prior pivot high, so therefore you have a minor support. So you need to have a confluence. You need to have 2 or 4 areas of support on any kind of time frame that will actually have the capability to stall the price and rotate it at that point. So it would have to have not only one reason, but 2 to 4 reasons to reverse. And the stock needs to be correlated with the indices and the positioning in its sector. So what do I mean by that? So for example, if you want to trade Apple, you're going to look at the Qs. And you're going to have to do an analysis on the Qs and analysis on Apple. And oftentimes, they're in sync, but a lot of times you're going to find that you have stocks, for example, like what was one? Well, Apple was strong as well. Let's say Microsoft, right? Microsoft was actually stronger than the Qs, right? So you want to buy every single pullback in Microsoft, right? Because it's a stock that is stronger than the Qs. You don't want to buy something that is weaker than the Qs because that's going to struggle. All right. Here's the double bottom formation off of the mighty 200 simple moving average. The second pivot is retesting the prior low, right? Not quite the prior low. It's retesting this area and created a slightly higher low right here. And here you have the rotation. So your entry is not going to be off of the 200 simple moving average. You can, for example, have it. But what I do suggest, if you decide to have it, and I sometimes do it, you have a lot more chances of stopping out, but you could actually start scaling in. So you could actually get, divide your position into 4 and say, hey, I'm going to put one lot over here, one lot when it gets above the high, one lot if it breaks above the, let's say, the 50 SMA, okay? So you scale it that way. This is Microsoft, right? This is investing in Microsoft. I mean, look at the performance here, right? So investing or swing trading is the way to go. Swing trading opportunities, pullback buy pockets, look at these pullbacks, look at these moving averages. Whatever moving average that you're using, test it, do the test and see if these rotations are happening around your moving averages. If not, make small tweaks. I use the 20, the 50, and the 200. So number one mistake that traders make in trading is the traders that only look for stock picks will always be part of 90% of traders that fail and lose money. You must dive a little bit much deeper so you understand the concept behind, because if you don't have confidence in the system, you may not be executing the trades right. So you have to learn how it's done. It's a skill that is going to last you a lifetime. You're just going to get better at it. You're not going to rely 100% on a service. You're actually going to learn how to trade and manage your own portfolio because this is your job. It's your money. It's literally a recession-proof skill. So if you're worried about inflation or recession, you could actually teach your kids how to do it, okay? Gold has been one of their biggest winners this year. And the arrows right here represent the trades that we have taken, okay? This is from my portfolio right here. So you can see that this has been a wealth generator for my portfolio. 10 ways to generate income in swing trading. Number 1, let the chart do the talking on your risk tolerance. Patience to wait for the pattern and for the risk level. Select the proper time frame for each trade, short term versus medium term. So make sure that if you're a swing trader, dive into daily charts and weekly charts for clues. Don't overthink, because when you're overthinking and if you're overanalyzing, that's not a good thing, because you're going to start pushing a trade and you're going to start, just misinterpreting the trade. It has to be very obvious. When you look at the chart, say, yes, that's a buy, or no, that's absolutely nothing. Become a good technical analyst, and that's going to help you in your career. And this is actually where the money is at. Keep it simple. Look for relative strength and weakness. Like I gave you the example with Microsoft and the Qs. Go with the trend. It's so much easier. Buying the dip is not a strategy. So make sure that you know what you're talking about, and don't be stubborn in your trading. And here's my game plan. I zoom out to the bigger time frames so I could have a better understanding of what's going on in the market. I analyze the indices and I analyze the stocks and I analyze the sector from which the stock belongs to, and to see if that stock has relative strength and weakness compared to its peers. I like to trade runner-ups into earnings, but I don't like to initiate trades right a couple of days before earnings. I do not hold swing trades into earnings. You could do that through options or lotto. If you decide that, hey, this could be a good investment opportunity, then that will allow you to hold for earnings. Then I zoom in my technical image and on the time frame where the pattern is forming, so I could have the pattern recognition so I know exactly where my entry, stop, and targets are. Again, don't overthink and have a precise trailing plan in place. So like when it gets into a certain spot, what do? For example, I targeted one, I like to scale some off. I usually take half off, raise my stop to break even. I wait for target 2, scale a little bit off again, I trail it into target 1, and so on. Assess the odds for the trade and position size, so important. Scale into targets always. Rules, okay, environment, high risk or low risk. Look at the seasonality, and by the way, I've shared up social media 2 weeks, I think it was 2 weeks before November, and I said, just wait, because we will have some trades. Have some patience. Everybody was on patience, like, give me a trade now. I want to make a trade. I want to take a trade now. And I said, look, the seasonality is going to come in November. It's not going to come in now. Okay. And soon enough, last week of October and going into November, that is when the seasonality kicked in. And actually, the seasonality kicks in end of October. Be diversified. Use limit orders. Do not get out of a good trade. Let the market take you out and trail, because a lot of traders say, oh my God, I achieved target, I'm out. That's really a bad thing to do. Because you're leaving a lot of money on the table. All right. So trade stocks that have really high volume, trade stocks that make sense to you. Ideally, trade stocks that are trading above the 20 and the 50 simple moving averages. Look for those confluence zones on different time frames. And one of the things is that I look for is that volume, at least 1 million shares traded every single day. All right. So here are some charts. And these are some of the trades that we're in right now. This is our entry in Microsoft. Look at where it is right now. Remember, we started off by saying 20 to 30% a year minimum, right? Stocks move 20 to 30% a year minimum. And they do that several times a year. This is Microsoft trade that we're in. This is the SPYs. This is our entry. You guys can see the rotation. You cannot get it any better than this. Bam. And today it's even a little bit higher, right? Look at this move. It's explosive. We are in Netflix as well. This is our entry. This is our rotation here. Bam. We have a much higher target. So wealth generating is literally cash flow creation. Swing trade is basically part-time trading with full-time results. Now, I'm going to talk a little bit about my service. I have to warn you, the price is going to double in December, so that's very, very soon. We do provide a newsletter that is out every single Monday. It's called a Stock Swing Trader, where I put out a video with the market environment analysis, full blast analysis, all the indices, ETFs, metals, energy, everything, including the stocks that we have on watch with clear parameters. And then we have a sheet that I'm going to share with you in a little while where we post all our trades. We also have a private X feed where I update the traders on where we are and how we trail in real time. So we have been delivering swing trades since 2010. I've had the service, and this is the service that we had since 2010. And it's our oldest service. And we have the performance to prove it. It's on our website. It's a service for self-directed traders. We will show you how to navigate the markets without being chained to your computer. We're going to do all the work for you. We scan, we find the trades, we do the market analysis. We just tell you where the entries are and what the context is. Our approach is 95% technical and only 5% fundamental. So if you guys want to take advantage of this, it's tradeoutloud.com/swing trader. And I'm just going to share a little bit. And if you go to that page, you're going to find out more about the service and what we have to and what we offer. Once you get into the program, you're going to have access to the performance tracker. And this is only for this year on the website. You're going to have it since 2010, obviously. So all our performance every year, every month with all the winning trades, the losing trades, everything. So this is our performance from 2023. You can see here our total for a month. This is a winning month, losing month here. And you can see if you scroll all the way to the very, very bottom. All right, this is November. These are our trades for November. You can see today it's November 7th, and this is when we initiated the majority of our trades. Apple, Cisco, McDonald's, Costco, NVIDIA, all with parameters. These are our trades from last week. You can see that we still have them active over here. And this is our year to date. Okay, so you can see January through October is still open, but we are up big. Take a look at the percentage gain here. Isn't it better than having somebody else manage your account? This is our Private X feed where we update traders on our trades. Nike closing on 110, Microsoft electrifying move. Our entry is 337. Look at it over here. So you can see the chart. You can see, look, SPY's another high, boom. So obviously you're going to get all the updates over here. This is the website where you go. You can log in, and it is tradeoutloud.com. You can log in under services, stock swing trader. So thanks so much, guys, for having me here today. I really appreciate it.
All right. Thanks for coming, Anka. We did have a question about how do you get info in the trading room, but I think you covered it really, really well. If there are more questions for people, what's the best way to reach out to you guys?
Info@tradeoutloud.com.
All right. Thank you very much. Great to have you. And I appreciate it. Thanks for coming in.
Thank you.
All right. Very cool. Let's go ahead and do this. It's prize time, guys. Actually, I better turn my lights on. All right. Cool. And then you can click on the things. It's tradeoutloud.com/swingtrader. And if you could put that
unmuted
at Metastock, I'd appreciate it. It's for YouTube. All right. Cool. Let me do this. Let's go ahead and kind of change over a little bit. I'll make mine just a minute. All right, very cool. Make presenter, show my screen. Let's go ahead and kind of, it's prize time. It's prize time, everybody, but not quite yet. So before we move on a little bit, I want to say thank you to CMT, our sponsor. CMT is an incredible organization, very well respected, have a great reputation, well reputed. I'm not sure that's a word, but I made it up, so I'm going to stay with it. But if you want to learn more about the CMT Nonprofit Association, you can go to cmtassociation.org. And you can also go to content.cmtassociation.org and sign up for their podcasts and the classes that they do and all that kind of stuff. Totally free of charge. So let's see. I got a message that there was an error on the link. Oh, I see what the problem is. See, okay, let's do this. Too many .coms in that one. I'm sure this will work. Thank you for letting me know on that. Towards the end of the day, we get a little bit more, a little bit tireder than we are at the start of the day for sure. Anyway, thanks for letting me know. Thank you to CMT for helping sponsor the event. We appreciate it. We're going to do a drawing real quick. So if you would, you know how this goes by now. You're going to pick a number. That number can be between 1 and 9525. And I need you to type it in the chat. That number is going to correspond to somebody that's registered for the event. So go ahead and type that in. If you do that, you can help us pick a winner. So if you're watching us from YouTube, on YouTube, thank you. Go ahead and register at metastock.com/traders-conference. It's the pin link at the top if you haven't already, so that you can get access to the prizes and be on the prize list. So I am waiting for some numbers. While you're typing in some numbers, I'm going to turn on my camera because I just was told that it was not on. And I'm going to go ahead and tell you what the prize is. So type in those numbers, get them in. Let's go ahead and see what it's going to be. So let's see. The prize for today, I'm just going to my prize list. Stock swoosh yesterday. Melissa Armo came in, and she did a good conversation about trading gaps and how gaps work. And I thought she did a really, really good job. She's giving away some prizes. She is giving away a subscription to her monthly market report subscription. I'm going to give away 2 of those right now. So what I am going to do, let's see. Ken, thank you for helping pick a number. The number is 5540. And then Jim, thank you for picking a number. The number is 73. So let's go ahead and give away 2 prizes right now. The number Ken picked was 5540. And that would correspond to a 5540. Paul K with a Gmail account in the USA. So if your name is Paul K, and your first initial is K, and you're in the USA and you have a Gmail account, there's probably a few on this list, but you could have just won. We'll reach out to you in terms of getting that prize set up. So congratulations to that. Let's see who the next winner is. Jim went with 73. So let's go ahead and figure out who that is. Again, it's the same prize. We're going to go with Melissa Armo and her weekly market report. And then this is going to be Barb K with an AOL account. So let me go ahead and make a real quick note of that so I don't have to come back and watch a video. That sucks. Okay. And then make a note. All right, very cool. There we go. All right, and then you know who we are. We're Metastock. We've been rated #1 30 years in a row. We'll help you scan the markets, find good opportunities, test ideas, crystal clear charting, great real-time alerts, signals, commentaries. Did I mention 30 years in a row? I think I might have brought that up today. 30 years in a row, it's been rated #1 in its price category. What we're doing is what we call an extended trial. You can pay for a month. We'll give you that second and third month for free. That cost for you can be as low as $23 a month for all 3 months. You can try out a software that's been rated #1 30 years in a row. We're going to throw in some training to help you understand how to use everything, how to do drawing tools, how to do everything. We'll throw in a one-on-one session where we'll actually sit you down with one of our technicians. They'll take you through and they'll show you how to do fit tools if you want, or how to run scans if you want, or just about anything that you want. Because Metastock's a software that we've been developing for years. You're not going to grow out of it. It's something you should try. At $23 a month, you should try it. We get a lot of questions like, how do I run scans in this product? And you're like, well, you can't run scans, but you can in Metastock. And I think that's the reason, the depth of the tools, the ability to go in and find those good trades for you. That's the reason it's been rated so highly for 30 years in a row. So do the trial, $60. Metastock.com/conf promo, metastock.com/sales chat if you just want to talk to somebody. We're happy to talk to you. Or 800-882-3040. Sign up for it. It's good. All right, very cool. Ghana and GoToWebinar says, when I registered for the webinar, do I get registered for the raffle? And because you answered in GoToWebinar, I can tell you, you are registered, Ghana. As long as you're in GoToWebinar, in order to be there, you had to register. So yes, by registering for the event, you're automatically registered. Okay, cool. Our next presenter is going to have some fun with Fibonacci. So I'm really looking forward to this. Very first time in the room, Rod David is going to come in here. It's called VidiTrade, and I get his emails on a very regular basis as part of his club membership about kind of how he feels about the market, what's going on, all that kind of stuff. And it's really good. Let's see. He developed an analytic techniques that identify targets, turning points for any liquid stock market in any time frame. He does a lot of S&P 500 analysis, and that's about as far as I'm going to read into his legal bio. I will say, he added me to his list. Thank you for doing that, Rod. It's great. Let me go ahead and kind of bring you online. Rod, how are you doing today? Let's go ahead and kind of make you the presenter. Since this is your first time, I'll walk you through it a little bit. It should have just popped up on your screen and said, do you want to share your screen? And I can see it. I can see some beautiful charts there in the background. I can see your PowerPoint in the non-expanded view. And let's go ahead and turn on your microphone as well. So I just requested that you actually turn on the microphone. If you're having some issues with that, I can help you out. There's a little bit of a green microphone button that you need to hit, and that should get you live. I'm going to send an unmute request. That might help. There you go. I see that your microphone turned on. Yeah, we're good.
Hey, how do I switch the screen to, I've got a dual monitor here.
No problem.
Or do you want me to just stick where I am?
No, you can do it. You see there should be a little triangle next to the screen that says sharing. And if you click on that triangle, it'll expand that section out. And then you should see a show screen with a down button. you see what I'm talking about? Got quiet. Did you find what I'm talking about?
I don't. Let's see.
In the GoToWebinar platform that opens up.
See if we can do that.
Yeah.
I'm on a delay with you on audio. It's not going to be remedied at this time. I'm happy to just proceed if you'd like.
Yeah, that would be fine. What we can see is if you could just stay on that screen, that'll probably be the best way to do it. And yeah, go ahead. It's all yours. Welcome to the room too, by the way.
Thank you. And one moment here.
Display settings will allow you to toggle that real quick, Rod. See where it says display settings, click on that, and you can just swap them. There, perfect.
All right, let me just get going.
All right, it's all yours. Thanks for joining us. Welcome to the room. Go.
So thanks very much. I appreciate the intro. And first time, it's been a while since I actually am on in my video room all day long, but not usually to an unknown audience. So I hope we don't take too long getting used to each other. But welcome to Fun with Fibonacci. I've got 3 tips that I'm going to get to that'll help you tweak your timing on entry and exit, whether you are an intraday trader, day trader, or whenever you go in the market, you're a day trader. When you're buying or selling something, if you want to get a better price, here's an opportunity to manage that entry or the exit for that matter. So 3 tricks that can add points to your entry or exit. Of course, that's going to depend a lot, percentage points, but on what you're trading, what kind of market it is. But these are really worth knowing. Whatever you do, these are worth knowing. The tips. Very easy using Metastock's Fibonacci retracement tool. So I use it. I use these and other tips and tricks in my video room. And just so you know, we'll go over this at the end, which isn't going to be that far away. But we do a lot of Fibonacci. My methodology is very heavily based on Fibonacci, but it is the output is Fibonacci. The input is price and time. The price very much derived from Fibonacci calculations, but also overlaid with timing windows. That's really the key. So just a little bit about me. That I've been doing technical analysis since 1988, and I don't know if you catch the date there. Don't bother doing the math, but just catch the date. See if you can figure out what drew me to technical analysis in 1988 was 1987, stock market crash. I just started out within a year of being a broker, and we had fundamental analysis. We had more fundamental analysis than we could handle, and that didn't do us a whole lot of good. And I discovered that technical analysis was a really neat common denominator across industry. And also at the same time, computer processing power was coming down, was going through the roof. Pricing for it was coming down exponentially. And software titles, people were writing software titles for that. You know, we used to have to, not me so much, but we used to have to write or fill in graphing charts with stock prices if we wanted to look at a chart every day, keep up with it. And suddenly you could get this sent to you on a disk. Anyway, there were also software titles that let you write if-then rule sets, which were algorithms, the early version. So I had success with that, with the algorithms that I was writing. I was timing entries and exits pretty aggressively. And I launched one of the earliest, one of the first technical analysis websites, one of the first in its category to be listed on Yahoo in 1995. And I started the first traders chat for technical analysis, focused, but the first traders chat in 1996. On it, I, by the way, on the traders chat, was able to interview a lot of legends. John Bollinger of Bollinger Bands, Gerald Appel of MACD, George Lane, creator of Stochastic, John Murphy, creator of Everything, Peter Eliadis, Arch Crawford, creator of the universe. So that was part of my education, was getting my hands involved. I've discovered or created dozens of patterns, setups, indicators, like double bottom. For instance, if you're familiar with the double bottom, I don't know if you've heard of the double bottom. That's not mine, actually. Or the triple bottom, that's not mine either, but the quintuple bottom, I don't know if you've ever heard of the quintuple bottom. That is my discovery. I've never actually seen one, but if you ever see one, please let me know, because that is my discovery. I rebranded to VidiTrade in 2020. Had nothing to do with other stuff going on in 2020. Just a matter of timing, that the site, the service, the whole methodology had really become a lot more visual than algorithmic. Still if-then based, but much more visual. And of course, we already come quite a long ways in being able to offer videos. So VidiTrade was born, Veni Vidi Profici, profit. So as an aside, having done this for a while, I will tell you that something from my unique perspective, that for some of you will bust a myth, and for others, it's going to confirm a suspicion. Markets don't change. Don't blame the markets. New market, things have changed. It's a different market. I've seen a lot, and I know over time, that's just not a valid reason. Always keep searching for the solution. It's not in, the answer is not the market changed. There's something that you can get on top of. So let's talk about price and time. This is basically the VidiTrade methodology is based on price and time. And you hear a lot about price. Buy this stock, what's your stock trading at? I'm going to buy it down at 10. I'm going to sell it at 20. Never really, or not really, a lot of acknowledgement of the timing overlay. You know, I want to buy this stock at 10, but I don't want to own it if it closes at 9. Or I want to buy this stock if it breaks out above 11, but what if by the close it's back under 1050? That is a timing window, the close. There are timing windows throughout the day that part of the methodology, part of the discoveries that I apply to be able to identify market timing pretty precisely in S&P futures throughout the day. We have to overlay time. So I would ask you a question: what comprises price action? Or what depicts price action? Price, first of all, price at its core is supply and demand. This is very rudimentary. I know it's not going to be in a second. So enjoy this slow slide into it. It's going to get pretty fast. Price is supply and demand. You can increase demand. A rumor goes out or earnings are beating estimates and price pops. Without supply shrinking, price will go up if demand increases. And by the same token, if nobody's interested, you don't need more sellers for price to go down, because price is a function of supply and demand. And that's a snapshot. That's just a snapshot. Price, a snapshot. Here's what two or more buyers and sellers got together or were put together, bundled, and executed at. That's a snapshot. So what about a price bar? A price bar, a bar, a candlestick, any other depiction that includes the open, the high, the low, and the close. The open, the high, the low, and the close. That's a window. So now we're getting a little bit more into it. We've got a snapshot, put together a bunch of snapshots. We've got a window. Well, that's just one bar. But when you put them on a chart, you have price bars, you add volume, and you're telling a story. And in that story is a past. And if you've heard stories, you know there's not too many. Lots of stories, you can tell where they're going to end because you've heard them before. Well, these are the components of a story. So let's simplify this. This is complex, can be complex. You can make it as complex as you want. I don't mean just drawing a bunch of trend lines on your chart. But if you want, you can make this, get all the price bars, weed through them, all the technical indicators, which I definitely endorse going through technical indicators. And it's amazing to me through the years to see which ones speak to me that don't speak to others and which ones speak to others that don't speak to me. Everybody needs to search and keep searching through indicators, find the ones that you like, figure out how to use them. But then you have to draw a line. And that massive collection of multiple data points, we need to just replace it with the simplicity of the open, the high, the low, the close, and the volume. And these are constants. They change, the variables change, but their labels don't. They're categories. Every one of these is going to be filled in on every bar. And the stories they tell align with historical templates. So if we know, let's say in a maybe not so perfect world, there were only 3 different stories. And as time went on and somebody was telling a story, pretty quickly we'd figure out which one they were telling. And we wouldn't know which one they were telling because they jumped ahead to the end. Just from the process of elimination, we'd be able to separate which ones they're not telling. So we want to get familiar with all the possible stories, not only with up, high, low, close, or the open, the high, the low, the close, and the volume, but also other data points, other observations, up, down, flat. Was the session up, down, flat? Was the timing window up, down, flat? I can come up with others, and I do. I don't try to oversimplify it myself. But there are some very real, for instance, Fibonacci retracements that I want to be aware of. But this is really what it comes down to, is minimizing and making constant what we're monitoring. Don't be too wild about it. We know like tracing a soap opera or sitcoms back to, if you turn on the TV tonight, you're going to see a story that has its roots in a Shakespearean drama or a Greek tragedy or biblical themes. There are only so many stories. And if you know them, you'll recognize them before they're finished being told. I gave up trying to predict an outcome. Much more successful at cataloging known possible outcomes. And then I monitor the price action of the paths to those known possible outcomes and eliminate, just through the process of elimination, I'm left with optimally one or two highly correlated possible outcomes. Since all we can trade is probabilities, let's have the fewest likely outcomes. And by the way, nobody's forcing you to trade. One of the most difficult things that I'd like to say I teach in my biddy room, but it's really difficult to teach this, is patience. I'll give it a speech every now and then, especially when there's nothing to do. It's really difficult to keep ourselves out of trouble when we think the market should be understood at any given moment, and we should be on top of it, and that's what we're doing there. But in fact, patience is the toughest skill in trading. Waiting for the setups that have eliminated, by process of elimination, eliminated all the unreasonable outcomes, left us with the story. We're fairly certain we know which story is being told. If we can get it to within one or two highly correlated possible outcomes, then we can anticipate where we're ending. All right, it's time for Fibonacci. Just remembered it's in the title. So first thing I want to point out is Fibonacci is fun. And I want to point that out because Fibonacci is also intimidating. It is, if you want, and I know that I know a lot of presentations do the great service of introducing users, traders, newer traders to Fibonacci proper, to the guy, Leonardo. And if you like that, I absolutely, and even if you don't, I think it's important to do deep dives. Google Fibonacci and look into him, look into all aspects of his work in Fibonacci, at least. He wasn't the most productive mathematician, but he was very prolific in exploring the Fibonacci tool. So am I, but rather than trying to use every aspect of it, I've tried to limit it to just the most useful. And maybe oversimplified, which you're going to see in a moment. But if you like math or puzzles, you can't not like Fibonacci. And that's what I like about markets, is it's one big puzzle to figure out daily. Or if you're day trading, it's one big conglomeration of puzzles to figure out in multiple attempts, multiple times throughout the day. Okay, this is going to be the thickest part of our discussion. And that is this one sentence. So Fibonacci is the equilibrium between support and resistance. Let's do that again. Fibonacci, and I understand Fibonacci is a lot of things, and it's probably the least of things that it is appropriate used in this set as it's being used in this sentence. But for our talk, this is how we're going to use it. Fibonacci that I'm describing is the equilibrium between support and resistance. So in other words, Fibonacci is a singular numerical representation for an entire range. If we assume that a range above and below, depending on where it's being attacked from, is support or resistance, and Fibonacci is the equilibrium between support and resistance, that's a singular numerical representation for an entire range. So kind of oversimplifying it now, right? But let's get specific. So Fibonacci what? 61.8%. Again, I'm not going to go through the history or the calculus of Fibonacci, but just to understand that it's an asymptote and it gradually, but never approaches or reaches 50%. The most common calculation is 61.8%. That is the most commonly portrayed in nature, in the market, will be a 61.8% relationship. The face, the eyes are set 61.8% of the way toward this, between this, the chin and the scalp, as an example. The alternate, the inverse being 38.2%. And then all sorts of math we can run between the two. But let's keep it simple. Let's stick with 61.8%. So just to keep it, before we get into next, the 3 actual tips, we're going to be talking or focusing on just the one thing, 61.8%, or its inverse, 38.2%, as a retracement or as a projection. But let's keep the math simple. Here's something that I encourage you to do, is to, and we're going to do this at the end, when we look at some live samples. I encourage you to take the Fibonacci tool, the Metastock Fibonacci tool. Tools, there's multiple tools. I happen to favor the Fibonacci retracement tool. I have my own set actually of expanded calculations. 61.8% is great. If I had to choose just one of the Fibonacci price points, that would be it. But I don't have to. So there are quite a few others that I find relevant that I'll paint my chart with, and you'll see that momentarily. If you want those, by the way, at the end of this presentation, I'll point you to a page on the VidiTrade website where you can send your name. Send me your name, and I'll send you the entire listing of the Fibonacci's that I find most relevant. So again, play with it. Get the Metastock program out, go to the Fibonacci retracement, and start finding price points to anchor your tool on. And notice as you look left where you're anchoring, look right and see what developed. Where did price come into any of the Fibonacci projections or retracements? I can't think of and haven't found any better way to be introduced to the tool, other than to attend talks like this. So let's look at some examples. Let's look at one example, actually. Here's a consolidation, a range. Can you tell there's something going on here, something isolated? There's a surge here, right? Pullback. If you look at the timestamp, you can tell this is the morning into the noon hour. So after the open surges, and it's not too long ago, by the way. This is just Thursday morning. So, or was that Thursday? That was Friday. So just coming into the weekend, big surge. In fact, that spike up, if you remember last week, quite a dizzying week, relentless surging as the economic calendar was one miss after another, and the market participants were anticipating miss after miss to be coming, and so they front ran, and finally they got the very last report. ISM came out, blip up, and that was it. Consolidated. It's a Friday, and sellers weren't coming in. On a week like that, they're not going to step in front of that, it turns out. So they try to probe higher, but a couple of probes don't make it. They fail. And then Monday morning reacts down. This is not, and just to point out again, this is not a methodology. Or I'm sorry, this is not a system. This is a methodology. This is not a ABC, do this, then this, then this. This is just different tips to add to your own routine, to your own repertoire, to help anticipate, to help interpret, and to help fine tune. So back to this range, there's a consolidation. This is a mindset. I call it a sponsorship. It's consolidating one move. We can look left. We're here. We can look left, and we have the benefit of hindsight, and we can see it resolved up. We can see what the high and low of it was. And we can take the Fibonacci tool, and we can identify the 61.8 and 38.2 retracements, which are really the 61.8 retracements, depending on whether you're standing on your feet or standing on your head. And you can see how that becomes influential. Now, it happens that I had a target that morning. I look at more than just one retracement. I look at multiple different retracements, projections. I'll anchor the tool from a high to a low and project out, not just a retracement within that range, but the projection. And I have basically a cluster, and I come up with, if I can, a singular numerical representation of that. But this was definitely one of the contributors. And we actually stopped a couple ticks short, several ticks short of the actual target. But you can see how influential that was. And that gave us, since that was one among the clusters, since we had and will always, at least in the video room, we'll always have a retracement as part of the mix. We'll know to look at other combination, overlay other observations. They're there, put them to use. Here's RSI getting oversold. As we're coming into a target with a retracement from above back into that range, it's already been productive, and here we come again back down into it. It's going to fight the first time, usually. So that gave us an opportunity to anticipate that that was probably the end of that, at least to tighten stops. Proper anchoring. And I just want to go back to this. This is not the most properly anchored that I would apply. I'm using in this range the extreme high and low. So we're going to look at some examples after the next slide that don't use the extreme high and low purposely. The extreme high and low are actually just, in my work, demarcations so you know which side of the turn you're on. So proper anchoring. Anchoring, actually, there's two components to anchoring. There's an anchor, and then I just can't have two anchors, so I have an anchor and a connector. So 1A, anchoring. So the prior extreme, we're in a trend, we get to an extreme. Every time there's a new extreme, a new high, for instance, We don't know if that's the high, the ultimate high. But let's just call it the high, because it's the current high. And the high, if we look left, we can find the high prior to that actual high. There's, of course, going to be different granularity to a chart. You're talking about 5 minutes, 5-minute bars. You're talking about daily bars. We're just trying to apply a singular numerical representation. So we're certainly not going to get too picky on that. And it's interesting how little you have to be. There's a lot of commonality in projections using different time frames on the same chart, so long as they are the pivotals. It's the same sentiment going into that price peak and its counterpart. But I call it the pivotal high. The high prior to the actual high, the low prior to the actual low. So you're trending down, bounce, fresh low. That prior low is the pivotal low. So it's where the prior trend presumably ended. The next low, the next high, whichever, is just a retest of that end of the trend. So the pivotal high, where the trend ended, is going to be retested, or else that wasn't the end of the trend, the prior high was. So now we need to connect that. We've got our anchor. Now we need to connect it. We went from the prior extreme, let's go to the new extreme. In other words, the reaction high, the reaction low, where the new trend, presumably, we're assuming we're in a new trend. We don't know until it's fairly well advanced that we're actually in a new trend. Like I said, we can only trade probabilities. Probabilities are assumptions. Assumptions, close cousin. So these are the 2 points that we're going to start looking at on charts. But tip number 1 is the anchoring. I'll show you that on some live charts. Tip number 2, how to add points, percentage points or points to your trades. Fine-tuning the noise, basically finding the change between the cushions. We're not picking up, I know this is there's a desire, if you know this term, you're going to want to use it. It's not appropriate. Picking up pennies on the railroad tracks. We have stops. We can use stops. We can always jump off the tracks. We can always automate getting off the tracks. But we're going to try and know. We would try and be involved, that is, to the last drop or the last pop. Remember, there's a singular numerical representation of a range. And that applies to the space between them as well. That singular number again, 61.8%. So if I can't take a random chart, I don't like retrofitting. I don't like cherry picking. If I can't take a random chart, I literally took a random chart. And I'm just going to scope out several different 61/8s. But they have to be done using a consistent methodology. I have to find the high. I have to look left and find the high. The extreme. Here's an extreme, the low. Here's an extreme, the high. Sometimes it's not going to be a clearly delineated prior high or prior low. There's ways around that, but that's for the video room. Here is the high. Here's the high prior to the high. This trend ended right here. And then it was retested. Does it look like a retest? I mean, it's a pretty, it's a bigger probe. There's complexity that hangs out there. But yeah, for our purposes of where to anchor the Fibonacci tool, this is the high of this trend. And then where's the first reaction down? Right here. We can tell that there's different tests. Right now, I would just encourage, as you try this out, this tip, just focus on trying to find the first reaction down off the extreme and the prior extreme to that extreme. So I'm going to anchor my Fibonacci tools between two extremes. In this case, actually, part of that complex that includes the pivotal high is the reaction low. This is where the market was able to correct before putting in the retest of the prior trend's extreme. As it starts to form, unbeknownst to us, a new extreme. So really just to illustrate how tightly these can be correlated, the Fibonacci tool is anchored at this reaction down, anchored at this reaction down to this reaction down. The noise between them, it's not noise when we are able to put on our special Fibonacci goggles and see through the noise. There's predictability, there's reliability. And by the way, as I said, we're going to look at a live sample example. It literally just happened at today's close using this exact methodology. But this is a trend. Let's forget about what we don't know, or what we want to know. Is this the end of a trend? Is this the peak of a trend? Is this the retest of the trend's extreme, et cetera? This is a series of higher highs and higher lows. And I'm just going to take the last higher high and higher, or the last higher lows, higher low. And in between them is a residual sentiment, a residual herd mentality that has a psychological effect. Not a very lasting one. But if I'm looking for this high to hold its retest, for whatever reason, I don't have the RSI displayed on this chart, but negative divergence suggested at least be aware if retracement got too deep, et cetera. Probably not going to hang out here much longer, let alone head higher. Well, where am I going to, if I'm going to sell that, where am I going to cover? Or if I'm going to calculate my risk to reward, what's the reward component? So I'm searching around and I've got two higher lows. And I know the 61.8 retracement between them is a likely attraction on a reversal. Sure, we could range, but if we're reversing, that's a likely attraction. At least that tells me where to tighten stops. I don't want to spend too much time on that one. Same chart, bigger, broader strokes. Here's a base that launched a leg that topped. In that top is our pivotal high, our actual high. But same thing, first reaction down. Last reaction down. This is a consistent application. 61.8% retracement between them. Not a system. This isn't anticipating that that 61.8% retracement is going to be met. It's anticipating that if the 61.8% retracement is on the horizon, it's going to be met. It's worth at least holding out for. If stops are tightened and price is, unfortunately, triggers a stop, if the objective or the likely attraction remains outstanding, there's a reason to stay involved or to get back involved. Just to illustrate as well, different calculation, the 38.2, the inverse of the 61.8 can be influential. And why would we have looked at that or considered the 38.2 as possibly being the end of the road? At the time, we're also monitoring RSI. RSI is diverging positively. How long do you want to stay short if RSIs aren't exhibiting any extra effort being put out by sponsorship, in this case, sellers? And then this is interesting, literally from this afternoon. If you were in the market, you know that very late, well, the afternoon ranged sideways. Powell is speaking tomorrow. Not a lot of commitment, but the market did hover. It hovered optimistically. That's going to be interesting when Powell maybe brings his special version of truth back into the market, a little diametrically opposed from last week, maybe. In any case, notice that we have, again, higher lows. Experiment, take your tool, just connect them. And by the way, you may notice that my tool is not drawn very precisely. Actually, it's drawn very precisely. I back out a couple of things. I back out what I call errant ticks, these spikes that are just, they're not bad prints, but they're basically, another term I use, sentiment extremes. I don't want to anchor my Fibonacci tool to any capriciousness or sentiment extreme, in other words. I want the meat of it. And we were literally in the video room live looking at this break. In fact, let me just show. There we go. This was it. This was this afternoon. We're actually, we have overbought RSIs. They were lower overbought, 1 minute and 3 minute RSIs. This is the 1 minute chart, but the 3 minute chart as well had lower overbought RSIs. And so in my work, I want to see that retested. You don't get simultaneously overbought 1 minute and 3 minute RSIs unless pretty much all available strong-handed sponsorship is endorsing that price. So by definition, the reaction is weak-handed sponsorship. Temporary. So we're anticipating a retest of that high, no particular time frame. In fact, there's unfinished business of a oversold RSI combination outstanding. But it's certainly preventing us from being aggressively short as the afternoon progresses. Happy to take a short if it would develop, and some did. But when they stopped gaining traction, we're looking for a retest of the high. Never got it, or did we? Very last minute, got that retest of the high. And so in the room, we take the Fibonacci tool, we anchor it, ignoring or getting past the errant ticks. There's the next higher low. As price was declining, as price was starting to break lower, we were able to list likely objectives. Now, if you know that there's a good chance that we're heading for 43.90, and you've got this prior low, that's seemingly difficult to get back under a prior turning point. They bought it last time, but that's not the case. Not on an overthrow. Sometimes that'll hold, so tighten stops. Because so long as there's no significant retracement, the next lower attraction, invisible to the naked eye, but to the herd mentality, they're very much aware of that singular numerical equilibrium point between support and resistance. And they're going to it. And if it weren't so late in the day, we could have looked at a long there. At least a stop and reversed a long. What do we have here? We have a decline into actual low. Here's the low prior to the actual low. Let's take our tool again, ignoring the errant ticks. Ignoring the sentiment extreme. That's an inverted head and shoulders. Inverted head and shoulders. So I'd go from the left shoulder to the right neckline. There's a 61.8% projection, 61.8%, 161.8, 261.8 if it runs. So if you're calculating your risk to reward, there's a tool to help it. So the last tip is the proxy gap. And the proxy gap, I'm sure you've heard, all gaps are filled. In my work, actually, that's not the case. The gap back to a close that was created by opening away from that prior close isn't often filled, isn't always filled, but isn't often filled. What's filled more often are two other things. When an open is beyond all prior extremes, the gap to that open is often filled. There's a very clear rule set governing that. But also, the proxy for a gap. What do we mean by the proxy for the gap? Using Fibonacci. Using the 61.8% Fibonacci calculation. Especially when, there's all sorts of proxies, but especially when the gap is created by opening, of course, away from the prior close. But what if then the opening post-open action explodes back into that gap? This is where the proxy gap can be very helpful. So there's a current famous technician, Walter Deemer, he says gaps are always filled. I say maybe. It depends on the definition. So when an explosive open, you've created the gap, you've gapped down, for instance, and immediately reversed explosively back toward that prior close. Everybody's anticipating that gap is going to be filled. But what you want to be aware of is the 61.8% retracement between the two. Connect yesterday's close, take your Fibonacci tool, anchor it at yesterday's close, cash session close. What equates to the cash session close? The last print at 4 p.m. Connected to today's opening gap. This isn't today's, but here's an example. We're trending down. This is a 3-minute chart. Trending down into a close, cash session close, I identify with the dashed line. And overnight, whatever happens overnight, the next open gaps down. And immediately, first order of business, I'm going to take my Fibonacci tool and I'm going to anchor it at the cash session close, connect it to today's open, and I'm going to see where's my 61.8% retracement. It happens to be 4,200 half. And explosive upside. The first 15 minutes explodes to the upside and nabs it. That's going to be very rare to see that extend higher, but it happens. It's going to be very rare to see a gap down explode in reverse and make it actually take this huge paradigm shift. I mean, there's no greater, more forceful open than that. And when it's reversed so substantially into the 61.8, then that's likely to hold, especially with RSIs overbought. So I see the time. I need to cut a little bit short here. Jeff, I want to make sure that we're on par with that.
You're doing great. Yeah. So I see a URL. Let's go ahead and talk about it. All right. Yeah. Go ahead and put that in there.
Yeah, let's do that. So here it is. If you just type in the tiny URL /VidiTrade, tinyurl/VidiTrade, and it'll automatically roll you over to the VidiTrade site. Normally, if you go to my site and you click on pricing, you'll see that there's a free trial for a week. There's the normal subscription is the blog updates throughout the day that describe the methodology and access to the video room itself, which is $200 extra per term. But you get the free trial, and the first term you're going to get the video room for free. Well, if you type in, that's if you go straight to the site. But if you want to do this special offer, you have to subscribe right up front, but you'll get 3 video room terms for free. So no free trial, but you're getting a $200 savings for 3 terms. So $600 instead of $200 savings. And by the way, and you know, if you take this offer and you try it for a week and you say it's not for you, I'll treat it like it's a free trial. We can certainly take care of that. But if you are, remember, if you're also interested in knowing when I have, for instance, the room open, sometimes I simulcast. I'll do a flash mob and simulcast the room on YouTube, and I announce it at the very last minute or the night before. Get on my list, and I'll let you know when I'm doing that. And I do that for a couple consecutive mornings so you can see it in action. You don't have to go through the registration process. Also, remember, if you're interested in knowing my Fibonacci settings, you want to enter your information here. That's at the bottom of every web page on the site. But we focus on S&P futures, E-minis. You're welcome to ask for instant chart analysis on demand of anything throughout the day. There's a whole bunch of other features. There's a knowledge base with all my setups, not just the quintuple bottom, but some other very special ones that I'm quite sure you're not aware of and you probably should be. But thanks, everyone. I appreciate your time and hope to see you at VidiTrade.
All right.
Thanks, thank you very much. This has been very enjoyable for me, and I hope that it is on par for Metastock.
All right. Thank you very much, Rod. It was good to have you. Thanks for coming in. And we'll see you again soon. So the URL there for that is tinyurl.com/VidiTrade. I've posted that in the chat. Go ahead and click on that. Thank you again, Rod. I really appreciate your coming in. Let me go ahead and do this. Okay. And you know what time it is. Surprise time. All right. Let me go ahead. Oh, let's go ahead and get set up to do this. Let me make me the presenter. Go ahead and show my screen. And before we move on, before we do prizes, I want to say thank you to AAII.com for sponsoring the event. New sponsors of ours, they've been sponsoring our event since the May event. We're happy to be partnered with them. They've got a huge reputation, and you can find out more about them. They established as a nonprofit in 1978. I'm sure you've heard about the AAII Investor Sentiment Survey. That's something that they do. They do forecasts, they do classes, they do all kinds of stuff. And it's a nonprofit, AAII.com. So there you go. Very, very good partner. We're of course gonna do prizes right now. So what I need from you is a number. I've got new number ranges. And so what I need you to do is give me a number between 1 and 10,251. So the way that this works is if you've registered, if you're watching us on YouTube, make sure you registered, come in. That way you can be on the list and be part of the raffle. Make sure that you register. You don't have to be here to win, but type in a number, 1 to 10,251. Let's pick a winner. While you do that, while you're typing in those numbers, let me go ahead and tell you what the prize is. Okay, 1 second. Let me go to the prize list over here. Okay, this one I'm gonna say has to be, Ken, I love it. This one has to be in the US. So if it doesn't happen to be in the US, we'll pick the closest US one. The reason it has to be in the US is because it's about a tax return. Okay, so later on this week, we're gonna have Traders Accounting come in. They're gonna do a webinar that's gonna talk about whether it makes sense. And I love the way that they do it, whether it makes sense for you to trade as a business. And they're kind of gonna go through the rules and kind of give you some guidelines in terms of whether or not you should incorporate as a business. So they're very, very specialized in US tax laws. That's why you had to be in the US. So the first one, so hopefully if you win, you put in USA, but we're gonna make sure that they're US winners. If it's not a US winner, then I'll pick the closest one. So Ken, the number you'll see is anywhere between 1 and 10,251. We're gonna go with Ken's number of 10,245. And let me go ahead and go through my big list of registrations and we'll figure out who that is. So and luckily, you're in the USA. Cool. So USA, John B. We're not giving out any personal last names, stuff like that. We're not doxing people on the internet. But if your name is John, your last name starts with a B and you have a Yahoo address, you just want a tax. The next one that we're going to do, actually, let me kind of make a copy of that real quick. Put it in my prize sheet, and then we'll give away one for the YouTube choices as well. The next one we're going to do is from YouTube. And I want to say thank you for kind of participating in YouTube. Rick, actually Garth, you got your number in first. It's 4560, same price, tax return of your choice. Value of that is like $750. And the number, what did I say, 4560? Let's figure out who that is. So, okay. Beverly S. Okay, Beverly S, you just won. You have a Gmail account and you're in the USA because I made sure of it. So congratulations for that. You also won. So what's going to happen for the prizes, just so you know, we'll send you we'll send all of the prize winners to the companies. They'll reach out to you next week and get what they need to go ahead and get that for you. But congratulations. Thanks for the participation and kind of getting that ready. We are, of course, as you've probably, what is this? Okay, just a slide in the wrong order. Okay, we're Metastock. Metastock's been rated #1 30 years in a row. #1. If you pay for a month, we'll give you a third month for free. You can find out why it's been rated so highly for 30 years straight. And you can get that extended trial if you go to metastock.com/conf promo. You can chat online with us at metastock.com/sales-chat. And you can call us at 800-882-3040. Our next presenter, our next speaker is going to talk about 3 of my favorite subjects: timing, trading, and stock reading. So, Casey, that's awesome. Those are so you do a podcast. It's called How to Trade It. You also do. You're the founder of TradingStrategiesGuides.com. This is the first time we've ever had you in the room. So, what would you like to tell us about yourself? Your mic's off. Let me do this. I can see your face. And
I turn it on.
Okay. Say it again. What do you want to tell us about yourself?
Well, Jeff, thanks for having me on the show.
It's good to have you.
So I want to start out by giving your gotta get in the camera here. Wanted to give your guys a shout out, your tech support, Lucian. So this is my first time working with you guys, and so I was getting my my charts ready, and I was having a hard time. But Lucian came on and just did miracles.
Yeah,
like
no, they're good.
He made it work, and like right at 6 o'clock when it was time for me to come on is when it came up.
Nice. Okay, cool. Well, I'll make sure to give him a thanks. You also sat down with him for one of the initial one-on-one. Would you believe me if I told you we do that for every new customer? We sit down with them for a couple hours and just show them around.
Yeah, that's fantastic. And that's really important because when you're trading, you need to know what you're doing, and who has time to figure out all this stuff? Because there's a learning curve involved when you're dealing with new software. So that was really helpful. And you guys getting everything set up was really good. So I appreciate that. And just you guys, I wanted to make sure I gave him a shout out so you could go and give him a pat on the back.
Go pat him on the back. I think he might have left it for though, but maybe not. All right. I can see you. I can hear you. The last speaker of the day. So don't be too worried if you go a little bit over or a little bit under. We're no longer on a strict schedule. So.
Well, if I'm doing public speaking, I can actually see if the people start falling asleep. But unfortunately, in a webinar, I guess we'll just see if they're dropping off or not. But, if I start seeing snoring signs, I'll know it's time to hang it up. Okay, let's see. Can you guys see my screen?
Yes.
Okay. All right. So today I'm going to talk.
And we can hear you well. So it's okay. I'll get out of the way. Stop talking.
Okay. So I've got a little presentation guide here along with, I'm going to show you the charts too. Yeah. So anyways, I'm ready to go. Okay. All right. So I'm going to teach a strategy here, how I look at price action candles and how to identify good entries using price action, using candlesticks. And I like to trade on the daily time frames, or actually I like to even look at these on weekly time frames. For me, I don't want to be trading a lot. I don't want to be in front of the charts looking at them all day long. I want to just jump in, take a trade in the evening or at the end of the week or something like that. And these strategies really help with that. So I call this the one candle pattern strategy. And this is just one candlestick pattern that I look at, but there's also several, and you really want to learn how to do all of those. So I'm going to show you a group of them here today. But I want to just start out by kind of running through one of the setups. So if you'll notice here, this is what we call a rejection candle, right? And so if the price is moving up and you hit a resistance area, okay, that means that the sellers did not want to continue to press in. And so they rejected the price. So this is a rejection candle. It's a candle with a big tail, and it just shows that there's a lot of volume. There's a lot of price resistance. There's buyers and sellers, and there's a lot of resistance at that point. So you want to be observing that particular candle. And so when you see this, it's going to tell you a couple things. If you get the full rejection here, and then price continues to go and breaks down, that is a great opportunity to enter a possible short trade. Okay. Now, however, it doesn't always mean that you're going to be able to hit a possible short trade. And by the way, in trading, you never know what's going to happen. We want to try to find the highest probability setups. And so we want to try to find things that happen in conjunction with each other. Okay. And so what that means is that if we want to use a price action pattern, we want to try to find a support and resistance area. We want to find a trend, perhaps an indicator or a moving average. The more things that you have that are confirming the trade, the better you are, right? Because you want a high winner percentage. At least I do. I want a high win percentage. So I'm going to be going for like a 70, 80% of the win percentage. But to do that, I have to be very specific, right? I have to be specific and I have to wait for my setup. It requires patience and it requires diligence and it requires me to scan through all my charts, which is why I love the Metastock charts, because it's got some great scanners, great charts, and it helps me. It helps me with my tools. Okay, so right here, you can see that this particular setup, the price didn't follow through. So it was a rejection initially, and then we have what they call an inside candle, and it's inside the tail here. And so at this point on the second candle, it's saying, okay, we tried to reject it, but we didn't have enough strength. The sellers didn't have enough strength to push it down all of the way. And so because of that, now I'm starting to pay attention, right? So this is the first candle. And then the second candle is like, okay, I'm paying attention. I'm noticing that the sellers did not have enough strength. And so what that is, it's consolidation. Okay. And I know I'm sitting on this chart for a long time. I'll get to some more, but consolidation is really just accumulation of buyers and sellers. Okay. When the market is accumulating, when it's consolidating, there's not enough strength to send it in one direction or another. And so you never want to trade inside of a consolidation pattern, because it's not a high probability trade. When you see the market going up and down, like in here, these could be daily candles or weekly candles, but this is a small consolidation pattern. But inside of this, you could have several little patterns that are moving in. And what's happening is it's accumulating buyers, it's accumulating sellers. Neither side has enough conviction or momentum or volume to push through to the next level. And so that means when you see that, it means, okay, I'm going to pay attention. I'm going to wait for the setup to develop. And so that's what we see. So we see the first pushback, and now we're going to wait. Had this gone all the way up and broken the bottom, especially if it was in line with a downward trend on a resistance level, then it would say, okay, this is a short setup. But since that didn't happen, now we're like, okay, now we're consolidating and we're waiting for it to break out the top. And when it breaks out the top, we're looking for a long setup. Okay. And so, when this is happening, you're just getting ready. You could even, right here, I have a little line here saying, okay, put your entry order, just put a line on the chart and say, when it breaks this level, I'm looking to go long, right? Because the consolidation didn't have enough momentum to push it down. So we're looking for this trade to go long because it didn't break. And actually, this particular 2-candle setup is one of my favorites when I'm using it with a 10-period EMA, a 10-period moving average, because when the price breaks above the 10 EMA, and then you get this is just that it's a pause, it's a rest, it's a consolidation. That is one of my favorite patterns. This is truly one of my favorite patterns. When the price pauses and then it comes right back up, it's a great setup. And I'm going to show you guys on the charts in a little bit after I just kind of run through it. So here's a great example of this, okay? This is where price runs down, okay? And you can notice here that we have this consolidation down here, which I highly recommend waiting for consolidation to trade. And so what we got is we got a nice push, right? You'll notice that there's a nice push right up here. And that's a momentum signal because we had the consolidation and now it's a new trend, so to speak, because we're going down. We break the top of this, and you notice this candle, right? You'll notice this particular candle, if I can zoom up a little bit. This one right here, this is what is called a bullish engulfing candle, because it takes out the bottoms, takes out the lows here, and takes out the top. And not only does it take out the top, it also takes out the top of all of these other candles. Look, it took out all of those. You see that? And so this would be a potential entry point. Okay, that's not necessarily the setup that I'm highlighting, but as a trader, I want to have a lot of tools in my toolbox. So I'm just saying, if you were watching this, you could take this setup as well. And I think that's very high probability, especially if we zoomed out and we would see that this was an uptrend and we're seeing that we're sitting on support. But if we would have like a 10 EMA on here, so I'm just drawing, let's just assume this is a 10 EMA. It would probably go something like this. Okay. And actually I can erase that and redraw it here. So this, we'll just say that this is the 10 EMA. I like the 10 EMA. It just kind of comes along the top. So this is what the 10 EMA would be, right? And so you get a breakout, you clear that area, break the moving average, great entry. Now a secondary entry, see, this is why let me just highlight this and say how important this is. You do not ever need to get in a trade for fear of missing out. That's called FOMO, fear of missing out. And the key word there is fear. And a trader never wants to trade on fear. You want to trade on patience and allowing your setup to come to you. Okay, so if I'm watching this happen and I happen to miss this entry, I'm not going to follow the trade. I'm going to wait for a better time to get back in. Because if you'll notice, this is a very big move and there's plenty of time to get into a trade, and a trader should never, ever have any fear. You should never be afraid of missing out, because there's always another setup the next day. There's always another setup on this particular trade. There's going to be another chance to get in, because there will be, right? There will be another chance. And if not, you'll just catch the next trade, because trading is not a get rich quick. You're not going to be broken. One trade is not going to make or break you. It's the ability to consistently follow your plan over a long period of time and to be a consistent trader. So that's what's going to make and break you. So when you see a setup, you wait for it and you take it. If you don't get it, wait for the next time to get back in. Never have fear, never trade on impulse, always follow your plan, and always, review your strategy, review your plan, and know what you're doing. Okay, so in this case, one of my strategies is to not take the break on the 10 EMA. So that's the 10 EMA, but to rather wait for the bullish candle to develop, which is here. And I don't need to draw because it's already been it's already been drawn. So, but I'm drawing again, waiting for this. And then when it takes out the top right there, that's your entry. Okay. And then where would you put your stop? Well, one thing I like to do is because I like a high probability, I will usually use it below this level, which is very safe, because if that's the case, sometimes it'll come back if it's not perfect momentum like this, but it'll come back and retest this, and then it'll form a double bottom, right? And then we have a double bottom, which is another high probability chart pattern. You have a double bottom, and then gives you another setup. So I could either put my stop loss below the 10 EMA or below that entry, or I could give it a little bit more room and see if a double bottom would form and it would happen. Now, if I gave it a little more room, that means I have to adjust my risk accordingly, and I would trade that with a little bit smaller size, because I'm more into having a good winning percentage than trying to hit a big home run. And every trader's different. Every trader sets up different parameters and risk management rules, but that's just how I would like to do it. And so if I did it that way though, what I would do is I would wait for the second pattern to develop, and then I would add another position, right? So then I'm like, okay, this is still looking good. We got momentum. We get some more momentum to the upside. I'm going to take another trade on this one. And then I could have two positions for different price patterns. Okay, so let's go ahead and erase all that. And let me get my cursor back out here. Okay. All right. And so another thing that you can look at here remember we're talking about using multiple things. Price action is really important. Okay. I love candlestick patterns. I love studying price. I think it's just fantastic. It's a real indicator. It helps you get a feel for the market. It helps you know what's happening with buyers and sellers and support and resistance, and understanding that fear and greed is moving the market. What I love to do is to really think about what's happening behind the scenes. You know, when we see these price action candles developing, we know that there are traders that are going long, and then some of them are afraid that it's going to take off. So the price moves up, and then boom, they jump in because they're fearful. And then at other times, you know, maybe stop losses are getting hit, and it's adding liquidity to that trade, and it's adding fuel to it. And sometimes traders are getting, you know, they're getting stressed because their losses are getting so big that they have to hit the button. And so I like to see these things going on and just kind of imagining and thinking about what's happening behind the scenes, what's causing the markets to move, because what really moves markets is emotion. It's fear, and it's greed, and it's people trying to make money, and they're fearful that they're going to miss out on profit, so they're willing to bid higher, right? But we want to also look at volume candles, because volume candles can give us some good clues. So you'll notice here that we have this this consolidation pattern that I was showing you, and we had a breakout. However, the breakout didn't happen yet, or there was no volume on that breakout, right? No volume on it. However, when that resistance candle was hit, there was some volume to it, right? And then if we go a few candles later, you'll see that there's some more volume. So the volume in itself is not really a deal breaker on the trade, but it's just another thing that you can look at that will give you an additional bit of confirmation. Right. So in this particular trade, we've got a couple things that we would look at. We've got a previous consolidation pattern with an up move. We've got this downward pressure with an inside candle. So that's two things: consolidation, the downward pressure. We've got this momentum leg, which is kind of a third thing. You know, if you had a moving average here, you'd say, okay, there was a breakout of your moving average if it was a 10-period moving average. Then you would say, okay, we could draw a support line on here, and we could say, okay, look, we just have bounced off of a support level. And then lastly, we'd say, oh, now we also have an above average volume spike, right? Which is an indication that there's buyers and sellers and that there's a lot of interest in this. If you get a lot of people closing their trades, there's a lot of shares available, could add that to bring some momentum to the price. Okay, and then lastly, you've got a level right here that's breaking. That would be my entry. You've got a key level. Key levels are really important, and when a high gets broken, that a lot of times will add fuel to the buying pressure, because there could be stop orders up there, there could be buy orders, and so then that's the last piece of confirmation. But in this particular situation, there's a lot of confirmation clues here that just say, okay, this is a great setup, and that those clues help us put our trade in. So I keep a checklist with me all the time on my desk, and the way that I did it is I laminated that checklist, and I have a marker with a erasable, and so I'll just write down, okay, does it have a price action pattern? Does it have a support level? Is it in line with the trend? I do all of those different things and I write them down, okay? And that way I even do a little inventory on my emotional status. Am I trying to hit a home run? Do I need to make a lot of money? Am I going fearful? Am I being greedy? You know, things like that. I try to gauge myself emotionally and take time to make sure I'm not making a bad decision. So again, here's the setup, right? This is that same chart. You would put your buy right there with your stop loss here. And as I said, you could do it two different ways. You could put it a little bit bigger if you wanted, but in this case, nice and tight. There's nothing wrong with taking a small loss, because when you get back in, when the setup happens again, you know what's going to happen? You're going to get a much bigger win, right? There's a trade-off though. If you have tight stops, it's going to help you catch bigger wins and you don't need to have a high winning percentage. But if your stops are tight, you're going to have a higher loss ratio, right? You're going to lose more trades. Your winning percentage is going to drop. And so you just got to understand that statistically, you're going to have to give up your winning percentage if you're going for smaller trades on the stop loss. That's just if you're a laser sniper trader and you're really good on your entries, you can still have a great winning percentage. But statistically, and this will work statistically, when you tighten your stop, you're going to have a lower winning percentage. And so in this case, we had all of our things in order, and we put our stop loss here and we put our take profit. And the way that I like to do it is to go for a minimum of a 1-to-1 risk to reward ratio. And so in this case, the entries right here at about 720 with the stop loss just under $7. So that's like a 20-cent stop loss. And we'd have our target looks to be around 765. So this is almost a 2-to-1, a 2 or 3-to-1 risk to reward ratio trade. So that is a solid setup. Anytime you can get a 2, if you risk 100 to make 100, that's a 1-to-1. Anytime you can do that or better, that's the kind of trades that I go for. I try not to do anything less than that because over time, you only need to win 56% of your trades if you do a 1-to-1 risk to reward ratio. And if you take your time, you follow all of the filters and the price action, then you can really increase your winning percentage even more. So let's take a look at it here. And I'm going to go through a couple more, and then I'm going to go to some live charts. But we'll take a look here on a sell trade instead of on an up trade. So here we have the downtrend happening, and just to note, I do like doing this in the direction of the trend. So we have a downtrend here, okay? And what happens is when a downtrend develops, we have price moving down, and then it will break a support level. And you notice this candle here? That was the previous level. And what happened is price came right back up to it. And so that's the resistance level, okay? Key levels is one of the most important things in price action trading, is using your candlesticks in the direction of those levels. And again, using those levels for your stop losses is really powerful, okay? So we have this. So this right here in itself could be a potential trade setup. Anytime you get a price bounce off of a level, right there is a key setup. However, in this particular strategy, we're waiting for a little bit more confirmation. And so once we get that happen, we get the downward, and we're looking for this candle, right? This is that pushback, okay? So let's see if I can zoom up a little bit more. Okay, zoom it. All right. So you'll notice on this candle right here, you got that big rejection. So that's kind of what I was showing you before. And that is just, and if there's no volume on this chart, but if you get a nice volume spike, you see that, okay, there's some real pushback. Consolidation is beginning to happen. A lot of buyers have stepped in, and that's what the market needs to continue. Remember, we needed that consolidation. We need to accumulate sellers to push it back. So when we see that happen, that rejection, however, there was no follow through, right? It just stayed in here. It consolidated. It took 1, 2, 3, and then on the 4th day, it finally broke that key level, right? But once you did that, you've got your stop loss, and which is above the key resistance level. And then you take your take profit down here. And again, I'm trying to get a 1-to-1 risk to reward ratio. This price here is about 38.55 on the sell. The stop loss is about a $10 stop, 65. So that means I would go for a $10 target at your entry at 55, going for 45 on the target. And this looks like it's not quite a 1-to-1 risk to reward ratio, but if I was trading it, I would definitely try to make it a 1-to-1, just because of, I know mathematically and statistically, if I can consistently stay with the 1-to-1 risk to reward ratio or higher, I know that I can only have to win 57% of my trades, and I'm going to make money long term. And again, I'm not trying to make money right away. I'm just trying to be consistent. I'm just trying to stay the course and do what I'm trying to do long term. So rather than look through here on the prepared examples, I'm just going to go ahead and pull up the chart and take a look at some. Okay, so right now we're looking at the S&P 500 here, and this is the SPY, the ETF of the S&P 500. And so you're going to notice right now there is been a big spike up, right? Big spike up. And currently we had something similar develop exactly as I was talking about, right? Because look what happened. We got the big move up, and we have this rejection candle here. And what happened? It came down. We got the rejection, and it stayed inside of this top, right? It did not pass over. And so if I was trading this, I'd be like, okay, I'm going to draw this out. And so what happened today? Today, we had another high, and it broke that previous level. So this setup actually fits that criteria that we've been talking about. Now, the only thing I would say about it is not every trade is going to be perfect. That's the thing about trading, is you always have to evaluate everything. And that's why trading can be a little overwhelming and a little intimidating, is because there's a lot of factors, right? So one of the factors I would say is I'm looking for that pin bar, but then the question is this big enough? Because on the training, I say to try to get at least 3/4. So technically, based off of that, this would be a no trade because of that, okay? So then the other thing that kind of hinders it is we're looking for above average volume on this push. And that right here is a little bit above average, but it's not exactly what I would like to see. So, I just shared that as an example because this was literally the first thing that I saw when I pulled the chart up, and I wanted to show how this stuff actually happens, right? How it actually develops in a real-time situation. So as I'm looking at that, then I would have to make some other decisions and say, okay, so this wasn't a 3/4. Does that mean I can't take the trade? No. There wasn't a volume here. Does that mean I can't take the trade? Not necessarily, but I would also take into consideration, and I would look at this, right? I would go to this previous high and look at this and say, okay, we have a support level, resistance level right here. So we're pushing right up into that. So because of that, I would definitely pass on this. And so right now, just using price action with this setup, and by the way, I I did take a trade on this week. I mean, because we had a nice V formation, a nice candlestick, and I'll talk about that in a minute, but I'm just going to tell you how I'm trading this now. Okay, because I already closed the position. So I took a nice trade here. It was great, but now it's pushing into this area. You'll notice there was a consolidation here, and this was a perfect trade earlier too to the downside. Okay, and because we have consolidation and we had a breakout of that box, right? Anytime we get a consolidation and we get a breakout, it gives you an opportunity for a good trade. Here's one here, consolidation, a break out of the box. We broke out of this box at 425 about, and it went up to 436. Okay, so that would have been a nice one-to-one trade because you could put your stop about 420, get a $5 stop, $5 take profit. You got a nice trade set up there. Okay, now again, right now, since I have this, I'm waiting for this to get above 438, which I believe is where this high is right here. And what I'd like to see happen is for this to consolidate and then break out, right? Because I like to see consolidation. Right now, we haven't had a big enough pullback. So this particular candle was a pullback, but it wasn't quite enough for me. Not saying that the trade wouldn't work, but I want to be patient, right? I want to be patient and I want to get the setup that I'm looking for. So in this case, I'm going to wait. I'd like to see it maybe push back a little bit, wait a couple of days, going sideways, and then make the next move up. Or conversely, if we look at this and we zoom out on it, we can kind of get an idea and just get a big picture analysis here and kind of see what we're doing over the long term. We have been moving down of late. And so if this level holds, you can see we got some nice big swings to the downside, nice big swings to the downside. We've got 3 really big moves here to the downside. So there's no reason that can't continue if this level holds. So let's take a look at this here. And again, this is where price action, we got a consolidation pattern here and one here, okay? And if we draw that out, move it over, we've got a supply zone, right? And so this could be a setup, a trap for the bulls, okay? Because we look at all this resistance. Let's see all this. So all these guys that are getting in here, and remember I said, oh, this wasn't the most solid setup, but it's solid enough to trick some people. It's solid enough to trick some people because, okay, we got a big move. It's really solid. I'm going to go ahead and go long, right? And so right now, I'm going to be waiting for this and see if we consolidate in here and we get a candle to the downside. You put your stop in, we could come down and make even some new lows, okay? We've got a little bit of a downtrend happening, okay? And we could do that. So we could be around 400, right? We could end up the year around 400. We don't know what's going to happen. I don't know what's going to happen, but I use these price action patterns and candlesticks along with support and resistance and other tools to try to make the best trades. So right now, I am currently not in this position, and I'm just going to be waiting and being patient and holding off to make up my mind, right? I'm going to be looking for consolidation and a bullish engulfing candle down to the downside or to the upside, either way, because if it breaks to the upside, because we already have kind of broken this a little bit, right? We've already broken this trend line here. So there's some pretty key bull signals, and it could be the takeoff to the upside. So at this point, I'm probably leaning bullish. But I'm not unaware of the bearish opportunities as well, because we're not totally out of the woods. Now, if it breaks out of this box, then that's a very bullish signal, and I will be looking for bullish trades, and we could be making new highs new all-time highs on the S&P 500, and that is exciting. But with options trading, and this is not necessarily an options class, but the cool thing is if you're trading options, you can make money to the downside or you can make money to the upside. So you just got to be very precise and follow your candlestick patterns, and you can do well no matter what the market is doing. It doesn't matter. We don't have to just trade to the upside. We can just follow the market, but we want to be accurate and precise and wait for the patterns to develop. Okay, so back to this pattern here, because I thought it was a great pattern and I wanted to talk about it a little bit. Zooming out here just a little bit here. So we've got give me 1 second here. There we go. So we had a nice trending move. And one of the things that I like to look at also is I like to look at trend lines along the bottoms. And so we did have a downward trend line happening, okay, on this. And so when this developed, I was then looking for a candlestick pattern. And so what we have is a 3 pattern, and it's kind of shaped like a V. It's not a consolidation pattern, but it was a V, and they call this maybe the morning star, but you'll see it breaks a low. It bounced off the trend line, and then we broke out of that high. So right here, right there, when it broke that, that's where I specifically went into the trade. And I put my stop loss right here. So I can draw the line on here. I put my stop loss right about 410, roughly. My entry was 417. My stop was 408, just like 408.87. So I had a pretty good stop, like $9. And then from there, we've gone up about $20 on the S&P. And so all I really had on there was about a $10 target, just over 1-to-1, but it really exploded. I mean, it gapped right up, right into my take profit really quickly, which is nice when you get a trade like that. So again, I had my consolidation pattern and my candlestick pattern. I had the support and resistance trade right off of the support level, right off of the trend line on the bottom. And that trade worked out great because I was patient and I waited for the setup to come to me. Now, obviously, not all trades are going to work. You're going to make mistakes. I make a lot of mistakes. Even after doing this a long time, I still make mistakes. I sometimes will find myself getting a little bit greedy. I make a mistake, and then it causes me to go back and review and say, okay, why was I getting greedy? Don't do that. Just always reviewing, always working on improving. I'm getting to the point where I'm pretty solid on not making those kind of mistakes, but they do happen on occasion because it's always, for me, it's always tempting. I've always got a temptation to try to go for home runs. That's just kind of my personality. And I think that's probably a lot of traders' personalities because we are traders and, sometimes we're a little more aggressive. And so, yeah, we broke out of this channel right here, which I really like that too. So I think that I'm leaning a little bit bullish. Let's take a look at the horizontal support level though. Definitely need to break out of this before I get too bullish, and I'd like to see it go horizontally. Okay, so let's go ahead, and I want to go ahead and pull up some other stuff here. Let's take a look at some other charts here. I know that Tesla's always a popular one, so let's take a look at that. Okay, so right now, and when we talk about price action and strategy, Tesla right now is definitely what I would call an uptrend. You can see over here. So just to kind of evaluate, if we look back year to date, in January, this thing was trading around $100. And so now we're at $222. So in the grand scheme of things, this has doubled in price in the year. So more than doubled. It was at 104 and went all the way up to 122. So great year. And in the middle of this year, there was some monster moves. This move was pretty big, 101 all the way up to 200. I mean, just this move alone doubled, right? That move was a monster. And then this move right here is a monster. So you got to make sure you're managing your risk when you're trading something like this, right? So the moves can be huge, but this move was insane. Went from 160 all the way up to 299. And that's one of the patterns I want to show you is this bearish pattern, okay? When it hit the 300 level, it got slammed hard, right? So we'll draw a line right up here. And this particular candle was what I would call the evening star pattern. It went right up into that tip and got rejected really hard. And then, as I said, if we're looking at that one candle pattern that I was training on, that I was looking at, that one candle pattern, that pattern would have said, okay, if we get that rejection, we could still buy here if it broke out the top. And so on the very first day when this happened, and that's why I wanted to mention it because I was watching this. When that first happened, I was thinking, okay, I don't know what's going to happen. I don't know if this rejection is the real deal or if it is a reversal, right? I didn't know yet. I was waiting for the data to happen. Okay. I was waiting. And then it rejected so hard and then it gapped really low. I mean, we had a gap from 296 and it opened the next day at 279, right? That was a monster gap, about $20. And then from there, it just went down. Okay. And so, but once that happened, that was what I needed because I needed this thing to go lower and to break through, right? So a lot of times we'll use trend lines. And so we go like that. And anytime it breaks below that trend line, I'm like, okay, that's what I was looking for. We had the evening star pattern. Now, because that gap was so big, I wasn't able to catch the trade. It was too big. But then the consolidation pattern began, and that's when I was able to get in. And so I was just waiting. I saw the big bounce. I was waiting for it to come back up to one of these support levels, resistance and support, which was right up here. And we stayed in there. And then once it bounced off, then got in on the bounce and got in right around here, right? We had that consolidation and the price just had a nice move to the downside. Okay. And so right now, that was back in July. And right now we had the very similar situation here. We had a huge bearish candle. We got a consolidation and then a bounce, okay? However, recently now we're still inside of a little bit of a zone here. So you just want to kind of look and see what we got. We got that morning star pattern, the price bounced up, and we have a very nice pattern here. And you see, we took out these highs, okay? And not all the patterns will work. That's one thing you got to remember. That's why it's great to use them with different support and resistance levels. If we look at this previous pattern, we had the same thing. The price bounced down, it popped up, but it wasn't a real winning trade, okay? It went up and it came right back down, okay? And so one of the things I would ask is like, okay, what can you find there to to give you some clues. Well, for one, is it wasn't a completely solid move because we didn't have any bullish momentum yet, right? There was no bullish momentum. It just happened after that big gap, all that bearish momentum. The bears were still there. And I would say even now, this was a nice gap up and a nice pattern here. But I would say even now that the price is in this little consolidation area. And so I would be waiting for this to break out of this area to begin looking for a buy setup, right? Because we've got the gap right here. We've got consolidation. But if it breaks out of the top here, I think that filling this gap is a very good possibility. So I'm going to be watching this pattern. We got a 3-bar pattern here, a price up, a rejection, and a price up and a rejection. And if we break out of here, I think we could get right back up to this gap at 243. Okay, so we got a gap right at 243, and that's a great risk to reward ratio. We got a nice stop loss here with a really good target. So we'll just be watching this. That's what I'm going to be doing. I'm going to be watching this particular trade. If we get a breakout of this area, because we got the move, we got the rejection, I'm just watching this price action. And if it goes up, and you know, looking at the overall market is another thing that I do as well. If I see that the overall market is having some trouble, you know, I'm going to take that into consideration, right? And that will help guide me in my trade, because we know that the S&P is at resistance as well. So if the S&P 500 doesn't react well to that resistance, that's just another filter that I like to use when I'm making my decision-making process. Okay, it's like, okay, go with the overall market. If the market is going strong, then you know some of the high-flying stocks that are pushing that market forward are going to be going strong as well. So that's definitely something that I like to consider when I am looking at my charts. So, okay. So let's go ahead. Let me pull up another one here. And then this is actually a trade that I just took as well. Now, another thing that you got to be looking at is the earnings. You know, there's earnings here on some of these. And tomorrow, this is a trade that I actually just took, and then I closed it because earnings are coming up. But I wanted to show you this because this is one I just took. So on Roblox, we had a huge down move, right? And, you know, gap down, massive gap down. But then that gap, it broke up, and it was then trying to fill that gap now. Okay, so you see we had the gap start right there. It's looking to fill that at 36.55. But I was noticing the pattern develop, and I took this trade last week because we had this gap level right here, right? You notice right where the gap stopped, we had kind of a double bottom type scenario, price here, and a really strong move to the upside. This is a nice momentum move, right? I love to see these big momentum moves. When a momentum moves happens, then we get consolidation, and then we get back into the trade. So I was waiting for this consolidation, got in here, and then now we've got a nice move. So this was from 32 up to 35. Just waited for that price to break. We got the break, and then now price moved up. And I really was going to hang on to this for a little bit longer, but because earnings is crazy and you never know what's going to happen, decided to liquidate your position. I feel like when you're holding your positions through earnings, that there are ways to trade earnings. You have to be strategic about it. You have to know that earnings can be crazy, and you've got to strategically create an earnings strategy. If you're not doing that, a lot of times people like to gamble on earnings because they're hoping that it goes big. Like, I know that last Tesla trade, as a matter of fact, I ended up losing money on that, by the way. The last Tesla trade, I did not close before earnings, and the earnings went down, and there was a big gap to the downside. And that's why I ended up losing that trade, is because I didn't close it before the earnings. And so with earnings, you just never know. There are some ways to try to analyze whether you're going to get a good estimate, but it's still kind of a gamble. And so I don't always like to do it on earnings or not. So so I think that's going to be it for this. I think it's at 7 o'clock. So I want to kind of kick it back to Jeff. Didn't want to go back over my time.
That was great, Casey.
Thanks.
Couple things.
Yes, sir.
One, Lucian did leave at 4, but he saw your thing and he said, "You're welcome."
He stayed late, so that even makes it better. That's fantastic.
Greg says, our marketing guy, just a little bit of feedback for you. He says you seem cool.
Oh, great.
Now, one of the things, actually, you didn't do this, and I think you should. I thought you did a really good job. You should tell us where we can find out more about you.
Okay. So, as far as that goes, I'm still sharing my screen. My website is tradingstrategyguides.com. You can get information. One of the cool things about my website is we've got a lot of, if you go to the blog page on it, there's a ton of free strategies, right? We got stock strategies, Forex strategies, crypto, option, just lots of training. And then that's where my podcast is too. And I interview some really cool people and some great traders. And I just love interviewing people and learning about stocks. That's how I've developed a lot of these. And then also, I just recently published a book, and I was hoping that it would be on my webpage, but apparently it's not. But hey, I just published a book that talks about some of the stuff I just shared here, and it's called Complete Trading System. I Googled myself to make sure I knew where the book was.
Casey, can you hear me?
You can grab that book. It's called Complete Trading System on Amazon. If you're interested in how that system works, it's pretty cool. So that's how you can find out about me.
Awesome. And for the very first time you ran Metastock, you did a good job. You got your
Well, thank you. I felt like I was a little bit, I was a little bit of a novice because I'm not super familiar with your charts. I learned some cool stuff even while I was presenting, like how to do your Zoom. I love that.
Oh, me too.
That's really cool.
They just added that in 1918. It's
good, but I like that.
Casey, thanks for taking us home today. I appreciate it. It was great to have
Hey,
you.
Jeff.
Yeah, we'll have you again. And I also want to talk to you again later about making some scans for you, because everything you showed, I could write a scan for. So
okay, yeah,
let's
you'll
get
have
on
to
the phone
teach me.
after. I'm a little busy this week though.
Me too, man. It's like
all right, cool.
I'm always busy.
Yeah, right. All right. Well, thank you very much, Casey.
Hey, Jeff, someone was yelling at you. Did you hear that?
I did not hear anybody.
Can anyone hear me?
Greg, we can hear you. Yes.
Yes. I just would like Casey. I never got he said the website so fast. I wasn't able to copy it down.
Oh.
And I really don't want people to miss that.
TradingStrategyGuides.com. I put it in the GoToWebinar chat.
Some of us aren't on GoToWebinar, Jeff.
Oh, on the YouTube. Who's on YouTube?
Trading Strategy Guides or Trading Strategy Guide?
Guides. Trading Strategy Guides.
All right.
There.com.
Shared that on YouTube. Thank you. Now,
Thank you.
No one has an excuse not to go see. Excuse me for interrupting, but I just didn't want to miss that.
Thank you.
Awesome. Thanks, Greg. Thank you, Casey.
Thank you. Thank you, everybody. You guys
we'll see you again really soon.
Yep.
All right, let's go ahead and do this. We'll just wrap up real quick here. let me go ahead and do this, make myself the presenter. I hope you enjoyed, Casey. I think you did a great job. Let's go ahead and kind of just look at the schedule. Kind of want to recap today. I thought we had a great day. We started with Rahul Mohindar. Oh, here. So Greg doesn't get mad at me or chime in again. All right. As soon as I did that, though, I did the whole screen of me. So I can't see what I'm talking about.
Jeff. We
got the Rahul Mohindar. We started. We did a permanent discount on his add-on, our most popular subscription-based add-on, $99 a month. We'll get that for you. Wendy Kirkland talked about her automatic swing trade. Gave a nice $100 discount on that. GoNoGo, $500 off if you want to try it out. Steve Primo came in and talked about Silas strategy. That 3S code. Some really, really cool methodologies that we went through. Some very, very cool add-ons. And all of those are discounted as part of the thing. Want to thank John Thomas for his insight, Anka, Rod, Casey Stubbs. So very, very much enjoyed today. I thought it was great. I hope you enjoyed it as well. Tomorrow, I'm not going to go through the whole schedule for tomorrow, but tomorrow we kick off with Price Headley, a top market timer according to Market Digest. And we'll talk a little bit more about that in the morning, but I hope you can make it again tomorrow. Want to say thank you again to Stocks and Commodities Magazine, AAII, and CMT, all for sponsoring the event. I love the quality of the sponsors that we've got, and they do such a good job. And lastly, if you haven't tried Metastock before, you should. It's been rated #1 for 30 years in a row. We're offering a special extended trial where if you pay for a month, you get 3 months. That gets you into next year. Let's face it, as you go into the holidays, you're going to have some downtime. You're going to be able to kind of play with some software, test ideas, get a good feel for how things work. Metastock.com/conf promo, Metastock.com/sales chat, 800-882-3040. So till tomorrow, have a good day. Have a good evening. I'll see you in the morning. I'll be right back here. And I will see you there. Thanks for coming, everybody. See you tomorrow.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us, and keep on trading.